New York, New York, the city that never sleeps, and the gateway to the land of opportunity. A true melting pot where dreams become reality and great ideas come to life. With the U.S. online sports betting and iGaming sectors predicted to generate $10 billion in 2023, there is so much potential to fulfill. The competition is fierce, and nobody said it would be easy. But together, we can make our sector fly. So get ready to learn, connect, and inspire at iGaming Next, New York City.
Welcome to iGaming Next, New York City. My name is Ashley Rodriguez. I'm a media editor at Insider, and I'll be one of your MCs for the day.
And I'm Rob Heller from Spectrum Gaming Capital, and I'll be your co-host.
We're really excited to be here. This is actually the first year that iGaming Next has come to New York, and it's sold out, which is incredible, and I think really speaks to the stacked schedule and caliber of attendees that our organizers have in store for the next 2 days. This conference is really designed to bring together the iGaming and investment communities. We kicked things off yesterday. Hopefully you had a chance to enjoy the networking events at Yankee Stadium and at the Hyatt. And if you weren't out too late last night, maybe you got a chance to take the run this morning around Central Park with Bragg Gaming.
We have a jam-packed schedule for the next 2 days. There's over 100 speakers. And just talking about today's topics, we're going to be starting off with talking about M&A and what's going on in that space. Given where the stock market is, it could be an interesting forerunner to where we're going to be seeing in 23 and going forward. We're going to have a panel on early stage startups and what works for those of you who are interested in either investing in that space or looking for money. SPACs, which was a huge element of business for the last couple of years, and capital raising. We'll talk about how they've been doing and what that tells us about the future. Media's involvement in the gaming sector, which blew up in the last couple of years, or really came to a fore in the last couple of years through sports betting, will be another topic. Tech innovation, of course, and how that's going to shape the future. Is it going to be about just investing more and more in customer acquisition, or is tech going to make the difference? We've got the potential impact of big state legislation coming forward. New York, as we saw, is now the largest state, and the numbers are just off the charts. And then we have proprietary technologies. Always a debate in the space. Do we buy our own, or do we use somebody else's and let them continue to develop it out? Of course, tribal gaming. We would be remiss not to have a panel on tribal gaming, considering that tribes represent, or tribal gaming represents, 50% of the U.S. gaming market. And then lastly, we're going to be talking about sports betting from the team's perspective and how it influences things over there. We're not going to be introducing, each panelist, each moderator will not be introducing their panel. We want to keep this focused, get as much data and information out to you as possible. So if you want to know the backgrounds of the speakers, use your conference materials.
Yes, but we do want to make sure you're aware of some of today's headliners as well. We have Robin Reed, the former CEO of Gaming Innovation Group, who will tell us all about his new accelerator, Happy Hour IO. We'll also have our keynote talk today from Todd Haushalter, who is the Chief Product Officer of Evolution Gaming. Evolution Gaming, with around a $20 billion market cap, is one of the most highly valued gaming tech companies in the world right now, so you'll definitely want to stick around for that one. And we also have Simon Lidzin, who is the CEO and co-founder of Fast Track, and he'll talk all about how to digitize the iGaming industry. You also won't want to miss tonight's networking event, which will be over at the LC Rooftop, just a few blocks from here near Bryant Park. And of course, there's going to be lots on this main stage for investment-minded folks, but there is also a separate track specifically for folks who are interested in the investment side of things. It's called Invest Next, and it's going to be over in Hub 1 with a spillover room in Hub 2 as well. And we want to make this event as interactive as possible for you all. So we're going to be taking questions through a platform called Slido. If you're not familiar with Slido, you'll see a QR code appear on these screens right here throughout the day. You can go ahead and just take a picture of that with your smartphone, and you can use that to submit questions to your moderators, who will do their best to address those throughout the day.
What I think makes this conference so unique in the gaming world is that it's happening here in New York City. We've not really had too many gaming conferences here, and we were thrilled to become part of this inaugural conference in New York City. New York City, or New York State, recently passed sports betting, and they just started in January of this year. And it's been, if you haven't been living under a rock, you've seen lots of advertisements offering you a month's free rent on your studio apartment in Manhattan just to sign up to somebody's sports betting app. There are 9, I think there are 9 active sports betting sites in New York now. There was $3.5 billion of handle in the first 3 months, representing 10% of the nation, and the nation has 26 operating states for sports betting. So it just shows you the potential of a big state, especially a big affluent state like this. And I think the biggest news in New York is yet to come, because 3 downstate licenses are coming. While we've had electronic casinos, powerful, huge casinos, in Yonkers with MGM, and in Queens with Genting, we are likely to see real casinos where you're going to have table games and all the Las Vegas-style elements coming. And who knows, maybe next year or in a few years when we come back to Times Square, if we do it, with iGaming next, there'll be a casino to go to at the end of the day. And with that, I think live from New York, it's iGaming next. Our first panel will be led by Contessa Brewer from CNBC, and this is a panel about M&A.
Hello, everybody. Thank you, Rob. Why don't you have a seat up here and join this panel? That was all pre-planned. He was supposed to be on this panel. It's okay, you can laugh, it was a joke. I feel bad for you guys way over on the end. I just want to say there's lots of room in the middle. So if you don't like where you're sitting, feel free to move. And I'm so excited to be part of this today because this is like core CNBC fodder right here. Who's going to be acquired? Who's merging? Where's the takeover coming? I wanted to just point out, I'm looking here, in the last 4 years since PASPA was overturned, Sports Handle was acquired by US Bets, which was acquired by Roto Grinders, which was acquired by Better Collective, which then acquired Action Network. That's just one little stream. And I'm getting inundated all the time with people who say, hey, we have news here, we're about to acquire or be acquired or merge. It's hard to keep up. So let's talk about where we are now. Markets have plummeted. Chad, you wrote to me and pointed out, and don't I know it, you've got the whole sector off by 30% year to date. DraftKings, GAN off by more than 60%.
Yep.
And then even Caesars, which had record-breaking quarters in Las Vegas, down almost 40%, 50%. Where are we now with the markets and how that has an effect on M&A activity?
Sure. Thanks, Contessa.
Oh, wait. Chad Bainan.
Yep.
Who is with Macquarie, one of the equities analysts.
Appreciate it. Yeah, certainly the market is having a hard time valuing unprofitable companies. From what we hear from all the operators, whether it's Caesars, DraftKings, all the B2C companies, they're all saying that the playbook's working. And from a gross contribution standpoint, they're on pace to have profits within a state or on those players within 2 years. And from the beginning, that's kind of what they had been telling us. The problem is when you see these massive losses, to your point, Caesars lost over $550 million in the first quarter. It's hard for investors to believe that we're going to get to that contribution profit inflection point. And then more importantly, what's the long-term margin? And that kind of feeds into the discussion we're talking about today. if you are vertically integrated, you have the potential to have longer or higher EBITDA margins. So yeah, clearly the B2C operators have sold off with the losses. We've been surprised to see that the B2B operators who are actually generating a profit have sold off almost to the same degree. You talked about GAN, Neo Games, they reported earnings this morning. They have 20+% margins and they're selling off to the same pace as the B2C companies.
Do you think that there is a dampening effect on the M&A activity in this space because of where valuations are?
I think for the companies that we look at, there's two reasons to consider acquisitions. One is to improve the acquisition funnel, right? To get a core demographic or some users that you're not able to acquire through the media outlets. The second reason would be from a tech standpoint, and that's more the retention side. So that's the content, the consumer service, being able to differentiate. So, DraftKings acquired Golden Nugget for the acquisition funnel piece of that. They acquired SB Tech for the tech side of that. And I think a lot of other companies are thinking about it in both ways, and there's going to be some opportunities here.
My sense is that the other reason that you might see mergers and acquisitions is because of the access to markets and to licenses. So this week, MGM Resorts made news with their acquisition of Leo Vegas for $600 million plus. Rob, talk a little bit. Rob Heller is the head of Spectrum Gaming Capital. Talk a little bit, if you will, about what does MGM get out of an acquisition like this when we know what they were really after was Entain, the big one, their partner in BetMGM.
I think we're seeing the beginning of cross-border consolidation and more consolidation between the online and land-based businesses. Leo Vegas is a very well-run company. It came to the iGaming business fairly late. They proved themselves with better technologies and maybe a better operating model. And as a result, they were a very good candidate. MGM, of course, wanted to buy Entain. They weren't successful in doing that, or maybe the pricing was just not in the right place for MGM to do it. And it's an interesting play because now they're partners with them at BetMGM, and now they're a competitor in certain markets with Entain, with having Leo Vegas. I think that the Leo Vegas deal was brilliant and is just a harbinger of things to come in that space.
They said that they're going to continue to use the technology from Entain for BetMGM. So Leo Vegas doesn't bring that to the table, but they will get access to licenses and markets in Europe, right, with that. Do you think it's possible that does it put Entain on notice? Is there any chance, and I did ask the CEO of Entain this question, is there any chance that you see Jette Nygaard-Andersen turn around and make an offer for MGM?
I think that's been rumored for a long, long time. I mean, they're both large-scale companies. I don't know exactly where the numbers have changed so much, so I think Entain has fallen a lot more than MGM has as a result of this recent decline with the focus on digital. I think that you're going to see more of these types of transactions. I don't know if it's going to spur something that large, but I think, yeah, MGM was sending a signal that, hey, we could do this without you, or we can do parts of it without you. That's a common hardball tactics in corporate diplomacy, if you will.
Edward King is with Oculus Investments. I just wanted to mention, for people who don't know, Oculus was a SPAC that you acquired Play Studios and helped Play Studios go public. So you've kind of got your hands in a lot of different pots here in the way that you are investing and helping companies move forward. When you look at mergers and acquisitions, you guys have been really thoughtful in the way that you're trying to hit areas that are underserved or maybe that have not been tapped but show real potential. Can you talk to me a little bit about Hefe Sports and some of the other areas that you're focused on?
Yeah, 100%. As you look at a lot of the operators, they're of course going and targeting the immediate market, those players that want to bet, have a proliferation for betting, and are going to sign up as soon as the market opens. When we looked at it, there are enormous demographics out there that we would consider to be underserved, to use your words. What does that mean? To pick on 2 companies, so the Latino community within the US is approximately 60 plus million people, and not to suggest in any form that they have a homogeneous attitude. They certainly have, there are cultural aspects with regard to what they enjoy doing, the sports that they target, how they like to be contacted, how they like to interact. And so Hefferbet is directly targeting them through language, the Spanish language, Portuguese languages, through what the sports that they would like to see, the information that they would like to have. That's not being targeted directly. So we really like that. Women are 50% of the population. Women's sport is an enormous contributor to how people spend their time. Yet if you look at traditional mainstream media, very little focus is placed upon it. And again, not to lump everybody together, but to think through that minus 110, plus 110, with an enormity of stats on a website in a UI environment that's completely confusing will attract that individual. In our minds, that's a wrong approach. If you could specifically target what people want, you're going to draw ever more people into this activity as an entertainment product, and it's going to broaden the penetration and significantly increase the market size.
So you're talking about human demographics. What about geographically being diverse? Are you also looking for opportunities for businesses that would, I don't know, Brazil seems like an opportunity that is ripe for new investment and for mergers and acquisitions?
There's 200 million people in Brazil who look at esports in the same way that the American psychology looks at sports. So, and it's also not confined to the Brazilian population. Esports is a good example. You can play from Brazil, somebody in Thailand or Japan or the US. So we think of that as an enormous market in its infancy. It's a niche product right now in terms of people's awareness of it. But if we fast forward 2, 3, 4 years, we think esports is going to be as important as what sports is today, and it's going to be global.
And are you trying to diversify also by technology, media, services? Where are you thinking about where your money works best?
And honestly, across them all. What do we really care about? We care about differentiation. What is it that's going to sustain an early stage company, which is the VC investing we're doing right now, and cause that to become tomorrow's industry leader? But that can cut across B2B, B2C, just about every element of it. We're not in any way confined from an investment standpoint.
Wayne Kimmel is the head of 76 Capital. I want to talk to you a little bit about the investments that you do too, but interestingly, when you spot a company that you think is worth investing in, what you're seeing is acquisitions taking place shortly thereafter.
Well, we're seeing everything. I mean, quite frankly, that's one of the amazing reasons why I'm so excited to be here. And what we always talk about is investing in the next great entrepreneur who wants to build something that would be incredible, whether that's in the sports betting world, the esports world, and the sports tech industry. And I just love that this is iGaming next, so it's perfect. It adds, I feel like we can, this is exactly what it's all about. And going back to something we were talking about earlier, I think also, Contessa, is that, this is great that we're here in New York. We need to do more of this and educate more of Wall Street as to what really is going on. We need to take people around the world to see all the things that are happening across the industry today, because amazing things are happening, but it's very early. But how many of us have been to the only sports book inside of a sports bar in a suburban mall in Philadelphia? There's one in the country today. And who would have ever thought that that would happen in the US? It's happening. How many of us have really been out and spent time at Circa, the gigantic place there, and to see what's going on and see how that because that's what's going to happen here, right? As I shared with you as we were walking up here, David Purdom from ESPN made fun of me back in 2017 when he's like, I said to him, there's going to be a sports book and a sports bar in Times Square where you're going to see the lines right next to APL and MSFT and all that stuff. You're going to see the lines streaming across the ticker symbols here. And he's like, you sure you want me to print that? I'm like, yeah. And where are we today, right? And that's what we're all about at 76 Capital, investing in those types of companies, those entrepreneurs who are truly pushing things in this industry.
By the way, who loves hearing that? Hard Rock, which is opening their new hotel in Times Square tonight, and definitely going for a New York gaming license. They're like, well, we're already here. Let's do it in Times Square. So your prediction probably would find a very welcomed audience with the Seminole Tribe.
Well, Google it. It's out there. It's crazy, but it's really it's amazing, and it's one of the things that we think about all the time because that's what's happening, right? So the idea of as we talked about creating the CNBC of sports betting. Again, people were like, Brent Musburger's old. What is he? This is no way this could ever really happen. But we did that, right? We created VSiN. We sold that to DraftKings. Like that was amazing to be able to create these new types of businesses in the world of gaming, and then. As we were talking about here on this panel, doing and selling the businesses and really getting some great value for those types of companies.
You're looking at very early stage technology and ideas. Do you think in this environment, with all of the consolidation that we're seeing, do you think it's still possible for an innovator, an entrepreneur, to remain independent and still grow and compete in this dog-eat-dog environment?
Look, it's moving so fast. I think these deals are going to get done. There's going to be a lot of work for the bankers, because the big companies, they need this innovation. They need to innovate with augmented reality, with NFTs, with the metaverse and Web3. Like all that stuff is coming and is part of the overall gaming industry and just sports industry in general. I mean, there's this incredible convergence between the tech world, the physical world, and it's just all coming together today. And we haven't really seen some of the big tech players really rear their heads into this industry, but it's coming and it's happening every day. I mean, wait till we see what NFL football looks like with Amazon on Thursdays. Now, keep your eye on what's happening with Apple and the baseball. What they're doing with baseball, but how they're doing it, how they're broadcasting these games in different ways, and adding in all of the lines and the betting and the games and the way for you to interact and really, have an immersive experience. This stuff is unbelievable.
It's interesting because we're talking a lot about the acquisitions and the mergers that are made inside gaming. But given the interest from Disney, Sony, Google, Meta, Chad, do you think it's possible that one of these outside players, I mean, Amazon is known for going in and disrupting an industry, whether it's insurance or cloud or, book selling at the beginning. Do you think it's possible that an organization like Amazon could end up owning a global gaming giant?
I think it could make sense for some of the other companies that aren't in the market right now. The difficulty is obviously becoming licensed in the gaming industry. I mean, that is still one major barrier for a lot of people. I mean, we were just listening to the Nevada Control Board meeting this week, hearing some of the companies that are trying to acquire other businesses and they're not in Nevada, and it is not a fun process for them. So that could be a barrier for some. We've heard from Fanatics. I think Michael Rubin has been on your show a number of times, and I think his statement was, we will be a top 3 player long term. And they've been very patient. They're kind of building their users. They're investing in a few different things. So I do think there's companies like Fanatics, like Bet365, who have the goal, the stated goal of becoming a top player, and they just have viewed this, what we view as a golden cohort period, maybe not so golden. They view it as, we're going to let everyone else lose money here, and then we're going to come in maybe next football season or the following one, and we won't have to lose $1 billion. And so I do think there will be some more players to come into the market. Obviously, as I mentioned, you have to have the tech, you have to have a differentiated product. And the other thing is, iGaming is the long-term profit center for all of these companies. You look at the revenues that we're seeing right now from Rush Street Interactive, from BetMGM, 60 to 75% of their revenues are coming from iGaming. So the fact that iGaming has taken a little bit longer legislatively, and there's only 7 states in the US here, and there probably won't be any this year, maybe 1, I think that's giving some of those other companies confidence that they can be patient, because ultimately it's the cross-selling from sports betting to iGaming. What we're seeing right now is the average iGaming user is spending about $300 per month. Those are numbers that have come from Rush Street Interactive and Golden Nugget, some of the leaders. Sports betting is about $100 per month. So I think that makes the long-term acquisition and market share discussion broad.
But if you think if you're an investor who thinks, okay, we are going to see legislatures across the nation adopt iGaming and beyond. Again, I'm focused on the US mostly, but I know that there are big opportunities in other regions of the world. Does it make sense, Edward, to go in and buy a company early and get the customers in? Play Studios has customers that are playing social games, right? They're on the playing blackjack for free or whatever. You get those customers in-house and you hold on to them until iGaming becomes legal, versus waiting it out and seeing if your competitors lose enough money to have to be acquired themselves.
Play Studios is a grand example of that. They have 2 inherent advantages. One, of course, because they operate within the social sphere, they can operate on a pan-US basis. They're not confined by the regulatory restrictions of for-cash iGaming. So the audience that they can reach dwarfs that of the iGamers. And advantage number 1. Advantage number 2, specific to Play Studios, which they targeted from the very beginning, is in your traditional social gaming world or casual gaming world, you pay money and you get entertainment value. That's the proposition. With respect to Play Studios, they take it one stage further. They're partnered with in excess of 200 different consumer brands across the US and, well, indeed across the world. While you are playing for entertainment, you're accruing points. You can then swap those points for real-world experiences, be it a helicopter ride, a cruise line vacation stay, or stay at a hotel. That's really important for everybody within the ecosystem. From the player's perspective, it gives you a tangible reason to want to go onto their site versus another's where you don't have that reward. And then from a brand's perspective, what better way to engage and acquire a new user for inventory that otherwise could have very well stayed empty, be it an empty bed on a cruise line, an empty bed within a hotel. Now you have not only the incremental revenue stream from that particular stay, but they're incorporated into your loyalty reward network, and you have that relationship in order to be able to target them going forward. And that's really, really important long term.
That is also cross-selling in a way, in a very concrete way, but that has become so important with all of these different acquisitions that you're cross-selling from Golden Nugget Online. They get not only the iGaming customer that Tillman Fertitta had worked so hard to acquire, but they also get exposure in all of Fertitta's restaurants and in his properties around the nation. So it seems to me like the cross-selling part of that, does that make a target for acquisition all the more attractive if you know I can cross-sell you into sports betting, iGaming, media, advertising, whatever? What do you think, Rob?
Yeah, clearly, I think you cited a very good example. Fertitta's business has 600 high-end restaurants, 60 across 60 brands. They've got 5 casinos, they've got hotels, they've got amusement parks, and he's a land-based guy. Although he set up the Golden Nugget Online Gaming and it rapidly became the most successful business in Atlantic City, he realized that over time you needed scale. And he's not one to waste money. He's a guy who likes to make a lot of money. And the idea of spending tens or hundreds of millions of dollars to build customer base with the hopes of making money later is just not for this guy. So he made a deal with DraftKings, and I think he's the largest shareholder now of DraftKings by making this transaction. But for DraftKings, they got two things. Number one, they got the golden nugget online gaming business, and that's a very profitable business. The iGaming business is the only, sports betting is just an on-ramp to get iGaming. Actually, interesting statistic, if you look at New Jersey, they were doing $300 to $400 million of iGaming revenues before PASPA. After PASPA, it doubled. And after PASPA matured a bit, the last 12 months, it doubled again. So it proved the point that sports betting is the on-ramp, and that's how you get in the iGaming. So I think what they did, and to your point about this, the all cross-selling, is by being able to tie into the other businesses that are active and are unique. One of the problems with using leftover inventory, if you will, is that lots of companies are doing that. The timeshare companies doing that. The hotel companies doing that. They all offer this. This is something that's more live.
Do you think there's more synergy with iGaming, online sports betting, or lottery? Like, does one bring any more synergy to the table than another?
Look, iGaming and sports betting are frickin' frack. They work well together. It's a natural progression. You're betting on one thing, and you have time between games, and it introduces you to others. Lottery is a different business, and it's a different customer base. But I think ultimately you're going to see the lottery companies tie together with us in the future.
And then you have the media part of this as well. It occurs to me, I'm watching my kids, they're 8, on Netflix, and they can control the way the story goes, and it's not just one-off. Now they're starting to do this programming where, to me, the incorporation into gaming, video gaming, I mean, not gambling, but then graduated, the media part of this becomes intrinsic and interwoven in a way that we have not seen before. What do you think, Wayne?
Look, you're right about that, and I think that this frickin' frack thing may have a new cousin, maybe Mary or something, right? Which is all about social, right? There's a social piece that was never part of this world until now, I think, and we're seeing that where people are discussing their bets. They're talking about their wins, their losses, whether that's on Twitter or on Instagram or TikTok or anything. I mean, it's really interesting to see what's happening now. And what we look at is sort of the next part of what's happening here. So that part, I think, is amazing. And then it's also, how do we then compete and wager against each other and Edward and I, just made an investment together in a gaming platform, allow people to wager against each other to play video games. We're also investors in a company called Lucre, which allows you to also wager, on the peer-to-peer side of just the gaming side. So those are really interesting things that are now happening that are new and new cousins that are coming into this world.
So I want to go back to this whole topic of M&A and just kind of run down the panel and play a little game. Like, if you could, who would you match up? Who would be a great target, and who would be the great acquirer? And Wayne, because you're the tardy student, you get to go first.
Well, I think I think it would be amazing. I mean, we talked about this earlier. I mean, let's just take Amazon. I mean, Amazon acquires DraftKings. That would be really unbelievable. And it makes your head hurt. Sorry, Chad. But I mean, those types of things can happen. I mean, Amazon already has all your information. DraftKings is trying to get everyone's information and get everyone into their world. Why shouldn't they? We may as well just, I won't say it anymore. I'll leave it with that.
I like it. I can see that. What do you think, Chad?
I'd say on the B2C side, I do think Rush Street Interactive could be a good addition for a lot of companies. They are licensed in Connecticut, New Jersey, New York. This cluster that a lot of companies that aren't in the space would certainly like to be in. They're only losing $100 million. They're one of the leaders on the iGaming side. And they do have some tech, so I think that could be one for companies looking to get in. On the B2B platform or content side, the publicly traded companies that we always look at are Bragg, they just acquired a few content providers. They're doing really well. That's an interesting little company. We cover GAN. They're a platform provider. They also have sports betting and iGaming. And then obviously the other one that's been out there is Canby, losing some of their big contracts.
I thought we got to do one. What are
Sorry.
you doing?
No, I'm interested.
You're interested in what you're saying.
I agree with him.
All right, so those are mine. I apologize.
No, I like it.
I get excited when we talk about
You're the
names that
star
I
student.
don't have to listen
you
to
get
their
a gold
conference calls
star
anymore.
already. Rob, what do you think? Who do you think would make a great target?
I think DraftKings is the one at these levels. I don't see there being a lot of upward pressure on that stock for a while. And so I think someone who's making money, who's got the cash flow to tie in together with DraftKings would be an interesting one, without saying who.
No, come on. I mean,
We're
you
not
said
there too much.
someone who's got the cash flow. I can think of a couple big global gaming companies that still have cash on the books to spend and are not already in this business.
Yeah, I think someone who is in Europe and can open them up for Europe too would be that's more of the iGaming. Think of the Leo Vegas deal and just make it a bigger scale of that.
So traditional, Rob. Come
Yes,
on.
I'm a traditionalist.
You're like an old dude. Come on. Let's get with someone come up with something like crazy, right? Like the NBA buys one of these companies, right? I mean, or the NFL,
That's what
right?
we have you for.
Right? That's what's gonna. I mean, honestly, that's what's gonna happen, right? It's going to be something like that. I mean, it only took us 15 minutes to say Michael Rubin's name, but I mean, seriously, that's the opportunity right now. There's this opportunity to really innovate what's happening. I mean, this is, as you said, I mean, sports is this door that's opened up this whole world to North America now, and this opportunity to really do something special is much more than just some company comes in and just in the industry and just does their thing.
I think Chad made the point about licensing. It's a big issue. I mean, we deal with companies. I've been dealing with companies for decades in this space who want to get into the space, and once they get into the licensing element and what impact that's going to have on their business, they say, not worth it.
Once you have to hand over your baby's passport to the regulators, it's
Yeah, I mean,
troubling.
you got to
But that's why
provide
we
your
invest in
personal
companies
check
to
for the
fix this
last
stuff.
10 years.
But we're investing in the
Amazon's not
companies to
doing
do
that.
this, right? The odds-on compliance, the U.S. Integrities, the One Complies, and all those companies. I mean, there are companies out there that are taking care of all those issues. Those were old-time issues.
Everyone
yes,
is
Old-time issues, but they're not going
and they're
away.
not
not
going
going
away.
away.
They're not going away, but you can make that whole world.
When they come to a national licensing standard, when they do that,
Contessa,
one of your companies do that, then your idea will make more sense.
Well, and that's a question that I've brought up a lot about why isn't Congress tackling this? Because, what I've heard is that the licensed operators don't want that to happen because they've already spent a ton of money in the States to have competitive advantage. Edward, who would you pick?
I think the vision that you're showing is going to happen, but it's not going to happen for several years. In the interim, what do you need to solve? You need to solve the hemorrhaging of cash flows. So what I would do if it were me, I would put Playtika, makes $1 billion of EBITDA, together with DraftKings, the two leaders within the space. From a DraftKings perspective, I can now market on a pan-US basis outside of the regulatory paradigm, take their cash flow. That then offsets the $1 billion of losses that I'm making. I've doubled the size of my business, and I'm in a much better position then, I shouldn't say better position, in an alternative position to be able to meaningfully grow. Now take a look at that business, and now we can talk about, I think it was the Amazons of the world, or the Googles of the world, or the sports teams of the world in terms of who they've got access to. I think that's a phenomenal transaction.
Just like CNBC, it always comes back to DraftKings. Okay, gentlemen, thank you very much for the panel. I'm off right at 0:00.
Wonderful, energizing start to the morning. Thanks to our panelists. Our next session is going to be on the early stage investment space. I'd like to invite Daniel Kustelski from Chalkline up to the stage.
Ring, ring, ring.
We're going to get there. Oh, I'm on. You're not.
Testing.
Oh,
Yeah,
is it working?
I think mine's working too.
I guess I'm moderating.
Testing.
Yeah, I think we're working.
Who is that, Justin? Oh, there we go. Does that work? Okay,
Yes.
great. Well, welcome everybody. My name's Daniel Kostelski. I'm the CEO and co-founder of Chalkline Sports. Probably not going to be able to come close to that opening act, but we're gonna give it a bash. We're gonna be talking about early stage investments, and we've got a couple of different perspectives. We've got Kelly and Justin who are starting businesses and solving pain points inside of the gaming industry, and then we've got Scott and Davis who are investors. So we're looking at really the same issue. We're just looking at it from a couple of different perspectives. I'm going to hand it over to the panel and let them introduce themselves real quickly, and then we'll get into the discussion. Scott, you can go ahead.
Sure. Morning, everybody. I'm Scott Secord, partner with Cardinal Sports Capital. We are early stage to mid-stage investors in the sports gaming and technology space. Started a fund about a year ago, and we just recently made an announcement about an incremental growth in our fund in partnership with an investment bank called Canaccord Genuity to invest in early stage and mid-stage growth companies within the sports and gaming space.
How much?
Up to $100 million. We deployed about $25 million to this point, and we will deploy probably another $75 million.
I know there's a lot of entrepreneurs out there, so you can ask Scott for some cash here in just a little bit. Kelly.
Yeah. Good morning. My name is Kelly Brooks. I'm the CEO and co-founder of Quarter 4. We kicked off in 2019, right before COVID, so that was fun. We have raised money during some of the most stressful times in the last few years, and have managed to do it with some great partners. Disclosure, Cardinal has been a part of that journey for us. But we are a deep learning neural network, very progressive tech company, and we generate about 3 million play-by-play predictions a day. So we are currently raising, and it's very timely with this panel, some of the interesting shifts we're seeing in the industry right now.
Nice. Davis.
Davis Catlin from Las Vegas Sands. Been an investor in consumer, broadly speaking, for about 15 years now. Joined Las Vegas Sands last year. We like to joke that our mandate is to invest in $1 million to $1 billion checks. But I'd say our focus right now is primarily on kind of pure venture stage businesses and being very long-term partners. My background was in a fund vehicle, and I think what's interesting is working inside of a corporation that's controlled. We have a permanent capital view. We don't have a time horizon. We don't have LPs. It's all about building something really interesting and special by backing the right team and partners. And so that's really our focus. And but Las Vegas Sands, I guess I should say, is a large casino operator for those of you who don't know.
Nice. Justin.
Yeah, cool. Hey, I'm Justin. I'm the founder and CEO of Betty. We are innovating in the online casino space for the regulated North American market. We closed about a $2 million pre-seed round, which I led personally, along with like a bunch of venture funds. I previously started a company called the QO Gaming Group, which was a sports analytics company / affiliate platform. And that business, we started in 2015, so we started in like the daily fantasy space, and then April 2018, sports betting started, and then we kind of rode that one to an ultimate exit in November of 2020 to a publicly traded media company here in the US.
Excellent. Thank you, Justin. Let's start with the entrepreneurs. Can you just share a little bit, and we'll start with you, Kelly, just share a little bit about the pain points that your company is solving, and how you define success. As a startup, we're looking for revenue and we're looking for possibly to be profitable, but there are other indicators out there. I'm a B2B SaaS. I was looking for 10 unaffiliated customers, to find product market fit. How do you define the success for quarter four? And Justin, I'm coming to you around QL after this.
Yeah, so our pain point is basically to reduce customer acquisition costs through progressive content, building loyalty amongst new and existing betting groups. We have varied pieces of data, millions and millions of data points, a feature set that can connect to any content system. And, our goal is to help reduce that customer acquisition cost and to make retention more of a reality for the players in this space. For us, success right now, the phase of our company, we are very revenue focused, and we won't stop. We're building this to scale it. And you can't do that without revenue. Some people might disagree, but it's true, you can't. So right now we are onboarding as many contracts as possible to really determine the product market fit and where our sweet spot is and when we're gonna be the most profitable. So success right now is continuously landing that, hitting our revenue targets for the year, and also partnering with strategic groups that understand progressive technology and are willing to productize with us and take advantage of what we have.
And Justin, was your business B2B or B2C?
Yeah, so what I'm building now is a B2C product in the online casino space. We're trying to keep it a little, not open up the kimono too much, but we think that women are actually probably the most important segment within the online casino space and also quite underserved. So we're trying to fix a lot of problems. Yeah, there you go.
Nice. And are there any indicators? Maybe let's talk about your previous business as well. What were some of the success factors there as well?
Yeah, so previously we built this product called BetQL, which was like a Bloomberg for sports betting. And the insight we had in 2018 was there's like this relationship between the customer and the operator. It's almost like it's really a symbiotic one, right? Where it's the operator really wants a customer that will hang out and play for a long period of time. That's the only way really the ecosystem will scale. So we saw there was like a knowledge gap where sports bettors needed to get better educated so they can make better decisions. And we thought that data was the most elegant solution to actually get them up that learning curve. So that's what BetQL was. It was like, how do you help people figure out what to bet on and why, so that either they are, making more money or losing less, but the KPI was like increasing the entertainment value of every dollar spent ultimately.
Nice. And so Scott, when you were opening up this new fund, what is it that you're looking at? What are some of the pain points that maybe you see in the industry that you guys are willing to put money behind?
I think for us, we look across, a variety of different areas. It's not one part of the sports gaming or technology space that we look at. We look at all different types of companies. I think, for example, with Kelly in quarter four, not the first thing you think about in sports betting is AI, but it's certainly something that we found early on that made a lot of sense. I think for us, it's outside. We like technology as part of the piece. I think from an investment standpoint, get behind that. In my past life, technology was always the big part of our business. So we look at companies that I think, and I hate the word disruptive, but I think companies that have created a technology that can solve many of the problems within the space or provide value to existing, whether it's betting brands or other groups, to help acquire what everybody's trying to do is the lower cost of acquisition. So we look at those types of companies that we think can help in that space. That's key to us, but we look at everything across the board. There's anything.
Thank you. Davis.
Yes.
Anything in particular that you all are looking at other than $1 million to $1 billion?
Yeah, sorry, I just wanted to, I would say that for us, it's a little bit different because we are obviously a large land-based operator. So my role is, often entrepreneurs ask me, are you strategic or are you a financial investor? And I kind of say, yes. It depends on how you need me to act in this situation. I think that flexibility is really interesting. And so for me, there's kind of two things. One is, deploying capital into innovative technologies, the companies that are at the choke points of these industries that we're all interested in. And once you find those, I think those will create both financial value and possibly strategic value over the very long term. We've publicly said that we're interested in the B2B business. So I do have a role where I'm also kind of evaluating operating companies. And so really it's kind of we're very secretive about the end goal, if you will. But I think if you look at the sorts of things that we're publicly disclosing we're investing in, it's kind of the obscure, not B2C. They're not running ads across ESPN constantly. It's kind of the hidden players that are really important to the ecosystem. And I think that's really important for us.
And maybe just to dive in the B2B versus the B2C, side of things, what is it that maybe isn't so sexy about those for you?
I mean, losing money is a starting point. I think for us, the thing that really, I wasn't looking for a job when I found this. I knew the team. And I think this kind of permanency of capital and building something really big and profitable and taking a very long-term view and thinking about returns and capital as alongside splash value. Sure, it'd be great to run TV ads all the time and burn $1 billion, but it's just not interesting as an investor.
Sure.
So I think it really does come down to that. If the B2C business was the most attractive from an economic standpoint, we would do it.
Yep. And so, just looking at the past 12 months, there's certainly been some changes in the gaming space, and I'm going to say the gaming space in general. iGaming and online casino, as discussed previously, doing quite well. Sports betting on its own, maybe not so well. But then the land-based casinos, the American Gaming Association just recently came out with a stat today that said that the Q1 2022 was the best that the commercial casinos had ever done. So there's certainly some peaks and valleys in the current makeup, but there's been a lot of changes over the past 12 months. Justin, maybe just talk about your approach to being an entrepreneur in this new kind of phase that we are seeing. And Kelly, I'm going to come to you next.
Yeah, I mean, I think so what comes to mind was we started our business, or my last business, in 2015 when DFS was in its heyday, and we had raised capital right before Schneiderman shut DFS down in New York. So that was one example of kind of regulation touches the entire surface area of the industry and just kind of can mess things up, right, sometimes. And then you fast forward, COVID happens and then sports shuts down, and we ended up also raising around. In that situation, I actually bought 6 or 7% of the company from people who had common stock. So I bought it all up because everyone's freaking out. And then I packaged it up with some new primary, and then we got a round done, about $1.5 million. This was a month after the NBA was shut down.
It's creative.
So I bring all that up because you just got to be more creative, and also realize that everyone experiences it. So it's almost like who deals with it better kind of gets out ahead.
Yeah.
So, I don't know if that answers the question, but
it does. And Scott and I were talking about it just now. We were talking about the access to capital. What are your thoughts about entrepreneurs out there that have a great idea, might have started that process? What do you think? Access to capital 12 months ago versus now?
Yeah, I think it's out there that capital is a lot tougher to get today than it was 12 months ago. I think valuations have certainly come back to, hopefully, to reality. I think there's a lot of times where you look at companies where we have looked at lots of companies that we think have a great idea, a great concept, management team all checks out, but valuation doesn't. That's one of the biggest challenges now, is coming back to earth with respect to what the valuation of the business is. How are you pegging that valuation?
Yes.
There's still capital. There's lots of capital available. Certainly in the last month, we've seen the markets have put people on the sidelines a little bit right now. And I think that'll change, but a lot of red on your screen right now when you're looking at it. So for us, I think the biggest thing where things have become now versus where they were 12 months ago, valuation, I think, is the biggest thing. There is capital out there, but I think you have to be realistic with respect to valuations.
And Kelly, you're out there raising money. How does an entrepreneur approach valuation? I mean, I've always said it's art and science on my side. How do you look at that, and what are some ways to get as much value as a founder as you can, and yet still be, quote unquote, fair to the investors?
Yeah, so I mean, we did our first raise right after COVID. And it took us 2 months to raise $150,000 on the phone with 4 people, 5 people, 6 people a day. So at that point, valuation, it was low. We just needed the money to survive.
Yes.
And then to Scott's point, 12 months ago, we could, we've always been very transparent and honest with our valuation, though it's something that we do. It's just part of the strategy. Now we're doing the same thing. We do have an internal formula that we use. Daniela, my co-founder, is here, and it's based on 3 things. It's based on the tech, it's based on the team, and it's based on the traction. We have a platform that's built and it's proven. So a certain amount of that valuation goes towards that. It's an honest product and technology that has been fully built out that can be plugged into something. That stands alone.
Yes.
We have revenue generation now. We are establishing product market fit. And we have a really great tech team. Tech teams are very hard to find right now.
Yes.
Data scientists are hard to find right now. So we also associate a value to that. So that's ultimately how we come up with a valuation. And it tends to be not inflated. It tends to be quite true.
Nice. Mm-hmm. Davis, how would you look at valuations? You've probably seen hundreds come across your desk. Just provide maybe some insights from the investor perspective. That was a really good answer, Kelly, by the way. Savvy.
Yeah. I think the answer for valuations is it really does depend on the team, and the way I think about it is very is a rational person, I would say. If you're selling me a dream in 3 minutes and I'm kind of sitting there going, okay, I have no idea what this person is saying, but they say they want $20 million. I'm just like, gosh, how could I possibly get up to speed on this issue, which I feel like, I'm not an expert in everything, but I have pretty good context for things in this industry at this point. And then how do I go explain it to someone internally, right? And so if the person can sit down across me and say, hey, this is what I do, this is how I'm going to generate money, this is how we're going to compete with people, and this is the amount of money I need to go accomplish that. And I always say, what do you want for valuation? And my view is you shouldn't negotiate heavily. I think that's just a poisonous way to start a relationship. I think if the person says, I want $100 million, and in my head I'm thinking this is kind of a $20 million business based on what I can see, I just say, hey, thanks, really appreciate it. I'm not going to hardball you, but if the person says, I want 24, and I go, well, it's kind of 20, so sure. It's funny, I find often entrepreneurs think that by asking for a lot of money and a higher valuation, they think they're establishing themselves as having gravitas in the conversation or something. I don't know what it is, but the truth is you end up looking irrational and have a misunderstanding. And for anyone that has done this long enough, if you raise it too high of a valuation and your business, stuff happens, to say it politely, if your business struggles before that next round comes together and you have to do a down round, the investor preferences keep me fine. It comes out of the management side. So I think really thinking through the cadence of partnerships, the amount of capital you need to get to that next point, give yourself a cushion. We're going to have all of those things go together where it's like, even if I said we're going to give you extra money today at a higher valuation, it's like that could end up being to the detriment of the entrepreneurial team or the entrepreneurs in 2 years from then. And I think that is not where we want to be. We want to build very strong partnerships and have rational, reasonable conversations with other people around the table.
That's a good point. Justin.
What Davis just said, because that was a really good point. Anytime you set a price, there's actually an implicit trade-off between 2 things. One is the amount of dilution you take on your business, which is pretty straightforward. But the second is optionality. And optionality defined as your ability to raise additional capital at higher prices or your ability to exit. And so every time you set the price, there's a trade-off between these 2 things. So it's really important to be mindful of it. And sometimes in the short run as a founder, it kind of maps to 2 parts of your brain. There's one part that's almost a little insecure, and it's kind of a vanity, what you're priced at before an exit. And you're like, oh, this is sort of a leading indicator, or I'm ascribing some value to myself in the short run because it kind of maybe makes you feel better. But at the same time, the other part of your brain is thinking longer term, I really want dollars in my pocket, right? I want to be able to buy stuff, right? At the end of this, not just have this piece of paper that says, oh, you're worth something. So I think that's a really, really important trade-off.
Nice. And so let's just talk a little bit about that relationship between, well, it might just be advisors or investors and the company. Davis, you were just talking about cutting a check, and Scott, you as well. Scott, what else do you all see as important to provide those entrepreneurs other than just dollars?
I think access is a big thing in the space. I've been involved in the shoes where Kelly is now, where you're raising capital and you're trying to build your business, and over the years you can generate those relationships. I think the big thing that we try and help the companies that we not only invest in but advise with is access to people, to decision makers, to allow groups like Quarter 4 or other companies that we work with to speak to the right people, to advance their product, to get into the places that they want to do. So we do a lot of that. I spent 15 years sitting in similar shoes where Kelly has of trying to grow and build your business. You get to a point where there's some people that can help you to do that. We try and do that with all of the portfolio companies that we invest in, for sure. And just to Davis's point, I want to reiterate that when we look at companies that we're going to invest in, the early stage number of what you peg your valuation at is huge, because when you need to raise money, and I think myself included, you raise X dollars and you think I'm good for 2 years or I'm good for a year. It never works out that way.
No, it doesn't.
Either you end up finding something that you want to acquire and add on, or not everything goes exactly the way you think. And when you have to make that second or third raise after the fact, what we look at is not only, okay, you're valuing your company at X right now. If you need money in a year from now or 2 years from now, what's the valuation going to be at that point in time to make sense for us to reinvest?
Yes.
And I think that's a big part of the decision process.
And so what is the role that you see, and Kelly, maybe just step outside of Quarter 4 just real quick, but what's the role you see that startups play in the gaming industry? We've certainly seen quite a few. Maybe Justin and I were just saying there was a lot there was very many in 2018 and 2019. There's a lot more coming out now. But what roles do they play in the gaming space now?
There's a visionary component to startups. Perhaps we come from a tech-first background. We weren't originally from this space. We're female founders, so we're coming in with a very different viewpoint on how data works and how perhaps customer acquisition could work. There's an emotional intelligence capacity to female founders sometimes that people exclude. So as a female-founded tech startup, that's what we bring. We bring a certain vision that perhaps hasn't been touched into before. And I think predominantly that's it. And there are companies out there that are very thirsty for this type of innovation and viewpoint that they haven't seen before. We've been welcomed with open arms into this industry. We've had people say, "What took you so long? We love what you're doing." So from experience, that's what we've experienced. That's what we felt. Yeah.
And Justin, where do you see in some of the startups, what pain points do you see them solving?
I don't know. I don't really have a lot, I guess, to say on that. I have to think about it maybe a little bit more.
Davis?
Raise your hand in this room if you think the B2C operators have amazing in-house tech stacks from A to Z. I didn't see a single hand.
I saw
go.
one. I saw one.
All right. Good to see you.
All right.
I'd love to hear
in
where you
fairness,
were.
though, Davis, if you would have asked that 12 months ago, you probably would have had people raise their hand. I just venture to say that is now being exposed completely right now.
So I would say that you might have had people say that, but I think that was for a lack of understanding.
Yeah, of course.
Not to be critical.
No.
But I think that is what this industry can solve, right? Whether or not, I'm seeing Wayne, and we're investors in U.S. integrity. It almost has to be external, right? You cannot have a B2C sportsbook having an integrity business in-house because it just inherently doesn't work, right? You've got to have an outside third party. So there are just parts of this industry that will never go in-house. Some will, and it'll be great if Kelly and her business is acquired by someone tomorrow. That'd be amazing. But tell you what, in 5 years, once Kelly's amazing AI goes inside of a big behemoth, there's probably going to be room for disruption at that point again, right? And so that's just how the culture of these industries work. So I think the people in this room and the people outside, I think that's really what they're providing, is that it's almost like an external innovation lab.
Yes. That nimbleness to the industry. Yeah, that's a good point. Scott?
Yeah, I think to add on to that, I think we know that the B2C play right now, that there's a certain tech roadmap that they have, and not a lot of times innovation is necessarily at the forefront. It's fixing what they have now, and I've seen that from my time owning an in-stadium betting company in the UK and working with all the betting brands over there. The tech stacks are certainly not open to say we're going to build this ourselves. So I think, to Davis's point, if you can provide that type of a solution that they know they need, but they don't have the roadmap in order to accomplish that, I think that's where, and then we look at companies that way as well too. Is there a fit with one of the bigger guys after the fact? Can this slot into a B2C play? Which I think, to Davis's point, I think that's a big part of the
How
of the
long is
process.
that operator's tech roadmap where you can slot in?
Yeah, a good friend of mine who's he is the chief technology officer for a land-based casino, and they're also looking at a mobile play as well to that. They can't do it on their own. They are basically looking for somebody to come in and solve a lot of their problems. So
Yes.
I think that's going to last for. And another point was, you can solve the point today with outside companies, but that's going to change in a year from now or 2 years from now. There's going to be new things that come along that you're going to have to solve as well too. So I think it's going to be. I don't think there's a time frame when they catch up. I think the ones that are going to acquire components or businesses to their tech play to solve it are going to continue to do that going forward.
If we could just highlight one point here, it is interesting, those tech roadmaps, there's actually an issue where you might sign a commercial agreement because your technology is so innovative, but the problem is, what's the wait time to get an integration today in a big sportsbook?
Yeah.
6 months? I'm hearing sometimes a year.
And as an entrepreneur with a burn, if you're not break even, then you're running into challenges. And so, yes, we just talked about the B2C versus the B2B play. If you're B2B, just understand that integrating that business into the existing operators is not tomorrow. It is at least 6 months to 12 months from now. If anybody has any questions, I think we've got the ability for you to ask questions. I haven't seen any yet, so don't be shy. I'm gonna start with one question. Just share with me maybe the biggest learning that you had, Justin, over starting a business and exiting and starting over. Like what can you share with everybody, that one key learning? Kelly, I'm coming to you next.
Well, I think one that it's not coming from me, it's, I heard it from somebody else that was foundational was when you start these things, it's really important to have like a really clear value framework of like what success looks like, and a lot of your decisions should be kind of based on that. Because if you don't, it can go really wrong really quickly, and make sure everyone around you is comfortable with what success looks like. When I pitched my investors, I was like, look, we're not building like a $1 billion company. We're building like a single or a double, which is what we did, and the people around us were cool with that. I think it gets really weird if you start kind of selling one thing and it's but it's not, and
yeah,
I think that's what I would say.
Yeah, a bit of realism. Kelly?
Honestly, this is my second startup. My first one, I went at it alone. And it's very hard to be a solo entrepreneur, especially when you need to scale rapidly and you need to start having someone focusing on the outside of the business and the inside of the business. I can honestly say that having a co-founder and the proper co-founder in this business, Q4, Daniela, has made a lifetime of difference. We can hand off things to one another. It mitigates risk, and it gives us additional viewpoints as we're running the business. So for me, it is not being afraid to bring in the right co-founder, even if it means, we've got to split up that equity. It doesn't matter because it's going to pay off for us in the long run.
Being selfish in an entrepreneurial space is really tough, and I think a lot of times people don't understand how much value somebody else can add, or co-founders. In fact, I mean, Davis and what do you think about an individual that comes to you and says, I'm going to start this business on my own? I mean, it's tough, isn't it?
I mean, one of the first questions you always ask is, what does this business look like in 5 years?
Yeah.
And what's the hiring required to get there? Right?
Yep.
If you come to ask for money from someone and you don't have a hiring plan or an idea of like what the team looks like in 12 or 24 months from then, you're probably doing it wrong. Because I was having breakfast with an entrepreneur that we've backed, hasn't disclosed yet, but last week and asked him what his day looked like. And it started at, 5 a.m. and it went till midnight every day within, 30 minutes to work out. And I just that's not sustainable. Like, as a human being, I'm worried about you, right? Bring on more, use the money to hire more. And I think that sustainability as a human and having empathy is really important, but it also is good investment. Since we're getting down on time, the only thing I wanted to make sure we discussed in these conversations that entrepreneurs are having with investors is be very thoughtful about the regulatory environment you're operating in.
Why is that, Davis?
And I will say that the number of people that come to me, and I'm always very direct, anyone that's talked to me knows that I will say, I believe your business to be illegal. I'll say it that way, and obviously,
Sorry, say that one more time.
It is illegal. I believe that often companies that are pitching things, and everyone says, well, look at DraftKings and FanDuel and what they accomplish. It's like, how many people have gone to jail for illegal gambling? Like, no one focuses on the hundreds of people that have done that. So I would say be very mindful of investors are willing to back disruption, but also if there's that you're reaching that gray area, stay as close as you can to the regulated part and innovate around the regulations. That is a core part of the great investors in the space is we all have context and understanding, and we will help you do that. But I just think that is something that's often missed is like this idea of disruption. You're not going to disrupt the laws, not in the short term. You might in the long term, but good luck with that. But anyway, I just want to make sure we touched on that.
Get a legal opinion.
Oh, yeah, and have it signed by a partner.
Correct, yes.
At a good firm that we've heard of.
Very important. Right? Very important. Scott, what's the one learning?
I think to add on to Kelly's point, not only obviously having a good group, but I think there's retention issues as well too. It's very difficult to maintain your technology team. It's difficult to hire new people. I think as entrepreneurs, whether it's Kelly's group, for example, be long-term greedy, not short-term greedy. So share some of the equity to retain quality people or to bring quality people in, I think is a big part of it as well too, because you're only 2 or 3 people away from that person walking out the door because of somebody else, and they may not have the vested interest in it, that can really disrupt your business and creates problems. So I think you have to look at it from a retention standpoint as well as a hiring standpoint.
That's a great point. And also just, as entrepreneurs, you're all in. Your staff typically is not. And so the more all in you can have everybody in that company on that vision that Justin was talking about, the more important I think that is. And also just the operators are struggling to hire people. Casinos are struggling to hire people. The entire gaming industry is struggling to hire people. So you're going to probably face, and we at Chalkline are certainly facing that. I'm sure Jay, Kelly, you are as well. Okay, so that wraps up our panel. I appreciate everybody's time. Thank you very much. And on the zero.
Ladies and gentlemen, please find your seats once again. We'll get started with our next session in just a moment. Okay, next up we have a presentation from Happy Hour. I'd like to invite Robin Reed up to the stage.
Good morning, New York. Hey guys, some familiar faces. I'm jet lagging. How are you guys? How many here is from United States? How many are from Europe? Raise your hand if you're from US. Good? Rest it from Europe. About 50-50. Good to see you guys. We flew in yesterday evening, arrived at 11 in the evening, and then went to sleep, woke up 1 a.m., been awake ever since. So if you're tired, you're not the only one. Look, I'd like to start with a story today. 20 years ago, I was living in a flat. I was going to be a journalist, a war correspondent. There was a lot of partying going on in that flat, even too much for my taste. And so I decided to move. I suited up, came in like one of these white shirts, knocked on the door, tried to be representable, was expecting to see a landlord. The door opened, and a 17-year-old guy came, looking at a laptop. And he just ushered me in and said, "Come in." And I came in. On the wall, and this was in 2003, there was a 100-inch flat-screen TV. There was a Miele kitchen. There was a Chesterfield sofa. I was living on ramen noodles. I'd never seen anything like that before. One evening, I was sitting up, looking at what one of these guys were doing. He was playing a game invented here in America. God bless America for poker. That night, the guy I watched won 20,000 pounds. I was amazed, but not as amazed as I was when I saw his cashier. 300,000 pounds he had on his account. I was heading into Easter break at the first year of my bachelor degree. I barely made it out of there. I deposited $30, and I never lost that money. This was my entry into the iGaming industry, so I have a lot to thank the United States for, because 20 years later, I've been fortunate in founding previously a company called Gaming Innovation Group that publicly listed on the stock exchange, did a lot of business here in the US with the Hard Rock Group. Now, today, I'm the CEO of a company called Happy Hour. It's seed fund and early stage accelerator for iGaming. We are building the future of iGaming. And that's what I'm here to talk with you about today, the future of iGaming. Before talking about the future of iGaming, I'd like to go into the past. iGaming has grown with technology, and this beautiful piece that you see on the screen next to me is one of the first sets of technology we found in the iGaming space, or should we say gambling space. 3,000 years before Christ in Mesopotamia, they were carving out these beautiful six-sided dices from stone. People has gambled since the dawn of mankind. In fact, gambling dates back to the Paleolithic era. That's ancient Stone Age. We have gambled in China since the 1000 before Christ. We have gambled in the Japanese market since 1400 after Christ. We have done horse racing in the UK for more than 300 years. We have gambled in the United States for hundreds of years. Gambling is a recession-proof industry. Gambling is a pandemic-proof industry. Gambling is an inherent phenomenon in human culture and history. And we need to understand that gambling has been with us since the dawn of mankind and will be with us forever. What I want to talk to you about today is how the future of gambling will look like. We are here in New York today at a pivotal time, because of a major shift happening in our industry. I'm not talking about the 33 states that has regulated sports betting in the US, the 7, soon 8, 9 states that have regulated iGaming. That's a huge shift, and I'm super excited about it, because that's partially what will take us into the future. We're not talking about digital transformation, which has been one of the strongest drivers of growth for this industry over the last 20 years. I'm talking about a bigger shift that will impact us all fundamentally, not only in gambling, but in every aspect of our lives. To set the scene for that, I would like to show you a video. So Terry, please roll a video.
And then he built it. He gave us a place to go. A place called the Oasis. the Oasis. It's a place where the limits of reality are your own imagination. You can do anything. Go anywhere. Like the Vacation Planet. Surf a 50-foot monster wave in Hawaii. You can ski down the pyramids. You can climb Mount Everest with Batman. Check out this place. It's a casino the size of a planet. You can lose your money there. You can get married. You can get divorced. You can go in there. People come to the Oasis for all the things they can do, but they stay because of all the things they can be.
We are at the early stages of Web3. Steven Spielberg created this movie, Ready Player One, in 2018, depicting a 2027 society where we had a digital presence in a world called Oasis. It's from the book Ready Player One. When we are looking at the future of gambling, we need to picture this oasis. The future of gambling is not only a place we will play, it's a game we will work, it's a place we will work, it's a place where we will create, where people will meet, where they will come together. Why should we send thousands of workers into a warehouse where they will sit and do live dealers when they can put on a headset and do the Uber-style gig economy from home? Creators shouldn't only be larger companies. Creators should be the artists, the musicians, the audio artists, everybody around us that can put something into this world and monetize it. That's the future of gambling. Too grandiose? Too fantastic? Let's make it more tangible. I always show this graph when I do presentations. It shows the worldwide gambling industry, land-based and online combined, and the growth we've had over the last years. Web 1.0 got us into the single digits of percentile share of wallet for online. Then it accelerated with Web 2.0, and it got us into the 20, soon 30% share of wallet. Web 3 is what will get us above 50% in digital transformation. Fueling that transformation is technology. We started this industry, online gambling, in 1998 with the World Cup in France. We had simple Java HTML web pages. We replaced electronic answering machines, and we could start to bet online. Gambling online only accelerated with Web 2.0, starting more or less in 2006. Technologies such as social media, mobile access, global, widespread internet connectivity, high-quality camera and video drove that change. Companies only followed suit as user behaviors were formed. Now, we're imminently standing in front of a new technological revolution, Web 3, where technologies such as semantic web, the web in which every machine can read, where decentralized applications, where users monetize their own data rather than corporations owning all the rights to that data, will happen. As companies, as an industry, we need to capitalize on these technologies because that's what will drive the consumer habits. That's what we need to cater to if we are going to put the consumer first. Will it pay off? If you look at the center column of this slide, you can see that it started in 2006. There was another company in the iGaming industry that launched in 2006 called Evolution. Camera, broadband, user-generated content, it all sounds familiar. This company here has executed brilliantly on it and is today the most valuable online gambling company in the world at nearly a 20 billion market capitalization. It shows us how capitalizing on the future technologies can lead to a successful business strategy, first and foremost by putting the user first. Look at this beautiful product here. It is the best innovation that has happened in the 2020s in the gambling industry. If you think that it is enough to only take a camera and put it on a live table and beam it onto the internet, it's not enough. You need to augment it, you need to enrich it, you need to create social communities, you need to make people come together, and in this product they've captured it all. And it's fantastic. Let's look at how influencers has developed in the same time to understand how our inherent human behavior is reflected. This is Instagram 2014, an influencer named Melanie Sanchez. Look how real and authentic she looked like. There was a period here where it was almost like we tried to do a counter-reaction to the technological development, and everything online had to be as real as possible. Well, 7 years later, it looks like this. It's as augmented as possible. We need eyeballs, we need attention, so we're doing what we can to stand out, and we're using the technology, the magic that we have, to embrace that. And this is Iron Mouse in 2022. Virtual influencers is one of the fastest growing category. This lady here from Canada, nobody knows who she is. She sits behind this beautiful character, and she reckons up thousands of viewers every single day on Twitch. Citibank says that there will be 5 billion people in the metaverse by 2030. 5 billion people. Before you think that's 5 billion people in an Oasis-type world. No. That's only 1 billion people who will put on a virtual reality headset and beam themselves into this environment. The 5 billion people is better understood as all the people that is connected to the internet, because we will all be part of the Web3 movement. 13 trillion market opportunity. What does this mean for iGaming? Well, we're already there. This is Set.Run. Tamagotchi on steroids. Some of you had those when you were young. You can breed your own NFT horse, you can give it abilities, you can use it to compete with other users in an arena. The winner takes down the money. They sold these NFT horses. They sold NFT horses of more than 30 million. That's like 7-8 months ago. Stake.com is the fastest growing gambling operator ever. By hearsay, rumored to now be tracking at 1.5 billion in annualized revenues, all done with electronic currency. Decentraland is perhaps the closest things we come to an Oasis today. All blockchain driven. You can own your own casino table. You can participate in a world where your avatar with your character. Again, according to hearsay, they did 2.5 million euro NGR. That's revenues in December. I hear the founder is here, so maybe he can confirm that. This is what my company, Happy Hour, is doing. We're a seed fund, an early stage accelerator. We're creating the future of iGaming. We're working with brilliant people, with large capital, with companies and people that believe in creating the future using these technologies. And we started only 2 years ago with 2.5 million euro. Since then, we've incubated companies, we've invested into companies, and by last transaction date, we're now up to an asset under management of 114, more or less. We've only focused on what users want, putting the user first, creating future-oriented technologies, and we have achieved that in this time. You want to see a little bit of what we're doing? Let's roll a video.
Humans are wired to connect. It's just the way we're born. We search for like-minded people, a sense of belonging, a community, effortless interactions. The proof is in the data. 7 hours spent each day on the internet. 3.5 hours spent streaming video content. Over 200 million hours spent watching Twitch slots category in 2021. 33% online purchases bought via social shopping channels in Asia. Our ABC has become CRC. Creativity, reliable idols, community. The tech giants are responding. Web3 is coming. The social revolution around us is happening. Our industry needs to step up or risk becoming irrelevant. Are you paying attention? Time to skip the rules. Reset the boundaries. 1 + 1 = 3. Share the fun. Share the thrill. Share the experience.
This here is one of our portfolio companies, LifeSpins. unveiled 6 months ago in this very conference in Valletta, we've since gained tremendous traction. We launched it now only a month ago. Every single day it is growing in user counts. We have all the big American companies inquiring about this product. We have a demand pipeline of dozens of companies who want this product. We can't scale it up fast enough. Do you want to see it? This is how it looks like. Through the lobby, you can find thumbnails to video streams. No longer do you have to download a Flash file or an HTML file and sit alone in your room and play a casino game. With this product here, you can enter a lobby where an influencer or a streamer will play, and we have connected the backend, so whatever the streamer does, you can bet behind and share the outcome. So if the streamer plays a slot machine and wins 1000x, you can set your own stake, you can set the amount of rounds you want to play yourself, and you will win 1000x, but on your stakes, on your terms. You can socialize and chat with other people in the room. You can do things together. If we are going to create this online world, we need to respect that people's lives are converging between online and land-based. People would want to bring in their connections, their relations online. This product is doing it. I'm running out of time here, so I'll cut it short. In Happy Hour, we have 7 portfolio companies, all growing, all doing an incredible job for the iGaming industry. We came here today to talk with you, to tell you that we want to partner and grow our business family. We want to work with the larger companies, both on the investment side, on the capital side, on the operator side. We want to serve you. We want to buy from you. We want to work with all of you. Web3 is just starting. It will be the future for all of us. Happy Hour is leading the way. We'd love to work with entrepreneurs, with companies, with all of you. Thank you for your attention today. It was a pleasure to be here. Thank you.
And we've arrived at our first networking break of the day. We'll resume at around 11:20 in this room, so please go enjoy some coffee, refreshments, and the like out in the main hall.
If we can have the SPAC panelists and moderator come up on the stage now. And if everyone could take their seats. We've got a fabulous panel on SPACs. And SPACs has been of huge interest over the last couple of years. Hundreds of millions, billions of dollars have been raised for blank check companies to go out and find a business deal. Some have been successful, some have been unsuccessful. An awful lot have been formed in the gaming space, and many saw their stocks soar and then decline, some often below the original SPAC pricing. So with that, we'll turn it over to our moderator and to kick us off.
Fantastic, and thank you very much, and welcome back from coffee, those who've come back from coffee. We're joined today with 4 very experienced people in the sector. Christian is currently Chief Executive of a SPAC, pre-deal, and has an awful lot of wisdom to share about what makes a good SPAC. Katie is currently Chief Legal Officer at Lottery.com, and has recently de-SPAC'd, and has, again, a whole lot of experience to share with us. Dr. Leila Mintas is a serial entrepreneur who has been involved in multiple transactions and has a huge amount of wisdom to share with us. And Adam Rosenberg has been in and around the sector since Noah got off the ark, and has done a huge amount of financial investing, and is also director of a SPAC. So with many, many different angles to talk about, I'm going to start off with Adam and just say, Adam, can you just talk about why a SPAC's been successful for iGaming, and what's really happening in the recent years?
Okay. Well, I would choose a different word from successful, because I think there's too much in that word, but they've clearly been prevalent. And so maybe to set the stage, it's helpful to just back up and remind ourselves what a SPAC is, very high level. So it's a publicly traded company that has capital, some people with expertise in an area, and a defined mission. And that's why it satisfies the regulations for going public. And that defined mission or the special purpose is the SP of a SPAC. So starting with that, I'd say there are 3 key reasons why they've become so prevalent and such a popular way of bringing capital to opportunity. One has to do with structure. So there are clearly structural advantages to a SPAC versus a traditional IPO in terms of timing and cost and efficiency to market. But there's also been change to the structure from a regulatory perspective that has made it more attractive for both sponsors and capital, and we're going to talk a lot about all of that. But just to give a little perspective, does anybody know when the first SPAC in the US was done? 1993, when I was finishing law school. So they've been around for a long time, but they've changed a lot. And I spent a lot of my career at Goldman Sachs, and in the early days there, we wouldn't do SPAC transactions because of the perceived or actual regulatory challenges, and that structure has changed dramatically. So I'd say, so that's one reason is structure. 2 is the nature of our industry and how it has changed. So with the PASPA reversal and the proliferation of legalized online gambling and sports betting, that's created a new category of companies at scale that have revenue and prospects for growth, for very fast growth, but aren't yet profitable, a lot of them. And that's a formula for attracting capital in a hot equity capital market environment, which we've had over the last few years, past few months to the contrary notwithstanding. So that has been another reason why SPACs have become very prominent. And the nature of some of those businesses are such that the licensing requirement, which had kept institutional capital out of gambling for much of history, the licensing standards are not as severe for some of these technology-oriented businesses that are at the adjacency of the core operations of gambling. So that's 2, is how the industry has changed. And then finally, institutional acceptance. So I left Goldman Sachs to join a place called Fortress Investment Group, where I spent the last 7 years, 7 years until a year ago. And Fortress has 4 SPACs. And that I think is symptomatic of how institutions have embraced a product that used to be something where an individual or a sponsor group decided they wanted to go chase opportunity and raise some public capital to do it. And now asset management firms, private equity firms, hedge funds, investment banks have gotten intensely involved in the product as a part of their toolkit to bring capital to opportunities. So those are the reasons that I think have all kind of coalesced to make it such a prominent product. And I think a lot of what is in there will be fodder for what we can unpack as a panel for the rest of the time.
And why has it been so relevant? I mean, Katie, you probably got the most experience in this most recently. Why is a SPAC so perfect for iGaming right now?
Well, I think it's been seen until even we can talk right now, I think in weeks, it's been seen as such an easy access to both capital, to then post de-SPAC, to really provide the entity with a new form of currency, and to provide it also with relevancy. You know, when you're a young entrepreneurial enterprise, to be able to say that you're entering the public market space, it gives you a perceived prestige. One of the things that I would always say as a warning, though, is it's a lot like an 18-year-old girl who really, really wants to have a wedding but doesn't understand what a marriage is like. Being public is a lot like that. Right after this, I am going to race out of this because I've got an audit committee meeting and earnings on Monday. And once you're in the public company cycle, you're in the public company cycle. And all of the requirements and the focus that takes, as well as meeting expectations, and we all know what the street is doing right now. I mean, everybody is taking a beating, and you don't get to hide from that. And so although you get the glory of seeing your name on the tower, and although you get the glory of being able to put some symbols behind your name in every press release, you also have all of the risks that come along with it, and that currency that you think you have may not in fact be currency. So it's been an incredible tool, I think, perceived tool for many of us in the iGaming and the non-brick and mortar space period, but it also, I think, we need to be attuned very much to the risks that are involved.
Fantastic. And Leila, how important is profitability, do you think, in the context of SPACs and secondary raising and you know, taking the business past that first glorious ringing of the bell?
I mean, if we consider sports betting has been legalized in the US 4 years ago, so it's a pretty new and young industry, and many of the companies in the US that came into the US or were actually founded and created here, in their life circle, they're almost acting like startups. So it's a very high growth that they're projecting. Many of them are very far away from being profitable. And the spend is just immense when it comes to user acquisition. So in their life circle, it's very hard for them to do a traditional IPO because it's hard to, for many, not for all of them, but for many, it's very hard to show 3 to 5 years of existing revenues. And they're busy with their land grab, with their user acquisition, etc. So the vehicle of a SPAC just made so much more sense to them. It was so easy access to capital, especially with low rates, low interest rates, etc. They only have to show their projections. So you can basically raise a lot of money through a SPAC on future revenues. And I think that kind of like led to the SEC now to step in and kind of like adjusting the regulations. And we see nowadays, I mean, just in the last 6 to 9 months, how the stock market reacted, not only in our industry, but really in every other industry as well. Some of those brands are down 80% on their stock price. So we will see through that certainly a change in the environment here in the US when it comes to user acquisition, how those brands will react and act over the next couple of months and years. And it really makes one thing really clear. It's much easier to do a SPAC with a company that is profitable. And we just saw this morning, there was another SPAC announced, BetClick with Banerjee and Endemol Group, $7 billion SPAC out of Amsterdam. So those companies are profitable. They have like high cash flows, etc. It totally makes sense to do a SPAC, and they will hopefully be trading way over $10. But what we have seen, many of the companies that were very high up 9 months ago, they're like way under $10. And just to avoid that, I think this SEC made now the step to revise the rules and regulation to make sure that doesn't happen too often in the future.
Fantastic. So, Christian, what makes for a good SPAC if you're out there?
Look, I think the answer
one?
to that question has probably changed dramatically over the past, call it 18 to 24 months. And I think the right answer is probably still evolving. I think you touched on it. You have to have a real growth profile. Like you have to have real revenue, real growth profile, and you have to have earnings. The idea that you can go and burn capital, I mean, you can see what the markets are doing to businesses do that. It's very difficult, particularly in, particularly SPACs that are focused on the U.S. market or U.S. gaming market. Sports betting's expanded. I mean, the panels have talked about the opportunities of iGaming here in the near future. The reality of it is gambling has been successful where there's been limited supply and lots of demand. Where it gets to be lots of supply and the same demand, that's what you're seeing play out in sports betting, where the cost of customer acquisition is through the roof, hard to find profitability, as opposed to, you look across the pond or you look around the world, there's lots of markets where people have been profitable, but, there's probably, far more demand than there is supply in those markets. So it'll be interesting. But I think you have to have a real growth story, a real market, real product, and you have to be at least close to profitable. You have to have a very believable path to profitability, if not being profitable.
And Katie, if I'm sitting there as an operator right now thinking I want to go through some form of exit or listing, how do I choose a SPAC? What makes me choose a SPAC over an IPO? Where do you start?
Don't.
Do you start?
Yeah, so that advice aside, look, I think, Christian's advice is the right one. Be profitable, and then, and the SEC has come out with this exact guidance, and the rule changes are upon us. They are treating this now like an IPO. So, 10B is going to be looked at very hard. 14C is going to be looked at very hard. And what all of that means, if you are not a lawyer who's spending your time looking at the 33 Act, presuming most of you aren't, please don't. But what it really means is that full and fair disclosure is upon us. So the days of going out and being a SPAC where you could pluck out of thin air what your future projections are going to be, those days are gone. And there are many a SPAC out there where that really was what the projections were. You would say, we're going to do 6 M&A over the next 2 years, which means our revenue is going to look something like, and pull a number. We now need and should have SPACs that look just like an IPO. It's just a faster way to get there for a company with a smaller enterprise value. We are also seeing many of the major sponsors walking away from these deals, and they're walking away because of liability. Again, which points directly to these need to look like IPOs, just on a smaller scale, which means that the liability risk has to be de minimis the same way it is with an IPO. There needs to be an appropriate board of directors. There needs to be appropriate internal controls. There needs to be audited financials that are done in accordance with GAAP, presuming that it's a U.S. entity. All of these things need to be aligned and in place going way back, not something that you are doing in the months leading up to the event. And then in terms of what you select, I couldn't suggest hard enough the alignment between the SPAC sponsor and the entity. Misalignment is going to create, again, issues where you are making a poor marriage. A SPAC shouldn't be seen as anything less than what it is, which is a merger. And the same way that if you were going to go into an undertaking and you were going to merge your company, you would do that same due diligence and you would look for those same synergistic undertakings and for that same coalescence on a going forward basis, you should do that with your SPAC sponsor. And if your SPAC sponsor comes from a different sector or a different perspective or a different philosophy, it's going to make for a terrible marriage. And that's not the best way to start what can be one of the most difficult in terms of newness periods for an organization.
Fantastic. Adam, raising money through a SPAC is expensive, right? You've got the sponsors promote, you've got all of these warrants floating around. Looking at it as an exit for private equity, how do people react to the concept of SPAC? As far as I'm aware, the only people who've done it is Apax with Genius.
How has private equity responded?
Yeah, how would private equity view an IPO exit through a SPAC rather than straight IPO?
Well, I think, I'll pick up on something Katie said. I think you have to recognize that an IPO is a fundamentally different thing than a merger, than M&A. You know, an IPO is a creature of disclosure. M&A is a creature of negotiation. You know, an IPO is about raising new capital to get people behind a story that is to come. And M&A is about convincing existing capital that they're better off in a combination that already exists, you know, separately and now will become, you know, one, but the business already exists. So, you know, private equity, I think, is, you know, a creature of economics. So if there are SPACs, either before they've de-SPACed and done the merger or afterwards, that present a compelling forward return story, there's no reason why private equity wouldn't and shouldn't look at those, and in fact they are. So I think the more the SPACs are regulated and the more they go through the regulatory cleanse that Katie described, and the more regulators are focused on making sure the disclosure is as fulsome as it can be, the more likely you are to get private equity treating them as they treat other you know, target companies for capitalization or acquisition.
Super. Just turning to the process and the de-SPACing process, Katie. If someone's going through this process, and you know, I accept that in the near term that might be slightly unlikely, although there are a lot of SPACs out there looking for deals on relatively short fuses now. What are the things you should be aware of as a corporate coming through? What are the bumps in the road? How do you make sure that what you're going to do doesn't crash and burn half an hour after you've consummated the transaction?
I mean, the best advice I would be able to give, I think, is constant disclosure. We were lucky enough to have less than 1% of redemption, which, especially at the point in time when we did it, was truly it was just a remarkable achievement on behalf of our team. And we did that by over disclosure. You know, we did incredibly simplistic disclosure where we made sure that our retail investors, our institutional investors, and our regulators across the board constantly understood where we were in the process, and that what we said we did and what we did we said. And that to me is, it's a mantra that we lived by going into the process and that we have continued. Everything that I have seen so far, where in the de-SPAC process, entities on either side get themselves into trouble, it's because of a lack of disclosure, and it's from a lack of being forthright, either with their sponsor, with the target, or with a regulator, or with the retail investors. Do not underestimate the power of the retail investor. The more disclosure you can create, the better your result's going to be. And you know, being able to have a result like ours, where you get literally, we had 0.4% redemption, is the result that you want to end up with.
So Christian, as a SPAC sponsor right now with the spectre of redemptions out there, how do you manage that process? How do you select the right company?
Look, it's, as I think Adam touched on, it's a negotiation, right? So when you're looking at a target company, they're looking for capital, right? That's the attraction of a SPAC, is that you have this pool of capital that they're going to be able to utilize to grow the business and execute on the plan that you're putting forward, right? So given that redemptions, you know, I don't know the statistics, but you know, it's very, very rare you see one below 90% redemptions. And so there's a certainty of capital question that targets are having. So trying to work that, I don't think, I mean, most people have heard about pipes. I don't think they exist anymore. Adam, you probably are closer than anything. I just don't think they're there because there's other options. Why do people want to be locked up? There's other ways for them to play in the game. So you have to be very transparent with your target and figuring out what you're going to do. And I think Katie hits on it, right? It's about being transparent. Being transparent with the target, having your goals in align, and making sure everybody's on the same page. Good, bad, or indifferent, right? Create the story, tell the story. You create the narrative and make sure that you're very transparent in what you do. You have an opportunity, but that starts before going public, before being in the public market. Be there with the target. Say, look, we want to deliver as much capital as possible. But that's going to be a collaborative effort of telling the right story and having the right story to tell. So it's definitely part of the negotiation now about how much capital, minimum cash requirements to close. It's very, very difficult. I think you'd be foolish if you relied on anything but that high redemption level. So to the extent you have to solve the calculus, I would assume that what you're going to get in trust is going to be pretty low.
Right.
Just to build on that, for the benefit of people in the room who might not be as familiar with what we're talking about, the relationship between redemption and pipe is something that I think gets missed, which is one feature for investors to invest in a SPAC when it lists, so before a de-SPAC process merger happens, is the promise of being able to approve or not approve the ultimate merger. And if you vote against the merger, there are different variations on how these deals work, but in general, you get your money back, right? So there's embedded option value for investors if they want to preserve the ability to turn down the deal, they can get their money back, and that's the redemption part. Now, the reason that matters is the SPAC, someone in Katie's position, has to now manage the acquisition price for the company that they're buying when they also have to pay a lot of money out to the market to redeem the existing investors, some percentage of them. And that hole has been filled with this pipe, a public investment into a private investment into a public entity. That's what a pipe is. And so the more redemption, the bigger the pipe need is, and you have to solve these things simultaneously. So I just want to make sure we're being clear about why these things matter and how they relate to each other. And again, I would come back to, I don't think that pipes are dead. I think they have to be compelling. But if so many investors are redeeming, that replacement capital is going to have more risk associated with it and be more expensive. And then at some point, it becomes harder to make the merger work because, again, all of these things feed back on each other. So I just wanted to make sure we pointed that out.
And then presumably, once you get it all away, you've got an overhang in 6 months when all of those locked-in holders start dumping their stock in the market.
Yeah.
You've got to fight your way through that too.
Yeah, well, you could get creative on lockups too to try and create the right incentives. But it's another problem with a lot of SPACs is they have very low float because the sponsor group and big owners who need to be locked up and the pipe investors get locked up. There just isn't a lot of trading, and so when there's downward pressure on those stocks, there's not much support. So it's another challenge to the structure, and that changes over time as the lockups abate and people can create more float. But it's a feature of the company.
If I could, I think that's such an important point, and if there's one piece of advice that I was going to give is the creativity part. I think the race to the finish line, everybody tends to go to the same shops, do the same thing, use the same forms, and race to the finish line, and you lose the creativity. And in losing that creativity, you lose an enormous amount of opportunity, which is going to cost you in the long run. And taking that sober second thought and maybe looking at other opportunities in the process to be creative it can net you an enormous amount of wealth in the process and bring you an enormous amount of benefit, which will give you a lot less regret at the outcome.
Fantastic. So I was going to pronounce the death of the SPAC today, and then BetClick turned up with the Endemol business and did the European SPAC, which is the first one that I'm aware of in Europe as a SPAC. And I think listening to all of you today, I think the SPAC isn't dead; it just needs to be reinvented.
It's only mostly dead.
Yeah. This isn't a dead parrot. But I do think that there's going to be a future for the SPAC. I think there is a lot of money currently sitting waiting to be deployed or redeemed. There are a lot of clever people out there who I think are going to have intelligent ideas about how best to deploy that capital. And I think if you bring a project forward which has got the right combination of profitability, believability, management teams that are proven to deliver things, then I think there's still a future. And notwithstanding all of the issues where people are pointing to value destruction from, be it DraftKings or whomever else, and it always comes back to DraftKings apparently, then from my perspective at least, and thank you guys for contributing and helping me with my opinion, I think it really is, there's something that will still be there, but it'll be there in a different way. And we just need to sit down and work out how to make that work. So thank you all very much.
Thank you.
Great, I'd like to invite the panelists for our next session on the intersection of media and sports betting up to the stage. And could we get that QR code one more time on the screen? Just to remind everyone, you can submit questions if you just scan that QR code, which should be up on the screen for you in a moment. There you go. You can submit questions for your panelists there. And those will come through on the pad. Hi, great to meet you.
All good. Hello, everybody. Very excited to be with you here today. Very esteemed panel. I think this is is this the biggest panel of the whole? Yes. So I will try to wrangle everyone and get everyone a chance here to speak. So this is the intersection of media and sports betting, and I think that is obviously the place to start. These days, it does feel like more of a collision, though, and not much of an intersection, kind of like what we see out there in Times Square. And Brian, I think a great place to start, senior gaming analyst over at Bloomberg. You get a perch and you get to watch all of these collisions take place between operators, media companies. But from what we talked about prior to the session and what you'd like to address today, private equity has a big kind of talking point here, especially Apollo's deal with Yahoo, which kind of is setting the tone for this. What are you seeing there, and how is that going to affect the rest of the space?
You know, it really is fascinating. I just left the other presentation where the BetMGM Investor Day was going on, and one of the executives mentions the relationship both with SportsGrid and with Yahoo. And there are so many moving parts that come into question. For example, when Apollo takes a major stake in Yahoo from Verizon, I think it raises a lot of questions for me as an analyst in terms of what the long-term strategy is. I spent a lot of my time looking at relationships between casino operators, online sports betting operators, and media entities, and we're starting to see these multiple arrangements where I'm very curious to see, and we have some great expertise on this panel to get some insight as to how this all plays out. Do these operators choose a preferred media distribution partner, or are there room for such multiple partnerships?
Well, you mentioned SportsGrid. We have the CEO of SportsGrid here, Adam Kaplan. Adam, I think originally SportsGrid had a very strong partnership with FanDuel, now MGM. It does seem like the partnerships between networks and actual operators is kind of the soup du jour. Do you want to explain what your current situation is with MGM and where you see that going forward?
Yeah, so SportsGrid, for those who don't know, is the 24/7 sports betting network with strong, vast distribution across OTT, streaming, connected device, radio, linear, etc. platforms. For us, what we've been able to do is really accumulate a large audience of sports bettors on tuning in mostly on televisions and mobile devices. And so what that brings to the table, in 2020 we had roughly 52 million viewers across those platforms. And this year we're on pace for closer to 70. Those are 70 million unique sports bettors in the US, and really operators don't have many places they can go to get that kind of targeting on a national scale. And so what we've been able to do, we've worked with FanDuel, as Jared knows, since 2018 and have been a part of their rise. I was over on the FanDuel side then. Now I switched over to be at SportsGrid, and I'm very happy about doing that. Ultimately, what we are doing now is working with more operators. And so you mentioned, and sounds like our good friend Matt Prevost mentioned, SportsGrid on the GM Investor Day. Ultimately, what we're trying to do is be the sports betting network that works with multiple operators, and the place to go for the sports betting enthusiast that is looking to consume content in almost like a CNBC-like format. So for us, really having the distribution, and I think what operators care about, is picking up on multiple different pockets of audience to try to reach and engage those customers and get them into their orbit so that they can cross-sell them everywhere. And SportsGrid historically is a pretty good way to do that.
David Facillo.
Yeah, so I'm with SB Nation, part of Vox Media. I'm head of sports betting content, and I just wanted to kind of follow up on what Adam said. We're kind of in a slightly opposite position where you're appealing to the sports bettor immediately. We've got a loyal reader base that isn't necessarily into sports betting or has not engaged in it regularly, and so our goal is to figure out what we can do with that. We have a partnership with DraftKings as our exclusive sportsbook partner, and so kind of using that partnership to see, can we, how do we convert users? That's, the big white whale of media is figuring out how to convert users, and so we're using this partnership to really figure that out. But again, it's starting with an engaged base, but not engaged in the traditional sports betting sense. So it's a work in progress.
Kelly Prack, CEO of Convene. On the business side, micro markets and actually targeting specific sports bettors, sports fans, and then trying to convert them into sports bettors. That seems to be a big growth market. How do you do that?
Yeah, so for those of you who don't know InVenue, we're new on the scene. Where we've gotten our growth is in real-time predictive analytics for the next play. So right now we're on Apple TV. So if you watch Apple TV baseball, we're the numbers on the bottom right. And why this is important is we're seeing huge engagement from the fans now that we're putting it into a number that they can recognize, and they're challenging the numbers, they're excited about the numbers, and I think that's the next growth into getting fans to start to bet in the moment. And as a sports fan myself, that's what I want to do. I want to bet in the moment and what I'm watching. And so this collision of betting and watching is coming, and we're getting ready for it.
It's tough because we see a lot of integration with odds on the screen that are actually happening. I've watched some of the Apple TV broadcasts. It's helpful. Instead of saying Aaron Judge to get an RBI plus 200, it says 33%, which to me, that allows the average fan that isn't into sports betting to kind of understand that a little bit more. Martina Ackerlund, CEO of Triggy, for you, it's live betting. And we talked about this, the difference between the US and Europe right now is live betting. 70% of the handle in Europe comes from live betting, half of that here in the States. Is that a gap that can be bridged by something that you can suggest?
Well, we think so, and actually here I think it's like 30% in the US that is live betting, and in Europe like around 70%. And of course, for you who doesn't know Triggy, we're working with bet engagement tools, and to us it's all about personalization to engage in play, and that is where we feel that making it like engaging and for the fan to be able to place a bet, and also as a fan nowadays, or to all of us as consumer, we are used to being addressed by personalized messages. We're used to Facebook, to Netflix, Amazon, and others. So we think it's extremely important to engage, but also work with personalization. So you feel like, okay, I'm really into this game, I want to place a bet, and I want to do it in play now to make it convenient and entertaining.
Yeah, live betting, we used to do a show. We still do. Sports Grid still does a show that is specifically geared towards live betting. That is a massive growth audience. Brian, to me, we talk about media. ESPN has to fit into this category in some capacity. Where do you see ESPN? Is it licensing? Is it more content? Are they going to link up with the operators and actually get the content specifically? Where do you see ESPN, which is Disney, Behemoth, fitting into all this?
The ESPN story is fascinating because we've watched this where news and speculation started emerging that ESPN might seek a licensing partner. And so the big question we ask, or I ask as an analyst, is who might that be? You know, the one logical angle of this, which is interesting, is you've got the ESPN studio run out of the Link, which is owned by Caesars. So one might think there's a connection between ESPN and Caesars, and yet Caesars has invested enormous capital into William Hill for this very successful and massive launch in the US. So we've tried to look at the puzzle pieces and figure out where ESPN belongs. It seems like it's a logical dance partner, if you will, for somebody. But Caesars angle seems less plausible to me as an analyst, given all the investment in William Hill. You've got other companies like Wynn, which have tried to get in the business, but have really scaled back on customer acquisition costs. So ESPN seems like a logical entity to find a sports bet licensing partner, and yet a lot of the dance partners have been taken. I'm sure there's an opportunity out there, but some of the more obvious ones, users that come to mind, would seem somewhat less obvious given all the other investments they've made. So it's a puzzle where maybe some of the operating people here have a better sense of it, but as a public market analyst, it's a puzzle we've tried to unravel.
Well, Adam, you've worked on both sides, media and operator. Is there a winning side to this argument, or do both sides need to win in order to get the product and get the most out of what is gambling revenue that's sitting out there in these states?
Yeah, I mean, look, running a sportsbook has its challenges. I mean, for the most part, a relatively low margin business that appeals to a large number of users. And a lot of the juice for operators can come out of cross-selling those customers between different verticals that they have. That's where it comes from. And so, I think, ESPN, which was brought up, has a very large footprint. Obviously, they're the worldwide leader in sports. You would imagine anything they do is going to be big if they do anything in the gaming space. And so, Brian, I'll leave it to the market analysts to speculate. But I think this concept of media companies trying to become gaming companies trying to become media companies, what it really comes back to is, do you want to build inside out or do you want to build outside in? To date, the most successful models in the US have been inside out builds like FanDuel and DraftKings, or even MGM and Caesars, who have big brands, big databases. In the case of FanDuel and DraftKings, digital expertise, serving real money products to gaming partners in the US. In the case of MGM and Caesars, they've had to develop in those areas through, well, in Caesars' case, the William Hill acquisition, in MGM's case, the deal with Entain. But they had those brands and they had that resorts database to work from, and the sort of footprint and foundation. And so, where we haven't seen as much success is sort of in the category of media companies trying to go outside in and become gaming companies because of some of the challenges. And so I think ultimately it really just comes back to what your strategy is. But I think the ones that are having the most success kind of know what they're good at and partner up with others that have what they don't have.
It seems easy for a gaming company these days to become a media company. I turn on my TV, and all I see is DraftKings ads and FanDuel ads, and the marketing that they're able to pump into these respective states. It's almost, for lack of a better word, nauseating at a time. David, are these companies now that are trying to get brand awareness? We want you to bet with us. It's cool to bet with us. Are they doing more harm than good in the long term as this industry continues to develop and mature?
It's hard to tell right now, just because it is, it's the Wild West where everybody's just desperate to get that customer base. And you see new companies come in. You saw Tipico when they signed a deal with USA or with Gannett, and they're coming in well after everybody else. I think there's a point of diminishing returns in terms of how people react negatively to seeing all these ads, because at some point now everybody's seen these ads. Well, almost everybody. My wife does not see these ads because she's not a sports bettor. And it's fascinating though that you've kind of reached this point where I don't know that it can get worse, because they really can't advertise any more than they are already. I mean, I don't want to I don't want to challenge them, but I don't think. Be
careful.
Yeah. But so I don't know that it's really necessarily going to get worse. I think they're going to try and pivot. Whether they're trying to follow the Barstool brand of, not directly, but more in the idea of being a lifestyle brand, because you've seen DraftKings and FanDuel getting into NFTs and getting into these other areas that are sports betting adjacent or just not entirely related to it, but they want to really. They want to build a brand that's more than sports betting, which makes sense. And you're seeing it with, DraftKings Casino, and that eventually, that I suspect that's going to be their major investment, in the future. But it feels like they just want you to know about them, but they don't want you, they want to kind of spread that, how do you know about them.
Kelly, it does seem like targeting who the casual fan is and getting them into the space seems to be the biggest challenge right now. How do we solve that?
Yeah, so some of the marketing and some of the advertising, I don't feel like it's looking at the casual fan. It's looking at somebody who's already a traditional sports bettor, right? But the people who are watching, they're largely casual fans, to be honest. It's people who are non-traditional sports bettors. And so you have to look at and by the way, that's me. That classifies me. I watch sports. I'm an avid fan. I love numbers. But I'm not your traditional sports bettor. So how do you get somebody like me to bet? How do you get my mom to bet, or my kids, who are over age, by the way, they can bet. How do you do that? You look at what they want to do. And what we want to do is we want to watch the game that we love. We want to get involved in that moment. We want to be able to challenge it. Like some of the things on Apple TV, people will challenge us and say, there's no way that the RBI probability should have dropped that much. And it's that's a betting moment. You think you know more? Come in and bet. And so the personalization of the bet needs to happen. You need to recognize that not everybody is your standard sports bettor. So I think that advertisement is, in a sense, it's off. because it doesn't speak to me and others, many others that are like me. So once we can know what the fans want and reach them, and by the way, that's micro markets. That's in the moment. Will Jose Altuve hit this home run right now? I'm an Astros fan. Sorry for all of you guys that are not. What's that?
You're mic'd up.
Yep, I am mic'd up.
They are surveilling this conference today. If I had a nickel for every time I thought the sports book was wrong about a line, I probably would have a much different job today. Martina, I think the key, especially in the U.S., is the infancy of the market. You've had a chance to experience European markets. The company that I work for, Spotlight Sports Group's done an incredible job of building a European betting content brand, trying to do it now here in the States with PicksWise. What is the challenges when you see what Europe went through and now you're seeing what the U.S. is going through in the early stages? Are there similarities? Is there a correlation? Are we deviating from what was successful in Europe?
Well, I think this is the most interesting thing to follow right now, and that's why it's so extremely important to measure everything and work with data in a really thorough way, because it's easy to jump into conclusions, but also, of course, the markets are different from each other. There are many similarities, but also many differences, and I think to be successful going forward, you always have to really look into the data and what the numbers tell you. So focus on that, and it will be interesting to follow the development.
Brian, I think consolidation is inevitable. But when we talked on our call last week, you felt big tech, Apple, Google, Meta, Amazon, you're kind of bearish on them really investing in the space and becoming a major player. Why? And is there a chance that that might change in the future?
I think that's certainly part of the potential landscape. What I'm most intrigued by, maybe in the near term, and maybe it's a bit near-term thinking, is the media companies themselves, aside from pure tech companies, are looking for ways to get involved. Most notably, Sinclair had a network of regional sports networks teamed up with Bally's to create a Bally's sports book, and Bally's acquired Betworks to get some technology. And then, Fubo TV is interesting too, another media entity with kind of a rabid sports fan following, launching a sports book. So I certainly think it's possible that big tech could get involved, but even other media entities, there are still major media companies trying to find a way to make this work, whether it's Fubo TV or Sinclair, or we mentioned before ESPN. There's certainly room for tech to get involved, but the media entities themselves are trying to sort all this out. And when I think about consolidation too, I'm curious to hear Dave's perspective on SB Nation, because there's another thing as an analyst I'm trying to unravel, where we've got DraftKings with SB Nation forming DraftKings Nation. Then you've got VSiN, which Wayne Kimball talked about before, kind of integrating its contact into DraftKings Nation, but we don't exactly, as an outsider, know how. So I think even before we get to potential role for big tech, there's a lot of moving parts that still have to be resolved in terms of how these relationships pan out.
Feel free to chime in there.
Oh yeah, it's been an interesting relationship. I've been working with DraftKings now for about 3 years. And in that time, they bought VSiN, they invested in Meadowlark. They're doing, deal after deal after deal. And we've been working with them and VSiN to try and figure out the best ways. Because again, VSiN, for those that aren't aware, is a subscription-based service. And DraftKings Nation is free content. And so we've kind of, started to pivot a little bit towards what we can do with VSiN around some of their content to help promote it. But also, so DraftKings Nation is on the same platform as all the SB Nation sites, as The Ringer, Chicago Sun-Times. Those are all on the same digital content management system. And I think one thought is, well, do we try and move a site over to that? Because Vox has New York Magazine, which is subscription-based. So there's a lot of different ways to approach it that we're just trying to figure out what makes the most sense, what would work, and what will benefit each of the brands. But also, I think the biggest thing that we're trying to figure out, and we've been thinking about for the past year, is how do we promote VSiN? Because they are VSiN, kind of to your point about where what DraftKings is trying to appeal to. They've talked publicly about appealing to that recreational bettor. That's controversially enough, they've talked about that. And VSiN is not the recreational bettor. And so it's interesting to see how they want to integrate that and try and figure out, because again, we're partners with them, but we're still an outside company, so we kind of have to sort of see what they're doing and try and figure it out on our own as well, and just kind of follow the context clues.
Speaking of recreational bettors, when we talk about the casual bettor, that's another word for them, the media companies now seem to be a lot more singular with their focus. For example, FanDuel has Pat McAfee. So much of their resources is pumped into promoting him. And he puts out a bet on FanDuel. Everyone bet with me. There's been some controversies about the influencer going out there, working for an operator and saying, bet with me. That is kind of a 3-card monte on the street kind of deal. Adam, you've had experience with this on both sides. Do you see a conflict of interest with media companies pairing with just huge influencers with millions and millions of followers, just changing the course of a specific betting market by putting a specific bet out there and then inviting the public to, quote unquote, bet with them?
I don't see a conflict, mostly because of how, I mean, at least in the case of Pat McAfee, how the deal is structured. So when we were doing the McAfee deal at FanDuel, the big sort of priority was we wanted him to be able to be authentic with his audience because, you know, with these influencers, the key thing is really the strength of the relationship they have with their audience. So in the case of Pat's paid cash, right? And there are obviously, you know, benefits to him engaging his audience and getting them excited about bets. And from the operator standpoint, you know, if you're not paying your person based on revenue, right, or performance to that end, then there's really no conflict. And even if they win, when they do, you know, whatever the bet is, I think he had one the other week that won, you know, pretty well with a pretty big following. That's just part of feeding the flywheel, right, and getting, you know, money flowing through to your customers. Because ultimately, really, you know, at a certain point, the real challenge starts to shift as there is consolidation, and maybe we move towards a world where there aren't 20 books in New Jersey and there's more like 7 to 10. The real battle is going to be about share of wallet. It's not going to be about customer acquisition, right? And so you really want to be able to have these always-on opportunities for your customers to be able to engage with the personalities, teams, leagues they love in a way that continues to feed the flywheel.
MGM's deal with Leo Vegas is interesting. Martina, it expands them into Europe. It's a massive deal. MGM just reported they have 25% in global gaming revenue here in the States. That is a huge piece of the pie, and now they are expanding to Europe. Are they starting to build the model of what a successful operator will be in the States?
Well, I think that this is what we see right now, like the big brands buying really good tech, and of course, American brands buying European tech that has done this for quite a while. That's a good combination, and of course, buying Leo Vegas, that's both tech, but also the markets and the knowledge that they have. So it's a great combination, and I think we will see more of that going forward.
Brian, anything to add on the MGM Leo Vegas deal before we wrap things up here?
It is really interesting, and one of the, with all the focus on sports betting, one of the places where BetMGM has been really successful is actually the iCasino product. Yeah. And just in terms of market share leadership, and granted it's limited to some 5 states or so, but with somewhat lower promotional levels than is the case for sports betting, they've managed to actually build out, you know, quite a solid market share. And with all the frenzy about sports betting, I think sometimes U.S. iCasino, again, constrained to a few different jurisdictions, doesn't get the attention. But, you know, certainly companies like BetMGM and Golden Nugget Online and the search for live dealer capabilities, that's a real opportunity. I am curious to see if they can parlay that and extend that to Europe with the Leo Vegas deal.
Great gambling term there. Use parlay.
Parlay, yeah.
gets the dollar for the day. John from Cencor has a question. Thank you, John. And I think, Kelly, this is best for you to answer with our short time here. How does the intersection of betting data and odds merge on the screen? How do you see that playing out in the future with, especially what we're seeing with Apple TV?
Well, we have 2 options, right? The first is move to more casual betting and always call it probabilities, which people tend to get, or train the people that are watching to understand odds. I don't know what the odds of success of that are, but I do think that we've just got to make it more casual and understandable. And by the way, like we will bet, you know. So we will bet when we see these and when we understand it and it's welcoming, and when it's in the moment and when it's real time. Like all of those factors have to be there. We have to be watching it, see it, engaged with it. It's got to be the right bet. There's so many things that we need to do, and we need good tech that will do that, and that's what we plan to do.
Yeah, I think if we've seen the numbers in New York, people will bet. That is not an issue. Under a minute to go. Should we concede the rest of the time back to the floor? I can't see us doing much else in the last 45 seconds. So thank you all very much. I appreciate your time today.
Hi, everyone. Good afternoon. This next session is on product innovation in online gaming and sports betting, and I'm so excited about this topic that I'm going to stick around and moderate this panel. I'm going to really quickly run through our lineup of panelists here. We have Lloyd Danzig, who is the managing partner of Sharp Alpha Funds, and they're a VC firm focused on the sports betting space. We have next to him Zach Sold, who is director of digital at BetMGM, which hopefully many of you here are familiar with. We have Anna Sainsbury, who is the co-founder and CEO of GeoComply, a huge service provider to the industry with geolocation services and compliance services. Next to her, we've got Tomasz Devaneshek, who is the co-founder and CEO of Kiro Sports. And last but not least, we have Matt Hyman, who is the founder and CEO of The Game Day. Thank you, everyone, for being here today. We spent a lot of time this morning talking about this really hyper-competitive sports betting market that we're in here in North America. If we think back on the years since PASPA was repealed and how the markets has evolved, it seemed like we started off with this big land grab phase, right? Operators rushing into the space, strategically expanding into new markets, and for lack of a better word, buying customers, right? Huge promotions, marketing, splashy marketing campaigns to reach audiences. And now it seems like this next phase, new operators that are coming in are all talking about product differentiation and how that's going to be the name of the game. I'd love to kind of start off with a big question. When we think through the lens of innovation, and I'll kick it off with you because you work with a lot of different players in this space, what do you think is really going to differentiate the winners and the losers in the North American market when we think about the product innovation side of things?
I think the key area that a lot of operators are focused on at the moment, in particular this year, is really usability. And us going back and looking at, had so much growth. Each market in the US is quite different from the other. And we've had a lot of requirements when we look at that player funnel. So we are spending a lot of money advertising to players and getting them on our sites. And we need to look at how are we getting them through that player funnel, and then how are we engaging them over time, and is it a good experience? And so now that we have a little bit of time to step back, although this year we've opened up 2 of our biggest markets, focusing on that and making sure that we have the right messaging, the right education for the users so that they know what to expect in terms of geolocation, age and identity, getting money onto the online site, and then also, of course, engaging them with great products and integrating those products into land-based casinos, especially because we've seen a lot of traffic in the casinos. So those have been the real conversations that we've been having with our partners over the past few months.
And Lloyd, I'd love to get your take on this as well, since you're working with a lot of the startups that are helping, move innovation along in this space.
I think we're now starting to move from the customer acquisition, market access gold rush phase into the customer retention and unit economics optimization phase. And a lot of that is being done through various forms of differentiation. Some companies are differentiating based on their business models. Circa has a very different business model from DraftKings. Some differentiating by way of brand, media, in-house personalities, the communities that get built around those, and then others by product. Right now, the majority of product and technological infrastructure that exists was imported from other parts of the world that had more and longer developed gambling markets. But there are very different consumer preferences here in the US than in many of those regions. In particular, people here are a lot more focused on the social and entertainment side of betting, and in a lot of ways, the current product landscape is not only undifferentiated, but really fails to speak to and harvest a lot of those consumer preferences. And in many cases, large operators, not that they are incapable or lack the intellectual aptitude to innovate, but they're resource constrained. Every new state that legalizes sports betting basically requires its own go-to-market strategy and a team of lawyers and lobbyists and hundreds of millions of dollars in advertising spend. And so that, combined with the technical debt that a lot of companies have amassed, makes it easier or makes it more advantageous for a lot of startups to engage in innovation. Startups are often a lot more coherently tapped into the needs of sometimes themselves, if people are building products that they themselves see missing in the market, or in general are able to address certain consumer needs, iterate a lot more quickly. I was talking to a large operator recently and pitching them on a moderately novel and innovative idea, and their response was something to the effect of, we don't even have teasers working properly across all the states right now. There's no way we can even consider this. And it may or may not have been Zach right here who said that. I wasn't going to call him out, but okay, there you go.
We're not allowed to talk about other operators outside of BetMGM on this panel. So.
And so the point being, there may be a lot of product innovations that ultimately reach the mass market with a DraftKings or FanDuel or MGM logo and stamp on them, but a lot of those product innovations will originate among earlier stage, more nimble companies that can more adroitly target what it is that is not currently being tapped in terms of unmet consumer preferences.
And I mean, to that point, there's a lot to think about when we talk about innovation, right? That's a big word that spans a lot of things, from things like loyalty and how you engage users to all the elements under the hood, as Anna was talking about. Zach, I'd love to get your opinion on this. Being at an operator, how do you set your priorities? What are the biggest pain points that you need to address in 2022 versus what can wait, maybe 2, 3, 4 years down the line?
Yeah, for sure. I mean, I think that there's a certain threshold of basic and sort of commoditized product features that everybody needs to be able to nail in order to compete at the highest level, right? So once you've sort of made that checkbox, I would put teasers on that list of features that you need to have. Things like single account across all states where you can dynamically transfer funds, and you have one account that is for New York, New Jersey, Pennsylvania, and so on. Once you nail those sort of like expected commoditized features, then it's about competing where you think you can win. So you mentioned loyalty, and I think that that's an area where BetMGM is obviously investing a ton of resource, just when you can tie together your sort of MGM retail rewards program, which is obviously has a massive database and a massive following, and a ton of people that are already using it, and tie that in with your digital properties in order to drive more handle via sports betting, online gaming, even bingo products when you launch them, and really communicate with a single customer based upon a single customer ID in a cohesive way that pushes them into that sort of omni-channel world where when a person shows up at the Bellagio, it's the same person who's using BetMGM when they go back to Michigan. Same thing when they go to the MGM Grand in Detroit, and really communicating with that person cohesively and making sure that they're leveraging all of the products in your sort of suite. That's a huge priority for us. And so you sort of have to identify where can we compete, where can we win. And when it comes to like diversity of products, obviously we're not going to launch a DFS site. That's already pretty well established. And there's more of a way of other operators that are going to successfully drive customers between one product vertical to another within the digital environment. So for us, it's about tying together, how can we tie together our retail operation with our digital properties in order to drive just the best and most retentive omni-channel flywheel for BetMGM.
That makes a lot of sense. Tomasz, I'd love to get your opinion on this as well, because we've been talking mainly from the operator point of view, but you work with a lot of other stakeholders, sports teams and leagues who are trying to engage their fan base around sports betting and gaming as well. What do you think about that?
Yeah, well, we try and look at it from a user experience, right? Because I think the sports fan is not so different from a sports bettor, although obviously they mean different things. But in the future, if you imagine that a lot more adoption is going to happen in the space, then you're probably, as you try and anticipate what does that experience look like 5 years from now or 2 years from now, certainly one aspect that lends itself nicely today is how do people consume entertainment, right? How is, when you open up your phone, what is it that happens to you? And the answer is very much instant gratification, and it's highly real time. And what gives you that is the algorithmic curation capabilities of those platforms like TikTok, Instagram, et cetera. And so as we try and think about, well, how will people consume sports and sports betting, algorithmic curation, and I'll touch on that in a second, is one key, and then social is another, and I know Lloyd brought that up. And so what does algorithmic curation really mean for you? It means that when you tune into the second period of a hockey game, you're not just seeing a line that was made 3 days in the past and the line has moved, but rather something highly contextual, because if one team just won if the Rangers won on a power play, you probably want to bet on the outcome of that power play. And so being able to deliver those types of micro-betting, in-game micro-betting experiences and making that social is something that seems to be appealing across the board, not just to operators, but also to the leagues and the teams, because they're trying to get a lot more engagement with their content as well. And so that's kind of how we see it in this holistic, what is the next gen version of the user experience.
And to that point on social and entertainment, we're seeing some of the big sports betting platforms, companies like DraftKings, say that social is going to be a big focus for them in the coming year. DraftKings in particular is adding features like social betting groups. They're looking to incorporate user-generated video and the like. What do you think ultimately is the future of social and entertainment in this space? Is it going to be that this becomes an inherent part of all of the sports books moving forward? Is it something that, Meta, these other big social platforms that you think are going to want to, dive into in the future? Do these communities end up on Discord or somewhere in the like? Matt, where do you think this is all headed?
Yeah, it's a timely question. I mean, the Game Day has one of our board members as a senior exec, so top 10 or 20 exec at Meta. And we had a board meeting on Monday, and it came up, where does this play in terms of the integration between the platform and the data that we get from the platform as a publisher. So, for example, BetMGM is one of our clients. In my previous business, it was actually acquired by Sky, and we had 450, 500 million people a month watching our content, all on social, where we get an incredible data scrape. When we were bought by Sky, they owned Sky Bet. At the time, it was a billion-dollar business. When it ultimately sold, it was a £3 to £4 billion, pound business. And what we did by understanding the left-hand need, which was the operator, with the right-hand data, which was 450 to 500 million people a month watching our content, is we could create cohorts and understand activity at a level that's incredible. And it's at a level that right now is really, it is church and state. And when we, post-acquisition, it was no longer church and state, we're all under one banner. It made it very easy for me and Richard to sit down and his team to sit down and say, like, listen, who are the 100 million people you want to get to? When do you want to get to them? What does that campaign look like? What does the data look like? More importantly, what does a good better look like? Like, have we spent your money appropriately or inappropriately? Are you making money? Should we actually be thinking about this on a rev share basis so that we're both aligned? And how do we integrate our tech, which is pretty easy to do because we have a lot of data, like a fire hose of it. So that was 2018, but I remember asking Richard, like, how did you create Sky Bet? Like, there were already 22 operators in the UK. Tech was really not the innovation, right? It was all the same platforms, all third-party licensed tech. And he said, mobile. And I said, when? And he said, 2012, 2013. And I was like, but the iPhone had been around for like 4 or 5 years by then. How was that an innovation? And he said, nobody went for it. And I think the piece that's really interesting is that there's little simple things like, let's focus on mobile because that's where consumers are at. That if you actually focus on that and dedicate to it, he created a massive company. In the same way as I think some of our partners will understand when the left hand and the right hand cooperate in terms of data. Already, we're 18 months old since our first post. We're doing 100 million US 18 to 35-year-old touch points a month. And there's no operator who's coming to us and saying, what kind of data do you have? And I think that's very interesting. I think we have 4.5 million, 5 million likes, comments, shares a week where we have all that data. Right? We know who the human being is. We're interacting with them. No operator is coming to us and saying, let's do something with that. And those aren't difficult tweaks. That's like Richard focusing on mobile. Right? That's not hard work. That's just somebody saying, actually, I want to have profitable customers.
Do you think we see some sort of a new startup, a third party kind of emerge and become the platform where, bettors and other sports-minded folks are kind of interacting and engaging?
I can there certainly are a number that are trying to be such a platform. But I also think it's an interesting time where operators, DraftKings has rolled out a number of social features, as you mentioned. In the US, people have a very different sociocultural orientation towards sports betting than many other places on earth, especially the places from which we've imported the technology and products that exist today. I think a great example of this is you walk into or Google a picture of a William Hill betting parlor in even the nicest part of London, and it looks kind of like an ATM vestibule or a post office where you get in, you very efficiently find the information, place a bet, and get out. Whereas at a Las Vegas sportsbook, for the majority of people there, whether a team's minus 120 or minus 125 is probably the least important facet of that entire experience. And of course, operators want social and entertainment-seeking, non-price-sensitive sports bettors. That's kind of the ultimate cohort that you go after. And on top of that, I think an interesting opportunity, we'll see to what extent it can be harvested. Sportsbooks historically have not really achieved or leveraged any degree of network effects. There's no incremental benefit to me to joining the sportsbook that more people are using or that more of my friends are using. Yes, sometimes FanDuel and DraftKings do the promotions where every 1,000 people who bet on a particular outcome move the spread for everyone in one direction, and that's a small example. But if you think about the other user experiences that your typical core sports bettor is partaking in, if I have Netflix and all of my friends have Hulu, we're not going to be able to talk about and quote the same shows. If I have PlayStation and all my friends have Xbox, we're not going to be able to play against each other in FIFA, or I guess it's not going to be called FIFA anymore. It's going to be called EAFC. The point is that most of these platforms in and around sports betting have figured out a way to entice users to stay on the same platform as their friends and as more users. And even in season-long fantasy and DFS, I use Yahoo Fantasy for my season-long football, not necessarily because it's the best platform, because I've been playing with the same group of people for 15 years in the same league, and it's just easy for someone to press one button that says, send out the invitation for this year's draft to all of those. And so I think one of the most compelling aspects of social functionality, if an operator can successfully implement it, is that it adds a sense of network effects and stickiness and retention that right now I think is lacking in an environment where there really is minimal, if any, brand loyalty.
That's a great point. Shifting gears a little bit as we kind of stick on this topic of where is this innovation coming from. Zach, I'd love to come back to you because, you know, as an operator, you have lots of options. You can buy, right? You can acquire a new piece of technology that maybe has a social function that could give you this kind of network effects that Lloyd was talking about. You can rent and work with a third party, or you can work and try to build it in-house yourself. What does that decision-making process look like for you?
Yeah, I mean, so it's you know, relatively standard sort of business case that you're trying to build out. I mean, for us and for I think a lot of operators, Lloyd pointed this out, but it's like when a new market opens up, it's an absolute mandate to be there on day one, which means a lot of your development and technology and product resources get realigned to say, okay, well, Ontario is a 3-product market. We need to make sure that we're there on day one with sports betting, poker, and casino, right? So it's like there's a certain amount of resource that you need to earmark or just ring fence for making sure that you hit certain deadlines for new product markets, and that's going to remain the case for a relatively long time. So it's, okay, what do we have left? What does our priority list look like? And what are the real innovative opportunities that we can go and white label? I'd say each operator is making those decisions based upon what their development resource looks like. You know, for us, we're much more open to the white label solution, I think, than a lot of other operators might be, who can say, we can build this ourselves without having to go out and buy it. But the fact of the matter is, it's much more cost effective for most operators to go out and say, here's a startup that's doing this really effectively. We can white label their solution and have social features, right, embedded right within the BetMGM app or the PointsBet app or wherever it is, without having to sort of align where our tech resources are going, making sure that we're hitting California or Texas or Florida when it comes around, without scaling our team and taking on the operational overhead that comes with that. So I think it's really just a cost-benefit analysis, and depending on what sort of priorities from a product perspective you want to have jump the list, and you want to make sure you're hitting in a certain time frame, and then finding technology providers that align with that. I think the problem that a lot of operators are starting to see with the white label model is when a white label provider becomes so popular that it goes from being an offensive tactic, meaning we have this and it's a differentiator and nobody else has it, to a defensive tactic of everybody has this, we're all paying the same price, and now they sort of own they sort of have the leverage over us in terms of increasing that price because you can't not have it within your product stack in order to compete. So there's a lot of talk about exclusivity when it comes to white label providers on the product side. That obviously comes with it's expensive. So it's interesting to see who pops up to compete with one another as well. Like, it's going to become, I think, a little bit more operator specific, who's working with, for example, one social feature provider versus another, and having them compete with one another so that we can maintain that sort of sense of this is an offensive tactic of innovation rather than a defensive tactic of we're going to lose out on market share if we don't have this feature.
of it being a cost-benefit analysis is exactly correct. And it's a different cost-benefit analysis for each operator and for each use case. And just so, for example, in some use cases, being differentiated and being the only one that has something is extremely important. In others, like geolocation, for example, as long as it works and locates the person really quickly, DraftKings probably doesn't care if FanDuel is using the same backend technology, and that's why GeoComply basically has a monopoly on geolocation right now and works with almost every single operator, whereas there are other cases where it may make more sense to build if differentiation is absolutely paramount. It's also why I start to see a lot of quasi-exclusive deals with white label providers where an operator will say, we will integrate this and sign an X-year deal with you, but you cannot be integrated with more than 3 other U.S. operators at any given time. But it really just does come down to the cost-benefit analysis, as Zach said.
And regulatory considerations sort of operate outside of this framework, honestly, because that's an existential issue, right? If you're not, accommodating what the regulator requirements are in a state, you can lose your license for not doing that. So it's like regulator providers tend to get a pass on this sort of exclusivity, offensive versus defensive tactic like mindset. Whereas it's really like the more innovative product sets, feature sets that we're looking for a little bit more, like we want to have some sort of differentiator based upon some commercial relationship with the provider.
And Anna, did you have something to add?
Yeah, I just wanted to jump in there on, product innovation, and Matt, you kind of mentioned it over time with what Sky was doing. And I know when we opened up in the US market, mobile and poker were all we were talking about. And mobile and poker was hard to be good at 10 years ago when network connection was slow, battery drain was a massive consideration. We needed to start looking at how we were going to geolocate. And before we were on the market, a lot of the regulators were wanting us to look at GPS data. And you can imagine, you sit in a tournament, you're playing poker for 3 hours, and we're pinging your geolocation because you're sitting on the New Jersey-New York border every couple of seconds to make sure you don't cross that bridge. And so sometimes what we see, especially in this market, there's this like period of time of like, what is the platform? What is the internet bandwidth? Like how many people do we need on these sites in order to have an engaging social experience, right? And especially with liquidity, it was a big issue, which is why we saw Delaware and New Jersey sign up together, because there just wasn't a huge population in both locations that were making an engaging experience. So I think a lot of what we look at when we look at innovating in this space is like, where is the market at? Like, what are the regulators willing to consider? What is licensable? What is going to help us get into each market? We're all in a race to get to every market first. You have to be there, you have to be ready. And you also need to sign on partners that can get there with you, right? And having that capacity and that licensing team and whatnot to facilitate that. So there's so much to consider when we're looking at how we can create these multi-state solutions that engage both our land-based requirements and online and bringing that together. And I think that sewing in like how the hardware and how users are interacting with our companies is really important, as much as what the regulators' considerations are and actually how we can innovate in some way.
That's right. There's a lot more nuance to all these discussions. We've touched a couple of times on the point of resources, and of course the market's sentiment on the overall online sports betting industry has changed a lot in the last 12 months, particularly as it relates to valuation, sort of getting a reality check. I'm curious to hear from you all, do you find that that is having any sort of a dampening effect on how many resources are being put towards things like product innovation right now?
I would say from our side, yes. It's sort of on two ends, right? Like when margin is slightly lower than you're expecting on one product or another, that will manifest itself in not so much, I guess we're not seeing as much of a pullback generally in product innovation and development. We're seeing it more on the marketing side. Okay. So when you aren't getting the same amount of average like revenue per customer that you acquire, obviously that factors into your cost per acquisition projections. And then when you have states that regulated a 51% tax rate of GGR, it makes it very difficult to justify marketing investment, knowing that there's the window of making that investment back, regardless of what your CPA is going to be so long that it might not really even justify marketing actively in a given state. So I think the correction for us, having two publicly traded parent companies has definitely manifested itself in more of a marketing come to Jesus moment rather than product innovation. I think the product development team is always going to be somewhat fixed. I'm not sure if other operators see it the same, but like product is full steam ahead at all times, and we're always trying to get more resource from both our parent companies and in-house as much capability as possible from a development standpoint. But on the marketing side is where you make those course corrections, I think, when the market corrects in the way it does.
One thing I would add to that is that to the extent that some brands pursue product innovation by way of mergers and acquisitions, and at this time last year, a lot of companies were pursuing all stock deals or mostly stock deals that to the acquirees felt very attractive and to the acquirers felt not that dilutive. That entire landscape has changed entirely, and it just is much different to be able to pursue an all stock deal or a mostly stock deal with levels and valuations where they're at today. And to Zach's point, it is not always so easy to expand and contract the product development team in-house, and that's why a lot of companies have looked to acquisitions to formulate and underwrite their own product innovation, but especially the all and mostly stock deals, those have really slowed, if not come to a halt entirely for now.
And of course, we've seen just huge growth in legal sports betting here in the U.S. since the repeal of PASPA, but there's also still a huge segment of the population that does not yet have access to legal betting. This is something we were sort of talking about last week, but what I'm interested to hear from you all. What do you think it actually takes to win over those users in markets where legal sports betting is available from the offshore accounts? Is it about the brand? Is it about the innovation? Is it both? Tomasz, yeah, if you want to kick us off.
I have this theory that it's accessibility, right? Like if you think about the sports betting experience, it's not very accessible. What is plus 120? Ask someone who doesn't bet on sports, they don't know, right? That makes the experience inaccessible. Whereas if you walk through a casino floor, what do you mostly see? Slots. Why is slots accessible? Because it just takes a single click and then something happens and it's highly repeatable and you get dopamine every time you spin, right? So this notion of if you plot accessibility on the x-axis and then immersiveness on the y, then you find that sports books are highly immersive because you have money riding on the outcome, but it's not very accessible. And then the free-to-play games that, like a Pick 6 game, it's extremely accessible because it doesn't take much to do it, but it's not very immersive because you've done it in 15 seconds and then you forgot about it. It is not changing your experience of watching that game. So how can you create something that is both highly accessible and highly immersive, like the slots experience, right? Is the key kind of question to ask about what the next generation of sportsbook products is going to look like.
I would just add, I think for as long as the offshores are providing credit betting, people will be attracted to them. If sports betting is a 7% hold business, in theory, if you're betting responsibly at an offshore book, you only need to put $7 aside to place the same amount of bets that someone on BetMGM would need $100 to deposit in order to place. And on top of that, because the offshore and pay-per-head sites tend to be less strict on KYC, AML, geolocation, and often do not have a payment processing component, the sign-up and sign-on process is just a bit easier. And so I think that aspect of the accessibility leads to your question. It really is, I think, more of a product innovation and experience battle than a brand-related one.
Just jump in there. The AGA has been running a lot of polls on finding out, I mean, how are we doing at converting players that were initially engaging offshore? And I mean, what is that? What is the thing that we can do more of to convert them as markets start licensing and passing bills? And one of the interesting things that we have seen is that data has supported that in New Jersey, they have converted the most amount of people. And in the early days, we had done a study and realized that the majority of Americans really don't know the difference between a licensed operator from a non-licensed operator. And so there has been also a lot of discussion in our industry about advertising and is it helpful or does it have a negative impact on our industry? But the reality is it has also helped us convert and educate players to what is a licensed operator and get more familiar with these licensed brands that offer them security and protections, protects their community. You know, as a bill passes, legislators are mostly concerned about, are people of age that are participating? Is there going to be protections against fraud? And is there going to be some mechanisms for responsible gambling? And that's really the questions that enable each of these states to open. And so I think that there is a lot of innovation that still needs to happen and communication that needs to happen with the media to make sure that they're only publicizing odds from licensed, reputable gaming providers, and that's something that's actually come a long way just in the last 5 years. And we've been having these conversations about the legal US market for quite a while. So because players have been interacting with these brands for so long, and they don't know that when they use their credit card that it's being miscoded.
Right, they just know it's legal in New Jersey, so wherever I can bet, it's likely legal.
Exactly, and so that like experience that the average American is having is still something that we need to engage in order to educate them to play with BetMGM.
Thank you. Yeah. The only thing I would quickly add is, a paperhead or an offshore book is generally not going to give you a deposit match after you've played through a certain amount of money. It's generally not going to give you a free bet if you had a bad weekend on NFL or whatever. So there's a certain amount of retention offers and bonusing that factors into this, just because people feel like they're getting an added value from converting into the regulated market. A lot of that's going to go away as attention turns to profitability and like EBITDA positivity, which I'm sure we talked about in our investor day, which is going on right now. And you start to optimize your bonusing. But what won't go away is if you can find other ways to plug into things that customers are already doing, like the MGM Rewards program, right, where they feel like they're getting added value for converting to a certain regulated book versus another. And in DraftKings, it might be their swag room or whatever. All of those added value incentives that offshore books just simply can't offer is probably a big factor. But I totally agree with Lloyd. There's a certain amount of people that the lure of betting on credit is just, and the seamlessness of the journey, because they don't have these regulatory requirements, is you're never gonna get over that. You need to figure out who that is and just avoid marketing to them in a wasteful way.
Just as we wind down here, I think, does anybody in the crowd know who Bruce Linton is? Show of hands, nobody. He's the founder and CEO of Canopy. It's about a $15 billion publicly listed company. He's probably the single most progressive person who legalized marijuana in the US. He's an investor in our company. The reason he's an investor in the company is he thinks over time, it's not just regulatory change, but consumer habit change that moves from illegal to legal. And he said, just be patient. And we have time on our side. And so I think there's a couple things here. First is the current cohort of bettor. If we just took that as a pie chart and said, do they know the difference between legal and illegal? Probably correct. They don't, and they don't probably care. The piece that we're fighting over is not the current cohort of bettor. It's the other, 280 million who haven't placed a bet yet, and that's much more interesting to me. And it's the people who wouldn't smoke a dodgy cigarette unless they can buy it from somewhere that they know it's not going to kill them. And so I think that the idea of it being legalized is part one, but part two is actually we're changing who's going to be smoking dodgy cigarettes or placing online bets. And we can do that because we can communicate with them differently, and we can help create franchises that create trust. But I think that, I just saw Bruce 2 weeks ago, and he would say probably the number one ingredient in that is time.
Well, it's an optimistic note to end on. Thank you very much for our panelists for being here. Great, thank you. Next up, we have our keynote talk from Evolution Gaming.
Good afternoon, my friends. I'm excited to be here today. And today I'm going to take on the question of what are the winners of the iGaming industry in America going to look like in 5 years from now. But first, I would be remiss if I didn't acknowledge that it's a dark time in the world. And I can't imagine the power one man making one action can have on the world. I heard a Democratic senator the other day say that it feels like the end of the world. But enough about Elon Musk buying Twitter. So I'm Todd Haushalter. I'm the Chief Product Officer at Evolution. And I have a unique perspective of the industry because I get to see and work with lots and lots of great operators. Do unto others as you would have them do unto you. The golden rule. Been said by Jesus Christ, Socrates, Plato. It's ingrained in most of the religions of the world. And before there was ever ESG, we all just knew the golden rule. But I would like to contend that the golden rule maybe applies to business. Maybe if you do unto customers as you would have them do unto you, it might be a recipe for success. And as I thought about this question, what are the winners of online gaming going to look like in 5 years from now? I looked outside the industry. So I'd like to just talk about 3 companies that are living by the golden rule and doing a good job of it. The first one is Apple. Apple lives by the golden rule by all the things that they don't do. They control your eyeballs. You look at your iPhone 100 times a day, and they don't advertise to you. They don't push stuff on you that you don't want. Privacy is a religion to them. Everything just works perfectly. They agonize to make sure that apps don't end up in the App Store that don't work the way they're supposed to or as advertised. They have free classes in their stores. People just want to hang out. You want to be associated with Apple. It's an aspirational brand. Amazon, powerhouse company. For a small fee every year, they'll give you unlimited shipping. They constantly are trying to make shipping faster, make their prices lower. They make returns as easy as pie by partnering with companies all around the world so that you can just quickly send it back. Insanely big selection, right? And then on top of that, they give you free movies and music streaming as well. You don't even consider buying anywhere else. And finally, I want to talk about Southwest Airlines. They have the biggest market cap of any airline in America. And to my knowledge, they're the only company that gives you 2 free checked bags. That's the golden rule. That's how we want to be treated. Seems simple. What else do they do? If your plans change, there's no change fees. They just let you change it. They also give you free TV and movies on every seat. They don't charge you for it. They have a loyalty program that's amazing. Unlimited seats available on every plane for loyalty points. And on top of that, your points never expire. When I'm interacting with other airlines, I feel like I'm at war with them. That's how it feels sometimes, like you're at war. You don't even want to call them because you're worried about the fees you're going to get stuck with. 3 companies, all living by the golden rule. And now I want to look at 2 sectors within iGaming. I want to look at the operators and the suppliers and take a stab, even a prediction, at the behaviors that they're going to be demonstrating when the top 1 or 2 or 3 winners emerge in 5 years from now. Okay, first the casinos. They're going to have a generous return to player percentage. I know this is a controversial subject. Everybody likes to have a different opinion on it. Sands is the biggest gaming company in the world, and they run the entire company on less than a 2% house edge. I've never heard a player say, I would wish you would figure out a way to take my money just a little bit faster. They're going to have a friendly loyalty program that's easy to understand. It's going to have natural tiers. You're going to be able to use your points. Maybe you'll even be able to use them outside of the site. It's going to be simple, usable. It's going to make you want to bet more. They're going to give you lots of gifts. And they're going to do their best to eliminate wagering requirements. Getting $100 isn't that useful if you have to bet $2,000 before you can get it. And I know it's hard. I know it's hard because I get that there's bonus abuse out there and everything else. And that's why the winner of the future is going to be a completely AI-driven site. And the AI is going to help you identify the bonus abuse. You're not going to be constantly getting beaten by them because the AI will be able to detect it in all sorts of fancy ways. AI is also going to help your players find games that they're looking for just sort of magically. It's going to make relevant bonusing. I don't necessarily know soccer, but I get a lot of emails that there's new soccer matches and I should come and bet. And it'll even help with problem gambling, which is pretty cool. This one speaks for itself. If you want your money, you're just going to be able to get it. I don't see any casino being dominant in 5 years from now and making you sit on your money for a few days before you can get it. The customer service is going to be perfect. Gamblers are a finicky, fussy crowd. And when things get sideways, they want somebody on the phone now, right now. They don't want to wait. They don't want to have a bot talking to them. They want to talk to somebody about why their bet got rejected, why there was an accident on the table, why their slot didn't pay out as they thought it should, or whatever. They want it now. And they only want quality games. It's not offering your players wide variety if it doesn't work that well on an iPhone 6 or a Huawei P10. You know, you're only going to have good, high-quality stuff, and you should hold your suppliers to a high, high standard. Apple makes sure the apps that hit the App Store work. And you'll be able to bet on everything, everything under the sun. Some operators do a really good job with this right now. They'll be able to get every bet down you can possibly imagine at reasonable levels. And you'll be able to bet by voice. Alexa, what's the line on the Giants game? Giants -5. Bet $50. Confirmed? Confirmed. It's going to be a lifestyle brand. You are going to want to be associated to the iCasino that is the winner in the future. You proud to say, I'm going to the Bellagio, I'm going to win. I carry an Apple phone. That's how you're going to feel about it. And you're going to see it in pop culture. When you watch television shows about sports and things like that, you're going to see their brand. You're going to see it on YouTube. You're going to see celebrity associations. And then they're going to have an offline presence as well. Offline presence can mean many things. It could mean that you have associations with restaurants and sports bars. It could mean that you have your own casinos. It could mean stadium experiences. It could even mean like the American Express lounges that you see in airports. But they're going to have offline touch points for sure. Maybe you'll even be able to use your rewards at gas stations, things like this. But you're going to feel the presence offline. And everything's just going to work. Like Instagram, like Facebook, like all the apps that we're used to using, like YouTube, everything just works. There's not going to be any downtime during the Super Bowl. You know, all devices, all browsers, all operating systems. If you have low bandwidth, it's going to stick with you and hold your hand and keep with you. The games are still going to function. It's hard, but everything is just going to work. These are going to be the traits of the casino that's winning the future. Everything's just going to work. It's going to be fluid. You're going to want to be associated to it. And it's basically following the golden rule. This is what we want. As players, it's what we want. Let's talk about suppliers. So on the supplier side, you've got a wide collection of groups there. You've got platforms. You've got sports betting services. You've got slot makers. You've got bingo. You've got services, third-party services, crunching data, payment services, all sorts of stuff. I understand live casino the best, so that's where I'm going to focus. And I'm going to answer a question that I get asked all the time. I get asked by investors, I get asked by people in the industry. Real simple. Why is live casino so hard? Pretty straightforward question. Isn't it just this simple? You just put a camera in front of a roulette wheel. This is young evolution. You just put a camera in front of a roulette wheel and enter the result. Actually, yeah, it is that simple. But nobody's going to play that product. To get everything just right is backbreaking. It's incredibly difficult. Doing live streaming video to one-to-many players, it just wants to break all the time. And then new versions of Chrome come out, new iOS comes out, it just wants to break. We're 16 years at this. We struggle every single day with this. And we're spending $30 million a month running live casino services. It's a very hard thing to get right. There's a list that was shared with me. There's 41 live casino providers out there right now. And I was surprised. I didn't know that there was that many. It's a robust group. And many struggle. It's very tough. It's very expensive to compete. We've seen land-based and online casinos alike go into the live casino space, and then they go out of the live casino space. We acquired NetEnt, and they had a 500-person operation. By most measures, one of the most successful live casino companies out there. And when we finally got our hands on it, we were shocked to see that it's bleeding money every single month. It's a very hard business. You can see Authentic Gaming on this list. Very good company, very capable operators. Been sold 3 times in 5 years. First, Leo Vegas bought it, and they sold it to Genting, a very capable land-based operator who knows how to move cards around a table for sure. And then they sold it recently to Games, Light and Wonder. I don't think that's a reflection on how, on anything other than just that the space is hard. So now you want to get into the space, and what's hard about it? First, you got to build studios. And studios aren't just studios. They're basically like tech centers plus a movie studio plus a training facility plus an office. Oh, and by the way, it's a casino that has to be heavily regulated at all times, where regulators have all kinds of nuanced different rules and jurisdictional nuances that you have to follow everywhere around the world. So that's fine, you can do it. Every challenge, every location is a new challenge. And you've got to build these things in areas that are like near bus lines and train lines so that all your staff can get to the operation. But it's also a tech center. So it's not exactly the techie part of town. Well, you might struggle with having stable electricity, something we've struggled with in multiple jurisdictions, because this is a serious 24/7 energy consumption business. And so then you have to poke holes in the ground, run electricity lines, close roads to do it, work with the local governments. It's just a hassle. Then you've got to integrate all of that at your studio into the global tech, maybe drop in a pandemic, where there's new rules being written every day about how close you can be to each other, how many people can be in the building, working closely with the local governments to stay running during the pandemic, different studios around the world. It's hard. It's really hard. Then you have on-camera operations. So you've got your studio built, you're ready to rock. First of all, you're just constantly hiring. It never stops, because you're hiring these youngsters and students and like that are your dealers, and they just turn over fairly quickly. That's just life. And so, we're hiring like 1,000 people a month, maybe 250 people a month in the United States right now. And it's very, very tough. So you bring them in and you push them into your training academy, which you have to have. So you can teach them how to operate and function inside of a live casino. And there's just procedures for everything under the sun. Because this is human beings dealing cards, right? Card goes on the floor. Dealer pulls 2 cards. Dealer accidentally exposes their whole card. Dealer spins the ball and it doesn't make enough revolutions, so you have a no spin. A dealer spins the ball and it flies out of the wheel. 2 dice land on top of each other. Dice lands on the side. Dealer freaks out in the middle of a hand and just goes crazy. Dealer says, screw this, I'm not going to see it. I'm just going to go to the bathroom. Walks off the table. We've seen it all. This is life with human beings. It's not like the slots business where you just plug them in and make sure it stays plugged in. Hard, really hard. So now you've got your training center, you've got your dealers, everything's running, it's pretty fluid. And you've basically focused on 3 things operationally. You want the games to be without mistakes. You want them to be at a reasonable speed, and you want the dealers to smile and be friendly. And boy, do they fight each other. So you want the dealers to be friendly? Great, they're going to slow down. You want them to be mistake-free? That's going to make them slow down. You want them to speed up? Great, but then the mistakes are going to go up, and the players are going to flip out. And then you have to treat your new dealers differently than you treat your more seasoned dealers. You have to have a compensation structure that reflects all of this, and then you have to track it with hopefully a homegrown piece of software that you've written that meticulously manages all this, just so that you can offer the players a game that's mistake-free, fast, and friendly. It's a heck of an effort. And then you make a religion out of what we call games till mistake. So how many games do you deal before a mistake happens? And you have to make a religion out of it while trying to do the other things. It's a very tricky thing. And then once you've got all that going, great. Now do it all again with the new staff that you bring in. Do it all again in a new location. And do it all again when new games come out. It's hard. And you got off-camera operations. So you've got customer support in many, many local languages. You've got uniform controls. You've got a scheduling office. You've got a chat moderation. What's chat moderation? Well, players get nasty in the chat. They write miserable, horrible things to each other and to our dealers. It's crazy. And you have to have it moderated in real time, 24/7. Your bots will not work. There is more ways to write FU than your bots can detect, I assure you. And so we have a team that works around the clock just to keep the chat healthy. You know, who knew that you even needed that? And that's just the price of doing business. Then you have to have systems for everything. Nothing can be manual. If there's a fire alarm in the middle of a blackjack hand, what are we going to do? This guy was dealt a blackjack. This guy had a 20. A dealer's got a 6. What are you going to do? You have to have a procedure. You've submitted it to regulators, maybe different regulators in different jurisdictions, right? What are you going to do? You have to have refund tools built so that you can get the players back their money, so on and so forth. So you have to have people, a team that does nothing but shuffle cards. They do nothing but shuffle cards and move cards and dice around the building in a secure way because you're running a casino, right? And then there's risk and surveillance. I could go on for hours about this subject. This is a super fun one because it's the bad guys, right? And on the screen here, you can actually see in the top left, there's a wheel bias that detects if the wheel has a natural bias. Or you can also do wheel clocking, which is fun. That's basically predicting the ball speed and the wheel speed. And then you just turn it into a physics problem. It tells you where to bet. When you write a bot, it'll just do it for you automatically. And so you have to have defense mechanisms against that. Shuffle tracking. That's when we identify dealers that have a weak shuffle. Ace tracking, so we can follow the aces through the deck. That's what you see there on the top right. Aiming for sections, if you have a dealer that's spinning the giant wheel, aiming for sections, how are you going to stop that? You can also do it in roulette, a lot harder though. Internal threats, gaffed equipment, you name it. There's just an unlimited supply. And there's big money. You know, you've taken bets that are well into the thousands, and so there's serious money to be gained. In Las Vegas, if you use your phone to card count in blackjack, you go to prison. It's illegal. It's against the law. Of course, every player online can do that. It's just how it works. Tough environment. And more than a few operators have learned the hard way not to take game protection lightly. They can bankrupt casinos. They wake up after 2 years, they think they had the best blackjack players in the world, only to realize that they've been getting card counted or they had marked cards in the house the whole time. It's crazy. And then there's product, and this is where I live every day. It sort of speaks for itself. You want to make games that players love. But I thought I would give you just a fun example about what you got to do is you got to agonize over all the details to really delight the players. So on the screen, you see something called a dice tower. And we were doing a game that has 3 dice. And I put a challenge out to the team. I said, hey, what's the most fun possible way that you can roll 3 dice? Okay. So the guy comes over to my desk and puts this thing on. I said, what is it? He's like, oh, they use them in Dungeons and Dragons games, et cetera, et cetera. I'm like, yeah, okay, what? No, let's build a big giant thing. It'll be awesome. Like, okay, prove it out. Okay, this is how it looked. You think a company of our size, we're probably like pretty good at this stuff, and this is how it starts. And it moves on to this one. I think it's just the most fun way you could possibly roll 3 dice. And it just shows, you know, you're going into the fine agony over like, what's the absolute most fun way to do this? I think the players are delighted by that. Last section I want to talk about is technology. It's easy to stream video one-to-one. Streaming one-to-many with perfect video sync, not having the cards not having the digital information show up before the card, doing that across far distances, on all devices, on all browsers, in all forms of bandwidth, it's very, very difficult. As I said, it's just constantly wanting to break. We have a 30-person video team that does nothing but optimize for different devices around the world. It's so tricky, and you're just always frustrated because it's never good enough. I know I'm not. And you're only as good in online gaming as your worst playing experience. To get it right 90% of the time, you're out of business. Because every 10th hand, there's a mess up. Players flip out when there's a problem, and then they never play you again. So sportsbooks, platforms, bingo, it's all the same thing. You have to just offer a beautiful, seamless, fun experience that just never breaks. I think of it as a flawless playing experience, not so much tech, just a flawless playing experience. And there are enemies of the golden rule. There are 3 specifically that I can think of. Number 1, short-term gains. We can't do that because it's going to take too long for the players to learn that we're running higher RTP. We don't want to do it. We got this quarter ahead of us, too expensive of a project. Simply, we just can't. I mean, we're not in that space. We don't have restaurants all around the world. We don't have associations. We don't have stadium associations. That's not what we do. We're a tech company. And finally, my favorite, I don't hear players complaining. That's a good way to set me off in a design meeting. I don't hear anybody complaining. Yeah, no, they're just leaving. I assure you they're complaining. But just try to think, how can you delight your players? So just do unto others as you would have them do unto you. Apple, Amazon, Southwest Airlines, they follow the golden rule. I'm pretty confident that the winners of online gaming in the next 5 years are going to be following the rule. And it's going to be hard if you try to implement this. There will be pain. Your company will fight you, but the players will embrace you. Thank you.
All right, everyone, we're going to take a break for lunch. We'll be back here around 2:15, I think the next session starts.
Everybody, I hope you enjoyed lunch. We've got lots more to talk about today and tomorrow. Very interesting day. You know, this is kind of a tale of two cities, right? We've heard about all the competition. We've heard about why valuations are down because too many companies spending too much money. But we also heard that New York has been a huge success in terms of volume, and we've got several other states coming up, like California and other big states, that could make a huge bit of difference for this sector. So Brendan Bussman and his team is going to tell us about that today and take that question on and see which city we're really in.
Very good. Well, pleasure to be here. Pleasure to see all of you. At least I saw you before the lights came up. Now it's a little bit bright. As Rob talked about, we're here to talk about the Big Four, and that's not the Big Four blockbuster movies that are going to be out this summer, but actually on sports betting. I'm going to let my colleagues here introduce themselves, and then we'll jump right in with New York. So, Richard?
Richard Schutz. I started dealing for Bill Harrah in 1971, which I think is longer in the have a life expectancy. Sure, been alive. Up a lot of different take us for a great deal of time.
Yeah.
You don't know how lucky you are.
Sorry about that. We're going to use that instead.
Yeah.
Is this a weapon or is this a microphone?
Should I scoot over to this chair just to be safe?
My name is Richard Schutz. I started dealing cards as a college student at night to finance my education. I ended up spending quite a bit of time in a PhD program, 2 years writing on the Nevada regulatory situation, the development of that from 45 to 66. I then became a college professor and realized I was making fundamentally more money as a dice dealer, and so went back to the industry. I've had the opportunity to work for Mr. Wynn, Mr. Adelson, the Boyd Group, Howard Hughes Group, and a lot of different people. I'm developing some absolutely wonderful story because all my fact checkers are dying. I also got the revolving door backwards, and so after 30 years in operations, up to and including being a CEO of a Las Vegas casino company, I became a regulator. I knew there was a revolving door, I just didn't understand which direction you were supposed to go through it. I was a regulator in the state of California, which I think brings me here today. I was appointed twice by Governor Brown. I was also the governor's consultant on iGaming, and I was also the legislative consultant to iGaming. And then I've done a bit of consulting here and there. I'm on the board of advisors for the National Gambling, or National, I forget what it is. I'm not a good board member, but National Problem Gambling Group, and also All in Diversity. I do quite a bit of publishing about women's issues and other things, and that's who I am.
Right, you want to go?
No, you go first.
Okay, go. All right. Hi, everyone. Per Hellberg. I'm doing what people think a lot of people shouldn't do, listening to a lot of conferences today, and that is doing a startup in this market, about to go live about a month from now. But we did a little bit different angle here. We thought that why don't turn everything around and focus on casino first, and put a lot of deal of personalization, niche target marketing, etc., to avoid the big marketing spend, but also actually have control over your total operational cost. So stay tuned and watch the journey. Yeah.
Katie?
So I'm Katie. I'm the co-founder of Webify.se, and I started in the this industry 11 years ago as a customer support agent at Betsson. Then I've worked my way up in the last 3 years. I've been working with Hard Rock in Atlantic City, helping them with their marketing. Yeah, let's get started.
Very good. Well, obviously we're here to talk about the Big Four. We're going to start with New York, since that's where we're at, it's where we're here. Market launched in January, has one of the highest tax rates in the country, but has all the big players, for the most part, that have or will be starting up. What are your guys' initial thoughts about the market? Katie, I'm going to start with you, since you're on the end, and we'll work our way back here over it. But, you know, has New York been a success? Is it yet to be determined? Where are we at with things?
Has it been a success? Yes, but I think New York operators are, like everyone's saying today, they're focusing too much on acquisition rather than retention. And I think if they're gonna keep their players, they have to switch focus. Like, it's very crucial now that they start focusing more on keeping players because there's no real brand loyalty right now. I think it was Betting Hero who is at the other room right now speaking. They had a research where they showed that 3.3 betting apps are being used by New Yorkers right now. So they're going between these 3.3 apps to figure out which one they want to stick with. And now these operators have to make sure that these players get more loyal, they stay there, and yeah, I'm not seeing that right now. We've seen, there have been some shockers with Caesars, there's been some action with DraftKings. So yeah, I don't know, what do you guys think?
Well, I think you can definitely classify it as success in one way because they have gone live. And I think we need large states to go live because I think that gives kind of reference for the ones to follow. Given the cost to go live, though, is quite expensive, as you know, both in terms of taxation, licensing cost. And I think the combination of companies you need to together just to operate, that also kind of leads into maybe a little bit legacy kind of work, you know, how to run the business. But it's up and live, and let's using it as a kind of marketing tool to go into more states. I think that's successful. It will be a while until we break even. But yet I hear now rumors that there are going to be more states, more operators potentially come live, etc. So we'll see. I think it's a good move, for sure.
I really don't have much to say about New York. I think the most significant thing about New York is the operators leapt at the opportunity to pay 51% tax rate, and that's going to probably be something they carry with them for a while in other jurisdictions. I always make the statement that I wasn't surprised that they shot themselves in the foot, but I was startled at the speed of them reloading in subsequent states.
Richard, you talk about that, and I think this will help lead into the other three that haven't gone live, with the exception of Florida that had its brief 1 month window or whatever, how many weeks that was. But, you know, if you're a legislator out there in a state today that is looking at what best do I, you know, use as a model, and you're looking at New York that just went live, you see the volume that's coming through here. What do you say is put on your operator hat first before we go to your regulator hat? You know, what do you say if you have a state that says, well, why can't you be more like New York?
Well, I mean, when you have a system like the United States, the state has a right to have a public policy, and I mean, Pennsylvania was kind of a classic example. Everyone said that wouldn't work, that tax rate wouldn't work, and Pennsylvania legalized gambling for a very simple reason. They had a $2 billion budget hole that they couldn't fill. So they didn't care about if there was black market gambling, or I mean, those weren't their priorities. They wanted to fill a budget hole, and they did, and it worked, and so it met the public policy goals, and you have to allow a state to have its public policy goals. Unfortunately, Pennsylvania quickly dug itself into another hole, and so they've had to legalize across a whole large number of verticals, and they anticipate the next product that they'll launch is slots for tots in the school system, because those politicians can't keep themselves out of debt, and that's how they solve it, with gambling.
Well, and I think you bring up one of the very interesting points about the public policy goals of a state. And obviously, as we start looking into the other three states that are out there, you know, there's some states as Pennsylvania, and I was the beneficiary of this, you know, when they did legalize it, and doing that back in 2004 with the act to do slots, and was fortunate on the table side, but some look at it to fill a budget hole, others look at it to be drivers off of everything else. Let's go to Florida, which obviously was hey, let's get some money in the door, let's go do a compact, and let's see if we can get everybody else to go along with it. And then the court said, yeah, let's hold off on this a little bit. Katie, I'm going to put you on the spot first on Florida. You know, one, was what we saw avoidable? Let's start there. You know, let's say, did we know this was going to be the inevitable of where we're at today?
No, absolutely not. I actually was surprised when FanDuel and DraftKings went in with so much money as they did, like, to stop Florida more or less, because they stopped it for everyone. Like, and I think that wasn't obviously their goal, but I think we talked about this before. Like, the thing with Florida is also you have to consider it's a lot of, in the U.S. states in general, it's a lot of tribes. It's a lot of tribes you have to consider. And in Florida, it's the Seminole tribe. So that's not a tribe that you really want to, yeah.
You can say it.
Yeah.
It's okay. We're all adults in the room here.
They're very big, Seminole tribe. So, no, I'm going to let you guys continue on the tribal side.
From your perspective, obviously there's a lot of dynamics that go into Florida.
Yeah.
You have the compact. You have what was Amendment 3 that passed in 2018, some 4 years ago, that has made it very challenging to get things done on the ballot. That was done purposely by a block of the tribe down there, as well as the mouse, which is the 800-pound elephant in the room, or mouse. As you want to say, how does Florida move forward in this effort? Where's their light at the end of the tunnel and not the train getting ready to run everybody over?
Well, if I knew, I wouldn't tell anybody, right? But I think it's difficult today, and we see this pattern in a long way, where you think you will walk into a logic decision to come up and launch gambling. But there's so many interests. Land-based want to protect their revenues. You have the onlines want to come in. They push heavy numbers in there. And it's understandable why they do it, because they want to protect and push others away. But we also have to remember something that is a bit frustrating when you're running gambling, is that for the consumer, you need also a lot of choices in the market, especially in casino. If you only have 4 operators, it's too little. People need to churn between these operators, etc., to create long lifetime value, because they think they're stuck by unlock, right? So they need to go to new ones. And all these things is preventing this from happening if you kind of limiting the amount of people that can operate there. But as long as they're coming in and want to do that, you have a strong tribal, you have the big guys coming in with the big kind of fees coming in. I think in the end, what's just for Florida, difficult to see in the movements right now what will happen, to be honest. I think, once again, if I knew, I would really benefit from it now and do my fortune on it, but I don't want to bet that.
Yeah, Richard, and you've been around this industry a long time. There were 2 ballot measures that tried to say, we're going to figure out a different way to do it than the compact that is still in the courts at this point over what that does or doesn't mean. You had DraftKings and FanDuel leading one that spent tens of millions of dollars. You had Sands that took a different approach that spent at least $75 million. What's it cost to get a ballot initiative done in Florida, and is that the best path forward?
I mean, I really never met a Mike I didn't like, but I don't have a lot to say about Florida. I mean, first of all, the way that Indian law oftentimes is like voodoo economics. They just make stuff up. And it seems that they have done that in Florida. Indian laws are very inexact science. And then the government of Florida has gotten a bit weird. And the Seminoles, I don't have anything to say about Florida. I can't make sense out of that. I just can't.
Do you have either anything to add as it relates to Florida and potentially a path forward for anybody, and any wild predictions on when we may see anything there?
I mean, horse racing is approved right now there. And I think in the next 2 years, they will hopefully have some progress there. But I think just tying it into California now, when we talk about signatures, the problem with California was that they couldn't verify, I think it was half of the signature was. Please correct me if I'm wrong, I don't want to. But the same thing now in California is what they're kind of worried about, that they won't be able to verify all the signature that is up in California. Have you heard that as well?
Obviously, part of the latest signature gathering process that came in, the 1.6 million that they had, that will take some time to do. And obviously, we've seen the process as it relates to the first initiative that was on there. And I'm jumping the gun because I was going to start with California with Richard here first. But I think obviously signature verification is one that takes a long time, and it's going to be quiet until they get through that process. So let's jump into California, since you made that great segue. And I'll remind everybody, I want to open this up for questions. I know you can do it through the app, and I've been monitoring that alone. But I want to make sure we leave enough time at the end for those that may have some questions from the audience. Richard, you brought up you spent some time in California. You've been advisor, so I'm gonna kick it off with you, and maybe give a little bit of background. Let's start there over what's left and what the fall looks like as we're heading into this fall, and then we can sort of get into delving into the details, because obviously 2022 is a big election year for California as it relates to sports betting.
Yeah, I believe there's going to be two ballots on the measure. I mean, two issues on the measure. One is going to be what's known as the tribal initiative, which is already cleared for the ballot. The other is what's known as the commercial issue. There was a secondary tribal issue. A lot of people were surprised about that issue being held up just recently, and anybody that had followed tribal gaming in California should have known in the first week of March with the election of Lynn Valbueno of the San Manuel tribe that that was done. That was done because she happens to be more aligned with Pachanga in a general sense. And so I think you'll see, and the city's measure is just a dog with fleas, I think, and won't go anywhere. And I don't think it's going to be sufficiently well funded.
Is
That's
that
just
fair to
my
dogs
guess.
with fleas?
Yeah. So I think you're going to see two ballot measures, one on commercial and one by the tribes. The tribe is a retail only for 5 years, and the other one's a little different model. And that's a complex discussion. I was invited to Malta in November by KPMG and gave a 3-hour lecture of what's going on in California, and it wasn't long enough, so I don't know how I would resolve that.
We unfortunately only have 17 minutes left of our session, which is why, as I said at the beginning, there's a lot to cover in a little bit of time here. But
I mean, I do have some thoughts on California, and they're just dramatically different than anything that you thought you would hear probably today and here. And I joined the tribal segment in 1991. I had been an executive in Vegas for a number of years and had kind of burned out there and joined a tribal gaming company. And our first project was with the Mille Lacs Band of Ojibwe. And that was a tribe that was 90 miles north of the Twin Cities. It had a population that 65% existed below federally established poverty levels. The life expectancy for males in that tribe was about 44 years, and that was because of drugs and alcohol and doing stupid shit on drugs and alcohol and things of that sort. They had no health care. They were a society in absolute meltdown. And this was generalized, the statement of tribes across the United States. There was this kind of miracle of the legal allowance of tribes to have gambling. This really became material in California in 2020. And it's interesting to if you read the tribal history, it's not been one that's been favorable across the United States. It's been very genocidal. It's a terrible story. Even in California, about 95% of the tribal population was eliminated during and they were the last state in the United States as the European invasion, so to speak, took over. But in California, they took the children away from the tribal members. With the gold rush in the 1849 and 1850, the tribes had pushed themselves out into the remote areas. Well, that happened to be where the gold is, and so they went out and murdered them. They would actually hunt for tribes as a sport and stuff like that. So you do that for 3 or 4 centuries, and people begin not to trust you. And I think that you need to understand, when we put the casino in at the Mille Lacs Band, we took that population that was a socioeconomic disaster, and we gave everybody in that tribe that wanted a job. We gave health service for the very first time. We built elder housing. We had child care, and on and on and on. And I remember, and you can look at those statistics, but I was walking across the casino one day, and I saw a tribal woman at a Dead 21 game, and I asked her, "What does this casino mean to you?" And she said, "This very first time in my life that I've ever been able to allow my children to dream of an education." And so what you see is the commercial model of gaming is fundamentally different than the tribal model of gaming. And I only mention that because we have so many foreigners here, and I think it's important that you understand that. And so what's going on in California is kind of, in some views, a continuation of the tribes getting shit on. You know, I mean, I hate to say that so bluntly, But I don't believe the commercial interests really want to solve the unemployment problem in California. I just don't. You know, I think that's a fun story, but it's not true. I think they want to get into a market that has 40 million people and the 5th highest gross domestic product in the world, more than Great Britain, more than India. And so they're going to go into that market, and that has the potential. And I don't believe the goal is sports betting. I think that's the camel's nose in the tent. I think the goal is iGaming. And if the iGaming goes over an internet application in the state of California, that's going to have dramatic impact on the tribes there, you know, because they have had about 22 years of success in about the last 5 centuries. And that needs to be understood. And what I'm going to suggest to you is they're going to put up a fight like you won't believe. They are, again, fighting for their survival. And I wouldn't think they're going to roll over too easily. They're going to spend all they need to do to stop this, because they've been brutalized for 5 centuries in this country, and they don't want any more of it. This has been the one opportunity they've had in their life, and they're going to take advantage of it. And so those are the stakes. You know, I mean, that's probably a different vantage point than most of you look at it for, but those are the stakes in California, in my opinion.
Katie, I'm gonna go to you a little bit, because I think you know, Richard was very spot on of saying, you know, and to your point, Richard, you know, I always joke about the fact that if we had all the iGaming dollars when this tried to get done 10, 12 years ago, the industry would be really wealthy. But there hasn't been a dime off of that, because we've been through this battle once before. You know, if you're sitting there in California today and you've got 2 ballot initiatives, you know, how do you see this playing out from your perspective? One's mobile, one's land, one's tribal, one's commercial. You know, yes, the commercial has to go through tribes to be able to do that, but it's a different dynamic out there. What, you know, from your perspective out there, what's at stake, and how do you see this potentially playing out? And I know this is being recorded, but we won't hold you to it come November to say, were you right or were you wrong?
Well, so having been working in this industry so long, I would say that sportsbook always comes before iGaming. That's a known fact. That's how you get your players in, through sports, and then you retain them through iGaming. So I think having sports coming first, that doesn't matter. Like, it's still, as long as it comes through, it's going to be amazing. And I think Morgan Stanley went out and said they didn't believe iGaming, or sports betting, sorry, we're going to go through to vote in November, but now they are. So anything can happen. And I think Californians are probably very, very interested in sports. They're similar to New York, very like sport-oriented. And after the pandemic, they really, really need the money. They can see how much New York has been thriving now. They, in California now, are struggling problems with homelessness. And I think they know that bringing in sports betting now can generate a lot of money, a lot of employment that can help them. So I see you want to...
I was in California working for the government when the iPoker folks came through, and they said, do you realize that this could bring $300 to $400 million to your state? In California, we call that budget dust, okay? The suggestion of the state with a $222 billion deficit is going to feel the dramatic effect of sports betting, I think, is absolutely incorrect. You know, and I think that's a sales line that they're told. You know, I just don't believe it's real. I mean, I ran the biggest book in Las Vegas for a number of years. I know what a P&L for a sports betting operation looks like. I live that daily. You know, that's not going to matter to California's budget. I just don't believe that.
The thing with California as well, it's very expensive, though, to get into the market, if you compare it to New York. I think to get a license that they're talking about right now, it's 100 million just to get a license, whereas New York, it was 25 million. So if you do get into the market, like, you have to be an operator with a lot of money to manage. But I think in the long run, yes, it's going to take some time before sports betting is profitable, but if you stick through it and you focus on retention rather than acquisition, it can be very profitable.
You're the man in the middle here, so I don't know which side you're going to take, but you know, how does this, you know, for a new operator that wants to potentially get into this market as opposed to the, handful plus that have backed this initiative, where do you sit in something going, hey, can I go get a deal with the tribe today and be able to think the land base is going to work for me? Or, do I hold out so I can get the big enchilada out there of mobile wagering?
You work with scenarios. So if you do the tribal way, you try to connect with the tribe and go for that. Typically, you would then just then decide, do you believe that you need an online sports betting license to get an iGaming first? Then you need to go together with them to sort online, and suddenly you have to write a check for 100 million. So that creates some discussions, internally, how you do that. Do you then go out and back an investor for that? Because if you do, you will be one of few getting it, and you will be one of few running a very large operations in that. So getting backing from investors is probably okay if you get in there. But what about if you do that and iGaming won't come through online sports betting? What do you then do? Do you then build up another scenario with someone else for iGaming directly? So if you're an operator, especially a new one like us, I think you need to work on a couple of different tracks, because what is logical in business decision to sort of state is not logical because there are trillion of lobbyists out there. So that's why you need to have a couple of, plan Bs and Cs in order to understand what will make you successful in the end.
I'm going to flip gears here because we could talk about California for a long time here, but I want to make sure in the 7.5 minutes we have left here that we at least get to Texas. And let me set the stage a little bit, because obviously Texas tried to do something last year. They're a legislature that meets only every other year unless there's some special session and some reason to do that. It's a state that's largely conservative, although that's changing a little bit. What are the prospects of 23 considering in 21? They tried to look at sports as well as land-based. As a guy that sat here for 15 plus years now trying to legalize gaming, I think 05 was probably my first time down in the Lone Star State. If you're new to this whole thing, Richard, I'm going to start with you on Texas. What are we looking for come January?
I just don't have much faith that anything's going to happen in Texas. I started in initiatives in Texas and with Caesars 1993, and they were on the verge, and everybody's on the verge. That's a tough nut to crack. I wouldn't bet the futures on Texas. I'd take the over.
Okay. Katie, I'm going to ask you on Texas. There's one group out there that has 68 lobbyists still down there. Obviously, as a guy that's lobbied legislator, 68 lobbyists is a ton. Does that help or hurt the process over this in the long-term prospects?
I wouldn't know, to be honest, but I think when it comes to Texas, it's going to take a long time and probably going to be one of the last states to legalize. But, just look at, there was a cease and desist very recently at the NFT casino, which was one of the most popular destinations in Decentraland, I think, in Sandbox. And they went hard on them because in Texas, I think it's in the Constitution of Texas as well, that you cannot do anything with gambling, and just talking about the tribes there as well. It's not going to be possible, I think.
I have actually a little bit of a thought there. If you sent 67 or 68 lobbyists to California, you would never get it legalized. Those guys, the legislature, 30% of the legislators in the state of California belong on the gaming committees. They fight to get on those committees because they are such wonderful fundraising platforms. And they will have hearings forever and get enormous contributions from the tribes and the card rooms and the racetracks to keep this in play into perpetuity. And that's why the tribes went around the legislature. The ability of, politicians in California, and I was their consultant, held meetings on stuff they know didn't have a chance of passing because they were raising funds. I wrote a story about this. Some of you know it, and it was entitled "A Parliament of Whores." You can't imagine what these legislators do around political contributions. And if they think they can continue that process ad infinitum, they will.
Or you sat quiet on the Texas front. We'll let you jump in here.
Well, in general, if you need 6 to 8 lobbyists to drive something, there's something utterly wrong. Because in the ideal world, you wouldn't need one. You would typically choose what is best for your citizens in terms of taxation, responsible gambling, and stuff like that. Now we're not there, right? I'm probably not going to be there either, right? Because there's a lot of lawyers that need to be paid. So I think based on that, from an operator point of view, just for those who aren't in that, if you thought 100 million today for California is expensive for sports, that's just a small piece what it costs today to position yourself to get something in Texas, because you need to go wire the sports team. And to put up money forward STEM to get sponsorship, etc., is very, very expensive. And yet you don't really know what that will bring you. So it's a very tough cookie, to understand how to position yourself for. So as a newcomer, you kind of look for it for a while without taking any strong actions until you know what's going to happen.
Very good. I want to open up to the audience, and I hopefully can see if you do raise your hand before I get to a couple more questions off the market. But does anybody have any specific questions about these 4 markets that we've talked about today yet? Do I see anything? Otherwise, I'm going to jump back over there. Do you want to take a poll amongst here? Can I do a poll off of this right here?
I don't know. I don't know the answer to that. And I spend a lot of time in that state, and I'm on the phone at least twice a week to lobbyists and people down there. I would take the under on anything passing. I think they may go scorched earth out there. And I think that may be in the best interest of the tribes. And I did a 3-week tour of California recently looking into a bunch of these issues, and I met with one of the opposition research people that's doing some work for the tribes, and they're going to go scorched earth on these commercial operators. I mean, it's going to be ugly. And the tribes are very good at campaigns. They've been 6 initiatives that the tribes have been involved in California. They've won 5 of them, and the 6th one was just stupid. It was an overreach. I worked for Mr. Wynn, and he took on the tribes and got his ass handed to him, big time. He lost 64% of the vote, So don't underestimate the tribes' ability to generate a very effective media campaign. They are very good at what they do, very good.
Yeah. Well, if there's $100 of millions in place just to support your voice in this for tribes or for the commercials, there would be a big, nasty legal battle about it. And that doesn't normally bring things forward very quickly, especially as we read some articles last week here that they're actually upping the amount of money they're going to put in to drive their cause here. So they're up for a fight. Mm-hmm. And I think, therefore, I'm not very optimistic about this year. But once again, things can change, especially supported with a lot of money.
One last comment. There's a lot of noise coming out of it. I've been seeing some polling that's coming out of California, and it's nonsense. It's like, I saw a poll the other day that 80% of Russians favor what Putin's doing, and I think the other 20% were shot. And those are kind of the polls that are taking place in California. People are not as honest as with these types of things. And anything that you hear coming out of California, anybody that's certain about the outcome is lying to you. But we've got a bunch of 90-day wonder consultants running around trying to monetize this space. But it's really complicated. I mean, even the thought that the tribes are a homogeneous unit is nonsense. You don't know anything about tribes if you think they all get along. These are complex interrelationships. I didn't. Sorry.
No, all good. I know.
I have some opinions on this.
I know we're out of time, and I want to keep everybody on time for after us. I've got one last question because I know we can talk about this the rest of the day. Of the 3 that are left, New York already there, what's the next state to move between the big 4? I know you can't say some other state besides like Missouri or Massachusetts. Richard?
I don't know.
I do New York iGaming.
Oh, yeah.
Okay.
Yeah,
that's fair. Yeah.
No, I'm with Pyre on that. New York iGaming, yeah.
So the other 3 just sit, and it's sort of anybody's guess.
Yes.
Okay.
Yep.
Day to day.
Okay. Well, thank you all for this. I know we all can stay and talk about this for a long time. But appreciate your time today and enjoy the rest of the day.
Thank you.
Well, I think this panel with Richard Schutz gets the award for the most interesting comments of the evening and most memorable for candid conversation. Our next panel is going to be very interesting. It's about proprietary versus non-proprietary technologies. Our moderator is my partner, David Isaacson. Are you out there? I hope he's out there. You know, this is a particularly interesting one because we've seen a number of companies who have bought platforms so that they don't rely on third parties, Boyd being the most recent. I think we'll have a good conversation here. And I don't see any of the panelists. They must be getting mic'd up. There we go.
No? Good afternoon, everyone. Something's wrong with this. Okay. Good afternoon, everyone. My name is David Isaacson from Spectrum Gaming Capital. I hope you're enjoying the conference. This panel, we're going to be talking about technology, and I think the overarching theme of this is, should digital gaming operators buy their own technology, build their own technology, or partner with a third party and, so to speak, rent technology? I think what is very complicated about when people talk about technology, it's so important and it's so critical to your business, but I don't think as a customer, as a sports bettor myself, I really understand truly what's behind, what's kind of under the hood of all these digital gaming companies and why technology is so important. So what we're going to try to do, we have experts on our panel here, and I know I'm not supposed to introduce them, they're going to introduce themselves and kind of get right into it, but is to parse kind of why technology is so important, what are some of the complications and issues with technology, and you know, kind of where technology is going in the digital gaming and sports betting universe. And just to give you, you know, some examples of technological strategies or things that the companies are employing, DraftKings buying SP Tech, right, is an example of an operator that bought their own technology. Another deal, Boyd recently buying Pala Interactive to acquire their iGaming technology. We have the CEO of Aspire Global, which NeoGames bought Aspire Global to augment their technology. And then, you know, another strategy is Rush Street Interactive, which rents their technology from our friends at Canby. So all different strategies. And, you know, this particular panel, we have a sports betting investor and former operator. We have an iGaming consultant to kind of represent the investor and consultant. And then we have two operators in sports betting and iGaming, so you're really going to get to hear from all voices. Itzik, I want to start with you as our iGaming consultant. Can you describe the importance of technology for iGaming? You know, go into kind of, you know, you worked with Golden Nugget Online Gaming, which is the leading operator. They actually switched technologies a year into their business. So can you kind of talk about your experience working with them and you know, what are the most important parts of technology, and also give us some war stories and the headaches of technology?
Yeah, so thank you. And really, this is a good example where a lot of the time, and we're talking about investments and all kind of M&As, and those are usually done by people that don't really handle the operation. And a lot of the time, they're also being done way before we even know what the regulations are going to be. So there's, we look at technology
there's a lot of great technology out there, but I look at it almost like a matchmaking process. You need to fit the right technology, the right company with the right operators. And, Golden Nugget was a good example of we kind of were handed over the solution by some people that signed the deal 4 years before that. Then we say, okay, well, we're here to operate. What do we work with? And it turns out it was good for poker in Europe, but not really for what we need in the US. Then we go through the process of essentially adjusting the technology. It was very intense, very labor intensive. And then some of those platform providers, in that case, it was Bali at the time, said, okay, well, we're not in that business anymore. So they pulled out, and then you need to find yourself a new partner. So this is where you actually have the right opportunity to go and select really what you need, what will be the right fit for you. In this case, the selection was, okay, we're going to prove that we can do it with a partner. It was NYX. It worked out well, still is working well for them. And I think this is a good example of how people bring a lot of the know-how from Europe. They match it to what is needed in this market, and they can run with it. It's a good combination of good people skill, good knowledge of gaming, very, very realistic approach towards the market. I think at the time we were the only one that actually had good, forecasts into what the market will be, and we didn't have to scale back or anything. And then you can go from there. But I look at it really, for me, if you decide to go and partner with a platform provider, it's a very, very specific process of selecting not just the technology, but also the type of partner that you're going to be working with, the type of services, the SLAs. There's a lot of things that are going into this.
And just one comment, you mentioned the learning from Europe and applying best practices from there to the U.S. Is there any relevance or key differences between the two markets and kind of what technology, how it needs to adapt in the U.S. market versus the kind of technology that exists and is successful in Europe?
So we need to remember that a lot of the technology in Europe, there's a lot of newer technology, and then there's a lot of technology that started pre-regulation. So I'm not saying that it's good or bad. There's a lot of companies that were very, very successful in adapting into the more regulated markets. But I just want to say, we don't need to reinvent the wheel every time. I mean, we can learn from what worked there. We can see how people approach the markets in Europe. And the markets in Europe are also in that process of, we're in the process of doing a country by country, sometimes even states within countries, with their own regulations, with their own rules, very much like what we're seeing here in the US. So there's a lot of those similarities, and if your partners, your technology provider, understands that, can cope with that, can provide you the right services this way, then you probably be able to handle the different requirements in the markets here in the US.
Okay. Benji, I want to go to you now. Benji, you come at this, from a sports betting perspective, both as an operator and now as an investor. Can you talk a little bit about the importance of technology in sports betting? What are the most important aspects? I think when I read all these, I read a lot of trade articles, and Flutter or FanDuel is always touted as the best app. So can you kind of talk to why that is, and maybe just why it's so relevant for sports betting?
So I don't want to say who the best app is. I guess beauty's in the eye of the beholder, I guess, but certainly they have a very good one. But look, I do approach it from the sports betting perspective, and when you say what's important within technology, of course the answer is everything. But I think some of the USPs, when you look at the sportsbook side of it, is you got to look in terms of managing the player and the risk management, and especially to the extent that you want to move away from having significant betting limits that restrict what people can bet on given sporting events and given in-play occurrences within a sporting event. The better job that you can do of profiling the players, understanding who they are, understanding who your sharper bettors are, and understanding the risk profile within each individual player and for your operation as a whole, and being able to incorporate that into your risk management strategy, that becomes more of a bookmaking expertise situation, and being able to utilize advanced next generation technology to assist with that, becomes interesting. And look, I do invest in advice at different companies, and there's some new technology coming, which is interesting. I have no involvement, but there's a company called Jindo coming out that, they integrate really kind of advanced metrics as it pertains to the risk management and the player management profile that can become part of a platform experience. So I don't think it's necessarily a question of having a platform that's one size fits all and all encompassing and needs to adjust to the specifics of a given operator.
Got it. Now going to our operators here on this panel, we'll start with you, Tsachi. Aspire was acquired by NeoGames. NeoGames is an iLottery company. Aspire is more of an iGaming company. Can you talk about the acquisition, why they did it, and the integration of the two companies? Obviously, it's two different businesses, but also two very similar businesses. What are some of the integration challenges and positives about this transaction?
So NeoGames is operating in the iLottery, as you said, and they're serving a PAM to national lotteries. In many countries around the world, national lotteries are serving not only scratch cards and lottery games and draw-based games, but starting to offer also sport betting and casino games and esport and bingo. So if you say NeoGames offering a national lottery only PAM, so tomorrow they can offer PAM, casino games, sport, esport, bingo, and managed services. And all of those are being owned by Aspire. So instead of them taking X% of the wallet of the national lottery, they can now take X times 4. So this is the advantage that they have. Currently, the majority of the national lotteries outside of the US are able to serve more than just lottery games, but probably in the future also national lotteries in the US will enter as well. So this is their rationale to acquire Aspire.
Got it. And then Robinson, we'll go to you. Robinson, you work you're the head of Bally's Interactive, and for those of you that don't know, Bally, the public company, has made a lot of acquisitions. They bought GameSys, which is a B2C digital gaming company based in Europe. They obviously have land-based casinos. They bought B2B technology by buying Bet.Works for sports betting. They also bought a daily fantasy sports company called Monkey Knife Fight. So, and other acquisitions as well that I'm not mentioning here because we're supposed to be focusing on technology. Robinson here is focused on the integration of these different businesses. They're all digital businesses, and obviously there's an element of the digital feeding the land-based business as well. So maybe you can talk about your journey. What are the goals, and kind of where this is all going for a massive company like Bally's?
Well, we were bought. GameSys was bought. I got taken over from GameSys, brought into Bally's because really we're a great data company, right? And for us, it's all about understanding the player. Some people have talked about that. And making sure that you have a clear strategy for a market. It's very important to make sure that you do these things market-specific, as you described, because there are some core truths which carry through and are consistent, right? You need to have a great PAM. Sometimes people believe every PAM is equal, right? And actually, the PAM needs to be stable, robust, because ultimately we have to be as trusted as a bank so you can have a good time, right? No one can ever have fun if they don't feel safe, right? So we have looked at our integration and said, let's take the most robust parts of the PAM, so great platform, that's going to be the GameSys platform as the PAM, and taken the sports betting engine from Bet.Works and focused on integrating that. So taking the best of what we have and being really honest about that, right? Like, let's be clear, no one can be great at everything, so you have to pick off each ideal element and actually make sure that aligns to your strategy. For us, our focus is all about the data piece, because the data piece allows you to interact with players at an individual level and target at an individual level, and that will give you huge efficiencies. I look at some of the advertising pictures, which are going around with DraftKings and others who do huge amounts of marketing spend, and I believe that you can be way more effective and way more efficient by targeting more precisely. That comes down to your data and your tracking. So our integration challenges have really been about us being honest and saying, this is good, this is bad, and deleting the bad bits and taking the best that we have. If you're not honest, you end up with, call it a one-stop shop. You end up with the Swiss Army knife type platform, which is basically the worst of everything, right? It's not the best knife, not the best anything. So actually, we have spent all of our time going through those steps and being clear about what needs to be done first. But data, for us, is everything. That isn't just, build a data platform. It's actually having deep understanding of what it means. So when I say I look at a market, a lot of market behaviors differ due to cultures, right? So in a place like Asia, you tend to see far more table game play. Therefore, someone's winning experience has a far lower standard deviation because you tend to only get 2x wins, not the 1000x wins. Now you need to understand that, analyze that, and understand what the players are feeling so you can retain the best players and make sure you're efficient and very effective. There's a lot of wasted money out there. It's been challenging because there are so many companies, but we're picking off the important bits first. And then we'll focus on all of our other assets, which are really about the funnel. We want to acquire cheaply. We don't want to spend a fortune on marketing. Sets a bad culture. You want to run a business in the end.
So it sounds like what you're saying, though, is the customer data is your most important thing, and you're going to focus on that and kind of layer in the technologies, whether you have to buy them or build them or contract with a third party. You're going to layer in those other features around the kind of the meat and potatoes of your whole operation.
Yeah, in general, I don't like to rent because that means you share everything with your competition, right? So I don't tend to rent anything. That obviously has knock-on effects because of speed, right, that you have to build. But actually, we go about and buy stuff, right? So you can buy things and move faster. So you can have the benefit of renting by buying, but actually making sure you don't give it to your competitors.
Got it. Okay, I want to switch topics a little bit, more general and kind of open it up to all of you to comment. All of these companies, there's been a lot of ink spilled about how none of the sports betting companies are making any money, and obviously you're seeing that in the public markets. We at Spectrum Gaming Capital view sports betting as something that's going to evolve from kind of. The market has just started about 4 years ago. There's this onboarding and education of the entire U.S. to start betting on sports, and then I think that it could become more of an iGaming product, and you'll see the gamification of sports betting in this country. And to me, that means more personalization of the customers. Getting to know their betting habits, where they live. Kind of offering them different bets in game, and kind of the augmenting of in-game betting. So I want to talk about how technology needs to evolve, or where it is today, in order to increase increase personalization and improve the profitability of sports betting, so that it becomes more like iGaming. Maybe you guys each of you can comment on that.
I'll start by saying that if you go into a sports betting knowing that in the future it's going to turn into iGaming, but you don't have already an iGaming solution, you're going to be in trouble. That's a reality. There are a lot of sports betting platforms that, for some reason, cannot know or do not know how to handle iGaming. And for me, that's an evolvement that's going to happen. Again, in Europe, in the rest of the world, we look at it as one umbrella. It's online gaming. Within that, we have verticals, and there's expertise for sports betting and for casino and other verticals, but there's a lot of those core capabilities. And for somewhere in the US, we tend to see that platforms and solutions are labeled for just sports betting, and then for some reason cannot do iGaming. So think about it as it's going to come. It's going to take some time, but iGaming is going to come. And for me, this is the key to have those capabilities, to be able to provide a more of a holistic package of offering, and it could then evolve. You want to have that flexibility to evolve into additional verticals. For me, a vertical is something that you're going to plug in. It may not be your primary offering, but everybody knows that sports betting without casino cannot make as much money. So You want to think about that. You want to think about the other things that are going to come in. You want to think about additional CRM and other tools that will further augment everything, but will cover your entire portfolio of verticals and not just the one. That for me is the key.
Robinson?
I agree. I am iCasino through and through. That's our entire heritage, and we believe that's where you'll make money. The US has one fundamental problem, which there just isn't that much sport, right? There isn't actually that much sport to bet on. So audiences will be way more transient, and our focus has very much been on saying, how can you be great in iCasino? We're treating sports as the funnel. So all of our plans will be about where's iCasino, coming first. Pop that back. You should go to someone else.
Okay.
If I'm taking it to, do you hear me?
Yeah. We hear you.
If I'm taking it to the original question of proprietary versus non-proprietary, what do we need from an operator? He needs to focus on operation and marketing. And of course, through the operation, he needs to differentiate himself. If he will build from scratch everything, if it's related to iGaming or to sport, it will take him a very long time in order to have those experiences, knowledge that other companies already built with the history and experience in Europe, around the world, all the scars that companies have on their back. So if they want to differentiate, there are a lot of platforms that can allow them to differentiate. But if you will add to an operator another layer of technology, you are adding another layer of focus. Not everyone can handle it. So of course, the obvious thing for me to say is that you need to take not proprietary, you need to take a supplier. But it's not correct 100%. Because if you are big enough, you need probably to have your own. If you are focusing on one market, two markets, you probably need to have your own. You need to have your own. But today, the roadmap that any of us is having throughout the year, more than 50%, if you are operating in more than 3 or 4 regulated markets, more than 50% of your roadmap is to comply with all the updates of the regulation, with the tons of changes.
Which is always changing.
All the time changing.
Yeah.
Now, if you are an operator and you are focusing now on that, you are not in the business. So whether it's gaming or sport, you need to focus on what you are born to do. And this is to be an operator. So I agree with everyone that gaming is the money, but you need to have also the scars of how to do it well. It's not enough to have a platform that can generate transactions. Where is the CRM? A lot in the US are not familiar with fraud management. Tons of money is being leaked out from the business. Tons. They don't see it. They don't even know how to handle it, how to stop it. So I think just being with a big ego, taking you to have your own, and there is enough room to learn from others that have those scars. So it's not definite. It's not only suppliers, and it's not only proprietary.
Okay. Benji, before we go to you, Robinson, you said something that was a little bit provocative that I just wanted to follow up on. You said we don't have a lot of product here in terms of sports betting product compared to Europe. Can you just expound on that statement?
Well, the key sort of product category for sports betting in Europe is soccer, right?
Right.
So actually in any one day, there will be, call it over, couple of hundred at least fixtures which people can be betting on, and there's almost always something in play which you can actively bet on. If you go to most sports books in the US, there's very little, right?
You have to wait till
actually
nighttime.
It's a cultural thing.
Yeah.
It's a cultural thing, right? I constantly say the best thing that could ever happen to sports betting in the US is if the USA win the World Cup, the soccer World Cup, right? That might help, but there isn't enough sport. If there aren't enough touch points with anything, you don't get into habits. You don't retain as well. There's more drop-off points, right? You need everything to be constant cycles. So actually, the fact that sport does stop NFL does stop, there's another time each season to try and acquire those customers. So actually, you need to focus on extending people into other product sets, which you can actually have. There's no good reason for anyone to come back to a casino site, right? The tables are there, they're always open. So if you can retain to that, that's quite impressive, right? So actually you understand the player, you know when they need to feel that sort of taste of the thrill, right? That's when you have to pick it, and that's exactly when you have to have precise marketing to attract the customer at the right time. And yes, many of the apps will be relatively similar, but actually you can't control the experience anyone has. It's very random, right? So if you can detect when people might have a bad experience, do it early enough, people, how they're feeling, all of that kind of player detection and AI and algorithms, which take forever to build, you know, and you got it wrong many times over the years. But that type of knowledge and that type of data integration is where you'll see all the value. The winners will be the people who have had the scars and who accept that some things should be great and other things don't matter that much.
I want to add one point.
Sure.
You hear from operators saying, why should I throw away 10-15% of the NGR as expenses to a third-party supplier? But it's 10-15% that even if you will have it yourself, you will need to have the manpower to manage it. So it's those 10%. You will have it. So now we are talking about 3 to 5%. This is the experience. If you will not have the experience in how to do it and all the scars on your back, so those 5% that you will need to pay additionally, if you will not pay it, probably can be much more expensive to your business. So it's not only to look at the P&L, I'm throwing away 10-15%. It's not like this. And this is a journey that the companies need to do to understand what's better for them and not to think that I'm paying someone else. It's okay sometimes.
Yeah. So I'm going to agree with what a lot of you are saying, and I'll disagree with some of it as well. So sports betting as a funnel for iGaming, sure, I agree with that. But Rome wasn't built in a day, and neither was the US market, right? So the fact that we don't have enough of a slot machine built into the US sports, we're in early days here. There's going to be a lot more coming in terms of minor league baseball, in terms of the amplification of college sports, which, as you know, there's been some announcements recently regarding their data rights and the provision of it to the betting companies. We're in year 3 or year 4 or whatever it may be of the next 100 years, and Europe's had a 70-year head start. So I think we got to give it a little bit of breathing room. And if we go look at a bit of a history lesson, the history doesn't go back that far. It goes back to 2018. And you hang a shingle, and all of a sudden, we're going live in New Jersey with who knows how many states that have been following, half the country, in a period of 3 years. And the goal of the operators wasn't to have, from day one, the world's greatest iGaming/sportsbook platform. iGaming isn't even legal in the majority of the US, and sportsbook wasn't then either. They had to work with what they had to work with. So day one, you're getting live, and you don't own a platform. So from day one, what do you got to do? You're either going Camby, or you're going SB Tech, or back in our day, Quincy, we were going Games, which is, I guess, the artist formerly known as Games. And you got to get live. And you got to get live in New Jersey for June 5th. And then you got to get live in Denver a month later. So it was a race against the clock to get live in as many states as you can. And it still is, primarily. And then within that, to your point, David, you know, we want to start bringing in, how do you differentiate your sportsbook and make it different from the Camby menu that everyone has, right? And the answer there becomes, for some operators, as they mature and as they get big enough in scale, or as they come into the market the way a Bally's did, is maybe you look at your own technology, but that can't happen overnight. So all of this is a process, and I think it's all going to get to where you're saying it's going to go, but we can't fault people for being where they are today. I'll stop there. Rant over.
We have 5 minutes left. I'm not getting any questions here. I just want to make sure there's no questions in the crowd. We have...
Who do you ask it?
Not you.
if I could just reframe the question, I think what you're asking is, the concept of you're a B2C, you're trying to focus on your business, on your customers, and then you have this technology, and you're thinking, maybe I should buy my own technology, but then you kind of lose focus because, again, your core business is the B2C. That's how you make your money. Why don't you get the best technology provider to provide you the technology versus buying it yourself or building it yourself? That's kind of the question. And Robinson, do you want to take that one since you're a B2C?
Yeah, sure. It's kind of the argument of, is it important to be first, right? So actually, I would argue that a lot of new innovations come out, some win, some lose, and actually there's a learning curve that people go through. The players go through that. And actually, if we're thinking that those players are migrating for this new feature, this new function, these players will migrate again. Very transient. It does take significant investment and actually can only have scale, right, to be able to own enough. It will cost a lot. Maintenance is always forgotten about, right? It's exactly what you were describing earlier, that people underestimate the battle scars and actually the maintenance overhead. Fortunately, as our company, we have sufficient scale and sufficient opportunity to deploy the same asset in many, many jurisdictions. You can't do it for most operators without that scale. So I agree. It depends on the tool, depends on your business, depends on how much you can afford, and actually really depends on your strategy.
If I may add, again, if you're posing that question and you're not the size of, or have the wallets of Bally's, then I would say don't look into owning it right now. There's a lot of things that come into play. The war in Ukraine right now makes it almost impossible to get developers because the developers are fighting right now and everybody else is getting triple the salaries and you cannot retain them like in other markets. So there's a lot of those challenges. I would say find the right B2B provider that is a good partner. And a good partner means not that they will launch with you, but then move on to deal with the next one and your window of working with them is closed until the next cycle, whatever it's 6 months, 9 months from now. But rather someone, and don't be afraid if they're smaller. You know, the big names don't per se mean that they're going to get more quality. There's some very good smaller ones that can actually work extra hard to service your needs, because for them it's more strategic than anything else.
I want to just get in one last question. We have a minute and a half left. How should and anyone can take this, how should investors evaluate and think about technology when they're investing in a company? There's various public companies like Canby and GAN. What should they be thinking about when they evaluate these companies? Someone please take the question.
I would look at it for me from a different perspective, is that if I'm investing more in some of the B2B picks and shovel companies, you got to think of it in terms of what is the integration process. And I think that when you're looking at B2C operators that own their own technology, that integration can sometimes be a little bit easier, I would say respectfully to the B2B guys, simply because the operator itself, if they want a particular product, will focus more on that integration, whereas a third-party provider is listening to what the market asks for and what the specific operators ask for.
I'll say that if you ever see as an investor somebody that says, I'm going to do both B2C and I'll then expand it to B2B, that's a red flag for me. I personally don't believe in that. I think you build a B2B organization with a service mindset, or you build a B2C and you build the tools that you need, just like Rob said, whatever you need for yourself. But I don't believe in mixing them. I don't think that it makes sense. It could, maybe, I'm generalizing here, but as an investment strategy, I wouldn't look at it this way.
I think that's a great answer, strong point of view, which we like. Let's give a round of applause to our panelists. Thank you.
That session was a great primer for our next presentation. Baked into the conversation on whether or not operators should buy, rent, or build in-house was a discussion on using data to better understand the players and using those insights to then tailor your products for various cohorts and the individual themselves. Our next presentation is going to dive deeper into this topic of player management and player retention. I'd like to invite our next speaker, who is Simon Lidson from Fast Track, to the stage.
Great. Good afternoon, everyone. How nice it's been to talk about the US market and acquisition strategies and everything. And it's time to step in and talk a little bit about retention as well. I think we need a little bit of that as well. So I'm the CEO and co-founder of Fast Track. For anyone who is new to Fast Track in this room, we're a hyper-growth company and working with hundreds of brands across the world. And we deliver a CRM platform. And CRM is the backbone of the iGaming operation, at least a successful one. And relevance right now is key. And the ability to retain our players is what's going to make the difference between red and black numbers on the bottom line. And the market is very, very competitive. And what happens in a very competitive market is that the prices to acquire customers goes up. So that makes the relationship that we build with our customers even more important. We have to deliver on that. So today I want to tell you why we built Fast Track CRM and where we are right now. And with this story, I want to show you what the future of CRM looks like and what it will take for you as operators to continue to be successful even in the future. And I want to start right here. I think this picture illustrates better than anything the main problem in iGaming operations. The amount of systems that we have to work with. And it might be sometimes we don't see that looking into the organization, but the operational teams are certainly getting it. And the amount of systems that we have to work with is one of the main blockers for innovation. And when systems can't speak to one another, you are going to have to rely on humans to do it for it. And most of the time, that comes from an operational perspective in the way of moving lists in between different systems. And this is a huge blocker. And it's very time-consuming. And I hate time consumers. When you get to know me, you will see that I'm very passionate about two things. Number one is organizational scalability, and number two is digitalization. And we have been working, so the co-founders behind Fast Track, we worked more than 10 years on the operator side in the industry before we founded Fast Track, and we experienced this firsthand. So trust me when I say that we were motivated in order to overcome this issue when we started Fast Track. So Fast Track was founded on this basic principle that there was a better way to do things. There was a better way to do the iGaming operations. And we wanted to digitalize the iGaming industry, which is still what we're trying to do. But when you talk about digitalization in the iGaming industry, you have to understand that the iGaming business is really complex. It's unlike any other industry out there. You have so much content, tens of thousands of games, and they're coming from hundreds of different content providers and game studios. Then you got advanced bonus loyalty gamification platforms. You got multiple product verticals, and when you start looking into these different verticals, you see that they are equally as complex within their own environments. You got very demanding regulatory landscape, and obviously it's a cash-rich industry, so we are quite subject to fraud, right? So when you package all of this together, there is not really that many other industries in the world that would even come close to the amount of complexity that you have to deal with on a day-to-day basis. And we work in entertainment, right? So that makes CRM very complicated. So when we look at CRM and we see that CRM has pretty much, I'm looking back now in the time Fast Track when we started Fast Track, but even today, CRM is still very, very basic, and it's been very basic for a very long time in terms of how we do it. And I think that's part of the explanation. There has been a lot of innovation in other parts of the businesses, but CRM has been standing on a standstill for a very long time. So this is when we decided to build a CRM platform. Why not take that on, we thought, right? Super cool. So we made 3 promises when we built Fast Track CRM. It was obviously to ourselves, but it was to the market as well. Number 1, we wanted it to be flexible. And there was just a session now about proprietary and owning or buying or renting. I mean, there shouldn't be a blocker for you to actually take in advantage of a third party, but you should have the flexibility. We always believe that. You should have a flexibility, and we wanted to build Fast Track as it was as close as it possibly could be to an in-house internal platform, as close as it possibly could be. Number 2 was to significantly reduce the amount of effort that came into running a CRM strategy. Talking about that execution in iGaming operations. And number 3, we wanted to make sure that it was based on real-time data, so that we could have the capabilities to do real-time data automation. You would be surprised if you would see how many of the operators today is still relying on a 24-hour-old data feed and BI reports in order to conduct basic CRM. That's pretty much the majority, I would say right now, of operators in the market. So there is quite a lot of work that still today needs to happen in that space. So the success recipe when we started building the platform, it became, first of all, we needed to focus specifically on the iGaming sector, because there was no other industry that looked anything like this industry. So we couldn't possibly address multiple industries at the same time. Number 2, we wanted to base it, and Fast Track actually became the first platform in the market that was exclusively run by real-time data. So that was the first thing that happened there. Then we wanted to make sure that all of the business systems that you use on a day-to-day basis, so whether it was a bonus platform, gamification, CMS, they were all connected to the CRM platform, which makes sense, so that you could work from one central system. And it was also a reinvention of the work process. A lot of the gaming operators today, they are working across multiple markets, across multiple regulations, with a multi-brand operation, and we needed to make that simple, so that was part of the package. So that was the first version that we went to market with when we built Fast Track CRM. That quite quickly took us on to the age of automation. So scaling with automation was the next natural step in the evolution, both of the platforms and for the partners we were working with. And we had great automation capabilities working with real-time data and the structure of the platform. But when you look at real-time automation, it allows teams to be with the players every minute, every second of the day, and even when you're not at the office and pressing out campaigns. And not only does it create that richer experience, it also frees up time. It makes it easier to measure performance of what we're doing from a CRM perspective. And evolve essentially as a CRM strategy. So we supported our partners in launching some of the most comprehensive automation that has been seen to date. And our partners relied on Fast Track for pretty much everything in terms of their CRM. So that was onboarding, on-site engagement, retention activities, reactivation. So it served as the backbone. And with more advanced automation, when you start rolling out automation, you need to be able to manage it effectively, right? So anyone who has any experience in working or implementing automation in your business, you will know that most of the problem that you see is that as soon as you press the button and everything goes live, no one dares to touch it anymore because you might break everything. So that was like one of the problems that we wanted to overcome with Fast Track, so that we had a solution that allowed teams to easily be able to manage and upgrade and work with that. And that's when we built what is today called Fast Track Life Cycles. So that was a natural evolution of the product. So the focus up until this point was really about simplifying process and the right capabilities. But what teams actually wanted to focus on was obviously what they were hired to do, was the creative process and understanding their customer needs. So we are sort of working with that, and you cannot really do those two things. You can't really focus on the customer needs if you're having issues to even execute your CRM strategy. And I think at this point, the data capabilities and reporting capabilities of the platform were above par what was offered in the industry. But if you're looking at our internal conversations, very, very, very far away from where we want it to be. So everyone who has any experience working with data platforms, I'm sure all of you have some experience working with data platforms, they're great up until a point, right? I mean, you sign up, you promise the world and you sign a license, but then when you start working with it, you get some of these dashboards, they're beautiful, you work with them, but they're not very actionable. Most of the time you log into a separate platform, it's not very actionable. So you can't really do anything with the data that you're looking at. You can see the trends and you can analyze. But the next thing is, like, as soon as another team is asking a question for some data that they want in, it becomes really difficult to get it in there. And most of the time they're really slow. That's another thing as well. Like, the data tools that we're using today are really slow. So obviously Fast Track decided to take that on. So we're thinking like, yep, let's solve that because we need a solution to that. And that's when we decided to build what we call today the Fast Track Data Studio. The Data Studio addresses all of those points and is, to my knowledge today, the fastest studio environment in the market today. And it presents like huge amounts of flexibilities in terms of how teams and end users can build their own dashboards and build all of these things. So that helped our partners to become data-driven. They could actually start using that data and create more actionable insights and learn about their customers. And because of the automation capabilities, they could take that extra step to start growing the customer model. So what do you want to do with all of that time? We're coming into the future. The one-to-one experiences. So every single operator that we are talking to right now, every partner, everyone is focused on the same thing. We want to achieve one-to-one experiences. We want to be as personalized as we possibly can, and we want to be relevant, okay? The relevance is key here. This is what's going to drive the retention long-term, is to be able to scale that. So when we are building more advanced customer models, using all of that actionable data, we want to build one-to-one experiences. The problem is that one-to-one doesn't scale well in how CRMs are typically designed in the market today. Because the design of the CRM platform is that you target one group of customer with one offer. So every time you want to increase your dimension of segmentation, so say that you come up with a new cohort in your segmentation where you want to target with new offers, you need to create new campaigns and new campaigns. So essentially you end up with armies in order to get something done. So that, what we actually needed was a platform that was able to prioritize, right? To do that work for you so that you could just load it up with all of the campaigns that you need and then let the platform prioritize on its own. Sort out the distribution, get rid of that executional barrier. So that's why we built what we call today the singularity model. And that's when we introduced the singularity model, that marked the shift, the biggest shift in the history of how CRM has been conducted in the industry and the capabilities that it presents. I mean, we've made it possible together with this new engine, with the singularity model, we can have libraries of hundreds of campaigns on one side and millions of players on the other side, and with one single activity, the platform will itself prioritize which offer is being sent out, which time it's sent out, how it's delivered, and what it looks like when it arrives to the customer. So that's a huge stepping stone. So that takes us to where we are right now, but also to the future of CRM. I think it was Todd that was up here, and he was talking about AI-driven. He's right. That is exactly what's going to happen. We want to digitalize the iGaming industry. We are on a mission to deliver this first self-learning engagement platform in the market. We have our entire team working to achieve that goal. And the future of CRM is going to be your ability to scale with self-learning one-to-one experiences. We call this goal singularity. We want to get to a point where the platform is able to go beyond what we can humanly comprehend in terms of the decision-making that it's doing. That's the goal. When we talk about self-learning, that's what we need to do, not anything less than that. So now I would like to show you a short video on what that looks like in our reality with Fast Track today. Need some sound. Thank you.
This is Amanda. She works with us at Fast Track and she loves to play casino. If we look at the way Amanda plays, we can easily tell what type of player she is. Amanda is seeking the thrill of a life-changing moment and has developed an appetite for jackpot games. We can also see that she has a strategy. Amanda picks her games carefully and goes for jackpots that are beyond their theoretical drop point. In other words, Amanda cares about value and is motivated to play when she has an edge. Let's imagine for a second that Amanda is our only customer. Knowing what she cares about, what would we do to maximize her entertainment value and get her to spend more time with us? We would probably send her updates about growing jackpots and let her know when new jackpot games are being released. We could even create jackpot night campaigns specifically for her on the evenings we know she usually plays. The reality is, though, that none of us have just one Amanda to look after. Next to Amanda, we also have players like Dan, Sarah, and Stephen, and hundreds of thousands or even millions of other players to care for, all different from one another with their very own unique playstyles and behaviors. We do the best we can to look after all of them, but the vast amount of content, the complexity of the regulatory landscape, social responsibility, bonus engines, and the risk of players taking advantage of our offers hold us back. The problem is that CRM platforms have a fundamental design flaw. They are not designed to handle this level of complexity and are made to target one group of customers with one campaign at a time. If we want to achieve one-to-one experiences, we need a blank canvas, a new design. A one-to-one CRM platform must be able to see what matters for each individual player and be able to match the right content to their specific preferences. And we need a work process that takes all the complexity into consideration. We want to build a truly tailored experience for every user. To be able to provide Amanda with such an exceptional experience that she will feel that every piece of content has been produced exclusively for her. Welcome to the future of CRM. Using breakthrough technology, Fast Track is setting a new industry standard in how to conduct CRM. We have built the Singularity model, an engine that makes one-to-one experiences possible at scale. It observes every action the player makes in real time, using advanced machine learning and computations to establish a comprehensive player profile. Instead of transactional CRM, where you send one specific campaign to one group of players, the Singularity model uses a library of pre-built content that is ready to go at any time. We can be in control of what content is suitable for each individual player, and the model is able to handpick the most optimal piece of content for those players at the right moments. The Singularity model is not only capable of handpicking the right content, it is also able to determine the most optimal time to engage, which channel to use, and how a message will be communicated through media and text. Every single player will have their own experience, handpicked specifically for them. Self-learning one-to-one experiences are the future of CRM. This will fundamentally change how we work. How do we prepare ourselves for the future of CRM? What steps must we take to ensure our teams and organizations are ready to embrace self-learning one-to-one experiences? Over the past years of partnerships with the most innovative leaders in this space, we have developed a pathway that will help you scale with success. The first step is to free up time. Unlocking time to focus on innovation is the first and most important step in the pathway. Working with Fast Track has been proven to make teams 4 times more effective. Fast Track connects to all the platforms you use to engage your players. This includes your bonus engine, player account management system, site and CMS, and all your different communication channels. You can work from one platform and never need to upload a list again. A real-time data feed ensures the data you act on is always 100% up to date. Periodic transfers do not cut it. The Fast Track platform is easy to use and is packed with tons of smart functionality that removes complexity and eliminates time-consuming tasks.
One central system, real-time data, and the right process will free up time and allow you to scale. The second step is to scale with automation. You will invest this extra time into creating the foundation of automated CRM activity that will help you scale. We will hold your hand every step of the way, from planning to implementation, and ensure you are successful in automating all aspects of your CRM strategy. Automation can be complicated, but we have made it easy with Fast Track Lifecycles, the most comprehensive automation suite in the market. The third step is to scale by finding bright spots. You are now ready to take a science-led approach. Experimentation and analysis will be in focus. We provide your team with the right tools and processes to scale with data-driven decisions. The Fast Track Data Studio is the most powerful analytics and data mining solution in the market. All the data is real-time, and even the most comprehensive reports run lightning fast. The fourth step is to scale with one-to-one experiences. You are now departing from transactional CRM altogether. You will use the singularity model to scale with one-to-one experiences and rely on the platform to pick the right offer, time, channel, and content for each individual player every time. Distribution now becomes completely effortless, and you have embarked on your journey towards self-learning CRM. With a single activity, you can now have automated matchmaking between hundreds of campaigns and millions of players. The fifth and final step is to scale with self-learning. You are now at the pinnacle of CRM. Your platforms are fully connected, your data is in real time, you rely on automation, you make data-driven decisions, you have a focus on ideation and data science, you use content banks to create one-to-one experiences, and your growth is AI-driven. From here on, we are shaping the future together. We will bring you on board the Singularity Project. We have a dedicated team of data scientists that will collaborate directly with you with a single focus: to deliver the first self-learning engagement platform. To deliver exceptional experiences, we need to change the way we work. Thank you for watching, and we look forward to showing you more in person.
I hope you enjoy that, guys. Thank you very much for taking some time out to speak to me today. Ciao.
That was very interesting. Next one is we have the tribal panel. Tribes represent 50% of the gaming market in America, and we heard on our last panel, or two panels back, some very interesting comments about tribal expansion into the digital world. So with that, we'll turn this over to our panel, and go right ahead.
All right, thank you. All right, everybody, thank you for hanging out. And we're just going to dive right into this. We're a little under time or over time here, so we're going to try to catch up. Just first of all, just quick introductions. We're going to start with Quincy here. Just you guys introduce yourselves. But yeah, we'll go there.
Thanks, sure thing. Yeah, I'm Quincy Raven, Managing Director of Aspire Global US, and we serve platform, managed services, sports, aggregation, pretty much the entire solution.
Hi, Sal Sherry, COO of Agua Caliente Casinos in Southern California. We have 3 casinos. Right now, we are waiting for online and sports to take hold, and we're very excited about that, and we're in the process of preparing for that.
Hi, my name is Peter Murray. I haven't brought a translator, so I've got a Northern English accent. I work for a company called Verif. We're sort of authentication technology in the AI facial biometric space. And I've done sort of 12, 13 years working with regulators and operators around technology and data.
Awesome. I'm Wolf. I don't know what it says up there. It probably says Jason. Everybody calls me Wolf. I am the founder and CEO of American iGaming Solutions. And we work with brick and mortar casinos to get them into online gaming, everything from vendor selection through pre-launch staffing and every step in between. So before we get started real quick, I'm just going to frame some of the opportunity right now that we do have in iGaming. Using public information and information from gaming commissions and some paid research and Google and Wikipedia, came up with a few things. And just to throw this out, in 2021, iGaming, just iGaming casino, not sports betting, that revenue was just under $4 billion. And it also coincidentally was the best year for brick and mortar gaming ever. So we're seeing that type of revenue on top of brick and mortar revenue. This year we're projected to be about $4.8 billion. And when we take a look at the 6 states that have online casino, and we look at their total population, and we look at the total population of those that are 21 and over, so we're taking out all the minors, and we average the revenue, or we take the revenue and we divide the revenue by that population, this is the key number out of everything I just said. $143 per person. So if you take your state's population, times that by 73.6%, that's how many people are over 21, and you divide the revenue right now, we're looking at $143 per person in your state. So it's a lot. It's a lot of money. So with that, I want to start with Quincy, and I really want to start looking at one of the biggest arguments that we see for why we would not want iGaming is the threat of cannibalization. Personally, we just haven't seen it. There's no evidence for cannibalization, with the exception of online poker, because as online poker players, I can play 4 tables simultaneously versus physically being there and only being able to play 1 at a time. Other than that, we don't see anything. But Quincy, as far as overall player value and cannibalization, what are you seeing right now?
Sure.
Is there any evidence?
So I don't have all my stats in front of me,
Yeah.
so bear with me on the round numbers. So what we've seen here in the U.S., as Jason touched on, is record revenues without cannibalization. But in the players, the LTV of a player, when that player's that slot player with you today and they go with you online, there's actually a 20% lift. 20 to 30. So let's just conservatively call it 20%. So there's a 20% lift in revenue on those players for the lifetime value. And then outside of the baseline economics, when we look at the overall casino market of, call it 1,000 casinos here in the US, over half of those are tribal. And all of those casinos were all really built on what? Well, Start and Tribal is bingo, but they're slot machines. That is the player, that core demographic that they've been marketing to this entire time. So when you're looking at that player and that fear of cannibalization, just look at what is already precedent in multiple states. Granted, the majority are commercial only states, but if we look into Michigan, that is a tribal and commercial split. So it's an excellent example. There's states, we'll probably talk about a little later, that are gonna be coming online that we can also example as well. But the short story is there's a 20% lift to that player because maybe not any in this audience, but the operator understand who that player is. You've been marketing to him for the last 5, 10, 20 years, whatever that might look like. So it's a very easy answer. It's just a long conversation depending on who you're sitting down with.
Yeah, I just want to add something real quick to that. We see the same numbers too, 20% on average. The players that play online are worth 20% more when they come into your casino. And one of the reasons why is they've trained for the games now. Whether it's a slot machine and they're on the slot floor and they're like, oh, I know that game. I played it for a quarter, but now I want to get the bonus in real money. I know the symbols I'm looking for. Or blackjack. I'm intimidated. I don't know really how to play, but I'm able to play online for 25 cents a hand or whatever it is. And the next time I go into the brick and mortar casino, I know the game now, and I'm no longer intimidated, and I'm going to sit down and try it. So that's why we're seeing that lift on the players that do play online. I do want to go kind of shift into the models that we have right now when we look at sports betting and how things are going to translate for iGaming. Right now, the main models are we're a national brand and we're going to come to the casino and pay you a bunch of money up front, and we're going to be the brand. We're going to use your license. It's more of a market access deal. We're going to give a few percentage points on the gaming revenue, single digit, and everyone's going to be happy. And then there's the other model, which is let's work with the platform provider that's going to help us retain our brand. So there's 2 schools of thoughts here on how to do this. Sal, I'd really like to talk to you or get your thoughts on what's the potential impact of a tribal organization and looking at long-term revenue and brand protection with both of these models. What are your guys' thoughts over at Agua Caliente?
Well, it's a great question, and there isn't an easy answer to that. Especially when you have some of the national brands that are approaching a lot of the tribes with a very large check, saying that we'll pay for the license fee. And of course, they're going to get that reimbursed. We're going to give you, we're going to take care of marketing. You're going to be affiliated with our brand. And, oh, yeah, you're going to get 2 or 3% of the revenue going forward for 10 or 15 years. Well, you say, well, that's not very much, but that $20 million check is pretty significant. But then when you start running the numbers, you say, well, now wait a minute, that's $20 million, but that percentage could be something much larger, especially as time goes on. So there's the one thing that's great about tribes is it's not about this year or next year or even the next 5 years. It's about the seventh generation, their grandchildren's grandchildren. So they're not worried about the fast buck, they're worried about the long term. In addition to that, a lot of tribes, especially in California, and especially our tribe, have worked very hard and have invested a lot of money in their brand. We consider our brand to have great value. It has great value in the area with our customers. It has great value outside the area because we are a resort destination. So just to automatically associate with, one of the national brands, that may help in an area that doesn't know about Agua Caliente. But what's that revenue actually going to be like compared to Southern California, which happens to include Los Angeles, where a lot of our customers come from. So that it's a question that we look at very closely every day to better understand how we're going to approach this, what steps we're going to take to protect our brand. Not saying that we wouldn't partner with a national brand, but it would have to certainly be the right kind of partnership with terms that protect revenues, long into the future.
What about the customer database? I mean, I'm assuming also that when you're pushing your database to a potential competitor in a few years, that's got to be a conversation you guys are having.
That's a huge conversation that we are having because, obviously our bread and butter is our database, and we've worked many years, to grow that database, have mature customers in that database. When we talk about brands, right, we're talking about building customer loyalty. We spend a lot of money building customer loyalty. We reinvest in our customers highly, and not just straight with, comps or free cash play, but in many other ways. We conduct many events off property. We do a lot of things that are resort related, but not necessarily gaming related. So there's a big investment into that database that I don't know. We're certainly not going to write that contract and let that go away, without giving it some very careful thought and looking at the numbers.
Okay. Do you guys have anything else? I mean, Quincy, I'm sure you have something to say about it because you're a platform provider. Or with one, but just any thoughts on that? On the
Sure. I mean, I know we're here to talk about iGaming and what it means in tribal country, but when we, as Sal said, all the investment that goes into brand, some of the tribal casinos have been around for 30 years, some have been 20 or more recent, and we see some of the most successful in the country are these massive integrated resorts. And I live in Las Vegas. Some of these resorts that I go to that are tribal, they rival, if not eclipse, what we have in Las Vegas. And so when you look at that, there's of course the brand equity component of it. But when we take a look at the two models, and rightfully so, of course I'm going to be more on the platform side, but it's not so much of what are the services being sold or provided. It's philosophical, and it's taking a look at the tribe and what they've built and what they'll be generations from now, as you just alluded to. And a 5-year time frame may seem like a long time to some of us here in this room, but 5 years, 10 years, 15 years, it's just not that long of a time when you look at it from a generation to generation perspective. And while I don't want to sit up here and pretend to be an expert on tribal, when you look at the generations from those who were a part of the citizenship before the casinos, when they become the bingo halls, and then they become what we see today, you went from, sadly in many parts of the country, an impoverished nations, some sadly still are, but you've seen great success. But the folks still remember what it was like, and being marginalized and things like this. Now, the cultural aspect isn't the really the platform, or this isn't the platform for a cultural discussion. But coming back to brand and what has been built and what can be built in the future is important to maintain. Because if we take a very negative view of we'll call it the B2C approach, or a national brand approach, the negative view or the negative consequence could be one that, yes, your data, as you just talked about, your data is being used that you've collected over the last 10, 20 years, however long you've been doing it. It's being used to, yes, grow the overall pie. You picked up that big check, but then that single-digit percentage that you're getting year over year going forward may get to the point of your renewal phase where you, the operator, are potentially being commoditized when it comes up for renewal, where the data, they have soaked up the data, as I like to say. The data's been soaked up. Now they can take it to the next operator and go operate on their own brand, because that's what they initially sold in. So now if we go back to the platform side and really controlling and owning your own destiny, is there work in it? Is there expense? Yes, that's on both models. When you control your own destiny, select your partner, platform, all of that, whoever it may be, you want to look, or the tribe needs to be looking at that 5-year, that 10-year, that 15-year mark, that when everybody understands this iGaming market as it stands today, 5 years from now, it's going to be radically different. More states are going to be online. There's going to be far more gamification, and the consumer is going to be, maybe not an expert, but have more expertise in gambling, in sport, in iGaming, et cetera. So it's imperative that the brand is maintained. And then also, I think some points were made on the previous, a few panels actually, of, where's the focus for that tribe? Because, and not to speak for Agua, but if Agua is built, you've got this huge brand and you've got the feeder cities that are coming in, for your players, your VIPs, to hand the keys over to a third party to say, hey, take it from here, I trust you, it's just a tough proposition.
Right, I think you're right, Quincy, and we run the risk of entering into a partnership that doesn't end well, and let's not forget how many times that has happened in the tribal gaming world. That's left such a bad taste in many tribal gaming nations, where they said, we don't want to do that. We don't even want to go down this path anymore, because we've been burned so many times. I don't care who it is. I don't care how big they are. We've been, sometimes the bigger they are, the more chance they're going to get burned. Yeah. So that's why I think you see, more and more the tribes are looking to not necessarily partner with a national brand, but to kind of take this on themselves and promote their own brand, because it protects, their sovereignty, and it protects their interests going forward.
Yeah, I just want to throw this out, just so for anybody here that doesn't know a lot about tribal gaming, in commercial gaming, like in Las Vegas, there's shareholders. In tribal gaming, the shareholders are the actual people. That's the community. And so this revenue is used for roads and schools and healthcare and every possible service. It's a sovereign nation, so everything comes from the gaming revenue. So if they get burned, it's real people suffer. So that's kind of why we're talking about this.
It was interesting. Jules was on earlier. Sorry if that's working. Given for Richard a very succinct background to it, but the fact is you've got to understand that it is different. And I think your point there, Sal, was they take a long-term view. You can absolutely see the appetite for bringing in experience and talent and understanding, but it's just different. The short-term book is generally how the rest of the industry operates. This is just simply not the same. Yeah. So I think right in there you said it would have to be on your terms, and I think that's what sometimes the industry doesn't understand. Because it is much longer term investment, much longer term view in the brand. And I think whichever way you go, buy or build, it has to be on your terms.
Definitely, definitely. So I kind of want to shift to, we were looking at the different models of the national brands versus platform providers, and the tribal casinos actually creating their own brands. And there's been some, I don't want to say stagnant, yeah, I'm going to say it. Things have been kind of stagnant lately. So there are some tribes that are actually taking the initiative and actually pushing forward without waiting for any state regulation. And so I definitely want to cover a few of those. New Mexico is one of them.
It's very interesting. Once they repealed, the legislation that prohibited sports wagering, we saw a lot of things happen very quickly, but not necessarily in the tribal world. you're starting to see more and more. But New Mexico took the path of saying, well, it's our land, we can do what we want on our land, and so they launched sports wagering. They launched iGaming, and it's interesting because not all of the tribal casinos in New Mexico did, but some did. And I know Wolfie and I were talking about this a little bit before the session. We said, well, who's going to stop them? There's no federal regulatory oversight anymore. There's no federal laws to stop them, and they're self-governed. So their own gaming commission isn't going to stop them. I'm sure they got their own gaming commission's approval to do this, and there's no state laws, prohibiting it because it doesn't apply. And so their compacts obviously are not written to in a way that prohibits that, and they're doing it now. To what extent and how successful, that remains to be seen. But again, what's interesting is that some are doing it, but not all are doing it. So in California, right, and this is where it becomes very interesting. Is that a take that we could kind of, follow? Is that a path we could follow? And, it's very unlikely because, first of all, California is very litigious. So there's likely to be, lawsuits from somebody about something. And, I think the way the compact is written, we would have to have specific approval to do that. But it's very interesting because you could make the argument to be able to do it on premise. You could make that argument, but I don't think anybody really wants to do that. And if, I don't know how many people are familiar with what's happening in California, but there's a number of ballot initiatives for this November. 2 have gathered enough signatures to be on the ballot. 2 others have not. One looks like they might get there. The other doesn't look like they'll get there. But the 2 that are very different, and they are competing. And it'll be interesting if one or both or none get approved. And no one right now can predict what's going to happen.
In California, so out of the 4 initiatives, there are 2, like you said, that are going to be on the ballot. And a lot of the hype around it is actually to try to actually confuse the voters so neither of them pass, which sucks. But it is what it is. Because each party, so in California, you've got the state lottery, you have commercial card rooms, you have the horse racing industry, and you have the tribal casinos. And they're all kind of fighting for who gets the rights to do all of this stuff. And the tribes right now, there are no casinos in the state of California unless it is a tribal operation. So that's kind of why this is important. I want to talk about, there's some very interesting initiatives going on, and by initiatives, I don't mean bills, I mean progress in Wisconsin, where the tribes are starting to take a look at, well, one of them is operating sports betting on premise. There's another one that will definitely be launching fairly soon, but they did have to go to the state and discuss it, but the point is, on their land, they're able to do sports betting on premise, and they're going to start moving forward with that initiative while they're waiting for the rest of the state to catch up and say, hey, we're going to do this statewide, which I think is phenomenal. I hope that more tribes and more states start doing this as well. They should be running this. They should get the head start while they're able to. I don't know if you guys have any thoughts on that or anywhere else you think you see that happening, but.
Yeah, I'm not going to venture into that area. I think my area of expertise is outside of that. I think that the interesting thing, coming from abroad and seeing the complexity generally of regulation around here, and many times I'm glad I'm sat somewhere else, because trying to navigate all those complexities you've just mentioned is very difficult. But you guys have got the experience of doing it. You look at it and go, how sometimes you get things done is amazing.
Yeah.
One thought on that is, you mentioned on-prem or on-premise. So, when you look at the providers from a technology perspective, the technology that would be deployed for an on-prem solution should be the same technology that you would have for statewide. It really comes down to a matter of geofencing at the end of the day. So when we're in tribal country and we're talking to different operators, there are more opportunities than obviously sport. I mean, sport is great. It's a great way to get door turns on the retail side, and it's got good margin if operated properly. But when we look at iGaming and we look at the casino side of things, in tribal country, when you look at these casinos state to state, they have different classifications of games. Some are a bingo-based game, some are, a Class 3 game. And being self-regulated, and then the idea of an on-prem really can make a lot of sense for certain operators. I'm not suggesting every single operator because, the deployment of something like this, there's a cost to it. It's not over the top, but it requires the right economics and really the right time horizon if you're restricted to on-prem the entire time. But with that self-regulation, whether it's in New Mexico or California, Wisconsin, whatever state that we're talking about, there's an opportunity for the tribal operators to differentiate and to take a look at what's going on in the commercial space and say, hey, you know what? That seems to work. That might resonate with my players. Why don't I try it? Because I have that sovereign authority to do it. And so as far as part of that partnership that has been talked to earlier in the day, it's not just about tech. It's about the partner that you're sitting with that says, okay, I understand the online space, be it sport, be it iGaming and everything that goes with, but do I understand your land-based operation, your heritage effectively of who you are as an operator, and do I know how to work with your active database in the most efficient way possible? And efficient means cost-effective here. The most efficient way possible, and then acquire new players also as efficient as possible. Well, what they can do is bring them to the tribal land. They know the feeder markets, whether you're in Oklahoma and pulling out of Dallas, or you're Agua pulling out of LA, or, there's so many examples. You can still advertise to that exact same player base, get them in, get them comfortable with the concept of playing mobile and doing mobile wagering. And then when the state comes, because none of us can predict regulation, really, unless it's tomorrow maybe, we set ourselves up, or the tribal operator sets themselves up in a way that they are ready for that day one. And their players already understand that they've got the brand that they're already loyal to. They've got a place to play that is safe and obviously rewards them in the ways appropriate.
It's really valuable as you take the lessons learned from everywhere else. There's an opportunity here to look at what the rest, whether it's online or offline, has benefited or hasn't. It's an opportunity to sit back for a second and look at what is out there and what's more importantly better for your customers. You know them better than anybody else. Yeah, and there's data and there's tech and the solutions around that can do that. But ultimately take what's right for your own individual casinos or group or whatever it is. And I think that's the opportunity I think the tribe will have as they embrace this and take it out there, is just take what's right for you.
So I actually, that's a great segue into the next piece that I really want you to talk about, because your experience is invaluable for this. The second major, the first objection that I was talking about earlier is the cannibalization one. There's some fear around that. The second piece is iGaming is going to become a responsible gaming nightmare. And in reality, the checks and balances and the self-limitation and self-exclusion in iGaming dwarfs what happens in the brick-and-mortar industry. There is no slot machine in the United States that I am aware of that I can self-exclude from or limit how much I can lose. So, and we can use that actually to really enhance the customer experience. And Peter, I'd love to hear your thoughts on how we can use that type of technology to really increase revenue.
I think I've been coming here 12 years or so. I learned a long time ago not to come in here and go, this is how you do it elsewhere, because that just simply doesn't work. But I can tell you what's coming, because if you look at the responsible gambling elsewhere in the world, or safer gambling, that term around better understanding, better engaging, better protecting your players, that's coming one way or another. But from a tribal perspective, you know your customers better than most people. The online guys, the technology's there to help with that, is the way I look at it. And that falls into the you would say that, wouldn't you? Because I work in the technology world. But there's two things for me. I think there's regulation and there's the consumer experience. Trust and sustainability is the key thing. And I think for me, responsible gambling is a differentiator. It might not feel like that in the US at the moment. It definitely feels like that in other jurisdictions around the world. But actually, people are quite happy to give you their data as long as they feel as if there's trust between you and the customer, and building that up. And whether it's the technology that companies like us provide, or that ability to understand your customer, I think that's the key thing. Regulation here hasn't really embraced it to this point, and there's lots of good initiatives going around generally. but that ability to genuinely stand there and say, I truly understand my customer, not just because I've met them, but because I know how they're behaving, I know what they're doing, I know what the technology and the data is telling me. All those things we've heard in the last couple of panels is generally what's going to differentiate it. People want to know they're in a safe environment. They don't feel like sometimes you get that in an online world. But all that support you can get from the technology that providers that are out there, that's there to help in an offline world. So, and we've seen that elsewhere, but we know that regulation's coming. So embrace it. You guys are probably ahead of that anyway with the engagement you have with them. But that ability to understand what they do is going to differentiate a brand or a tribal brand or a jurisdiction as we go forward, I think.
No, that's, but if it's, forget about gambling, any site that you go to as a consumer, you want to know that you're having a safe experience. And I think using that as a, as a competitive environment, like, hey, we're going to take care of you.
But I think big brands sort of lost that somewhere down the line. I think I keep saying this, but the future of gambling on any level offline isn't going to look like me, right? It's that younger generation coming through. It's the people who are used to this kind of customer engagement. I'm coming across roles in user experience, which we would never have experienced 5 years ago when we were coming here. This is all about how you engage with your customer. They want to feel as if you understand them and deal with them. Yeah. And I think that's probably the biggest difference over the last 5 years and going forward for the next couple.
From the operator's perspective, it's, and having done this for more years than I care to admit to, problem gaming has been something that is just never addressed enough on the operator side. And it's something where, if there's any other operator, what we're talking about. When somebody runs out of money, everybody says, oh, what happened? What's going on here? Well, it turns out that maybe, the person had a problem and they've exhausted all their revenues. Well, we find out about it after the fact. And, what can we do? There's not a lot we can do. We do actually take some steps. I will say that. More so than a lot of other companies would probably do, as far as making sure that they're able to get through the next phase of their life, make sure that they're not coming back and doing it again, things like that. But it's always after the fact. It's so hard from a while it's happening or preventative standpoint. I think that iGaming is probably one of the few places that you might be able to do that.
Yeah. Awesome. Listen, I just want to say to the next panel, I'm sorry, but there is a clock up here and we still have 20 seconds. Yeah. Does anyone have a quick question?
Yeah. This question is directed towards Sal. Would you be interested in sharing your opinion of going to Class 2 mobile bingo, maybe as a segue towards mobile casinos?
Absolutely. So Class 2, we've looked at bingo, we've looked at actual, slots. There's not a lot of content available, so bingo is a viable option for sure. It is something that is important to us, and it's right now restricted to tribal lands. And for many tribes, that is very limiting. However, for Agua Caliente, our tribal land is actually very interesting. In an effort to take advantage of our tribe early on, when they were doling out the reservation, they said, well, we're not going to give you contiguous land. We're going to give you basically a checkerboard pattern. So you never have more than basically one full square block in this valley, and you're screwed. Well, that valley, it was Coachella Valley, which is now Palm Springs, and the tribe has every other checkerboard parcel that they own. So one, it's nice for them because, they happen to own, or have that part of their reservation, the land where the airport is, land where hotels are, land with this, a lot of different things. However, they've actually been phenomenal for the community, whereas they could have been very restrictive of what they've done. They've actually been very open with the way they work with the community. And that also allows them to do Class 2 in a multitude of different locations, which is quite unique for probably any other tribe. So that is something that we're definitely interested in, we're currently looking at.
All right, I'm sorry we didn't get to a bunch of questions. If anybody does have questions, I know that, because we like to talk, we'll be we'll be over somewhere. Please come and ask us whatever questions you have. Thank you guys very much for your time, and thank you to our panel.
Great job. Good stuff, man. We'll go that way, I guess. Yeah. Good stuff.
You won over. Thanks so much. That was great. Yeah. It actually was very informative.
Okay. Thank you.
Okay, we've heard today from the operators, the investors. We got a great sense of the tribal perspective and the regulatory framework here in North America. Next up, we're going to hear from the sports teams. I'd like to invite David Sargent and his panel up to talk about the business of sports betting from the team perspective. Welcome.
Intimate. Okay. Hello.
It's like the worst session of the day, is it?
This is the best. This is the panel not to miss. So everyone sit down.
It's like the end of the day, though.
It's almost beer o'clock.
Somebody
We could do
should
that.
bring
We
beer
could
in.
do that. Yeah.
Who's doing that?
Yeah, if you
That was your job, Ron.
Madison Square Garden is not far from here, so
That's right.
if you want to host a party.
Right after this.
Okay. So we're here to talk about teams. Sports fans, in my head, are the dream customer. We're in the middle of this sports betting acquisition gold rush, and I think teams hold the keys to a lot of this. And being at a lot of these conferences, we're always sat here discussing from the operator side what they want, what they're looking for. And I'm really excited for the first time where we're looking the other side. For the team perspective of sports betting. My name's David Sargent. I'm a sports betting consultant. I help organizations understand and position themselves for sports betting. I work on market access deals, partnerships, and things like that. But you don't want to hear from me. We're lucky to have two of my favorite people here. It's true. We're supposed to have three of my favorite people, but unfortunately Tara couldn't join us. Both with teams. Rather than me stumble across who you are, I'm going to let you introduce yourselves. I want to know who you are, who you work for, and just top line, has sports betting changed your organization?
Well, that's a crazy question.
Good.
So my name is Jeff Fernandez, Vice President Business Development and Ventures for the New York Jets. I've been with the team for 20 seasons, and with a couple other teams in the NFL, it extends me to 27 years in the league. And hell yeah, without a doubt, it's impacted our business. I mean, you're talking about an industry in sports betting that's really been part of professional sports for over 100 years, but, you know, owners and leagues were kind of hesitant to acknowledge that. So it's been a big part of our kind of business over the last few years.
So So I'm Ron Skatarzak. I'm Chief Sales and Marketing Officer for Madison Square Garden, which includes a lot, but the Knicks and the Rangers specifically, I think for the purpose of this conversation and obviously the world's most famous arena. It's funny, I was on a panel like this right after the Supreme Court ruling, and just to pick up on something you said, they asked me for a quote, and I said, sports betting is as American as apple pie. So back to, you know, it being a part, you know, of our sports and ecosystem and fan bases, it's absolutely accurate. Now it's just out in the open and legal.
Right.
I always thought apple pie was English, but... Well,
was it? I don't know. Well, maybe I should have had better.
So I'm really interested, because I work on a lot of kind of deals and things, and whenever we work with teams, it's never just a deal, it's a partnership. And I think a lot of people don't understand how deep and actually meaningful it is and how hard you guys work on that. So I'm really interested in kind of how you've engaged with sports betting on the partnership level, how you chose a partner, and kind of what those partnerships mean to you.
Sure,
Jeff?
yeah. I mean, I can go first just with a little bit more of a kind of a historic perspective, right? Being in New Jersey with the New York Jets, we're fortunate to be in the state after PASPA was overturned, and so had the kind of the early mover advantage, so to speak. When we looked at it at that time, it was all the things that we didn't know, right? Even as a former reformed gambler or whatever, we understood the connection and what the possibilities were, but it was excitement, and then now what? It was also coupled by the fact that though it was legal in the state of New Jersey, it was not legal to do a put a sports betting partnership together in the NFL at the time. So we had to put together relationships based upon casino or daily fantasy as the wrapping for something that were really sports betting driven. So using the casino as the front door to be able to convert people over to sports betting. So our approach was just to try to live and learn and try to get as educated as possible. So early 2017, we started putting together relationships with operators, very, very narrow, short-term relationships with everybody from 888 to FanDuel to William Hill and Monmouth Park Racetrack and others, just so we could understand all the different components, kind of a 360 look. And we put a relationship together with MGM Resorts at that time. And for us, it was the idea of trust and credibility, and MGM was a name that fans can relate to and kind of understand. So that was important to our owners right out of the gate. And then hence they ended up with the joint venture with GVC. And ultimately, the NFL started permitting us to dive into sports betting, and now with New York going online, we've really kind of taken this educational approach. MGM's been a part of it. All the other short-term deals were a part of it, and now we've got relationships with WynnBET, a little bit more of a kind of a premium historical, casino sports betting brand, and then on the other side, Fubo Sportsbook from a challenger perspective. And they all kind of bring different things to us as we try to figure out how to bring this out to our fans.
And I think we'll come back to the Fubo one because that really interests me. But Ron, before we get to that, tell
us. We were fortunate at our company. So again, most of you probably know Madison Square Garden, but the company overall is a pretty broad portfolio. We own the Knicks, obviously in the NBA. We own the Rangers in the NHL. We own the Westchester Knicks in Westchester, New York, in the G League. We obviously own Madison Square Garden. We own Radio City Music Hall, the Beacon Theater, Hulu Theater underneath the Garden, as well as 2 regional sports television networks in the marketplace in MSG and MSG Plus that televise all those teams, but also the Islanders, the Devils, the Red Bulls, amongst others. So our portfolio is really big, and we were really excited about this. We also had at our company 2 individuals, me being one, that have a gambling background. I come from the gaming business as part of my career. So we had an idea of if the ruling went the way it ultimately did, we generally had an idea of what this could mean. And we looked at it in a couple different ways. We said, certainly there's going to be an advertising and sponsorship opportunity that doesn't exist right now. And again, because of our portfolio, we knew it would be, if not the biggest opportunity from a business category perspective, certainly top 2 or 3. But then the second thing we knew, and again, back to Jeff saying, gambling and betting's been part of the sports culture, for a long time, we were almost as excited about what it meant for developing our fan bases. Our current fans engaging with us even more, whether it's, in venue, certainly on air through our digital products, and then bringing new fans into the ecosystem that maybe casual fans might not buy a ticket to a Knicks or a Rangers game normally or watch on TV, but they're bettors. And so we saw great opportunity to develop our fan base as well. And then we let our portfolio speak for itself. We went to market, again, for all of you, we were smart enough to know we didn't know everything, so we hired David, we hired Sarah Slane to make sure there wasn't anything we were missing. We built a very large intercompany committee to work on this that included key stakeholders all the way up to our CEO, across all of our properties. And then we took our offering to the marketplace and literally, not just much more complicated than this, we said, here's who we are, here's what we think are the areas in which we can help your business. And we let the market and the operators tell us of their interest. And ultimately, it led to 3 long-term deals with BetMGM, Caesars Sportsbook, and DraftKings. But on our TV network side, all 3 of those brands are large advertisers, but we also have FanDuel and Bet365. So it turned out to be, probably bigger than we even expected. And what we're seeing in fan engagement right now, shortly into these partnerships, is starting to prove that as well. We're seeing our fans engage with us much more, watch our teams much more on TV and in our digital products.
Yeah, I think the fan engagement part, as much as we were optimistic about it, it's just been so surprising, right? The kind of the social acceptance of sports betting in general, just the growth of that has been ridiculous. If we truly really think about whether we could believe 2 years ago that Disney would be in the sports betting business, it's, we got to be honest with ourselves. We probably didn't, right?
Yeah.
So the ability for people to not only embrace it, but then use it in the right manner. And I think we've learned. We looked at it as a 35 to 44 type of demo, male skewed football fans, right? What we've kind of learned from the Jets fans that bet on sports, it pretty much mirrors the demographic of the entire NFL, which is across all different entities, including younger. Now, the way that younger people engage NFL games is completely different than we did when we were younger. You probably didn't watch NFL when you were younger.
You watch football, but a different type of football.
Exactly.
So, sorry, you're not catching the Arsenal game right now.
Let's not mention it.
So I just that was something that we planned upon. But even with the dramatic growth in New Jersey and now into New York for us, in New Jersey, the data shows that 9 out of every 10 consumers still hasn't placed a bet in New Jersey yet.
Okay.
So still tremendous opportunity for us, whatever the age 21 and over is.
Yeah, and we, just picking up on the learnings, Jeff's mentioned it a couple times, like we had an advantage, you could look at it both ways, but we had an advantage that we weren't first, but our neighbors in New Jersey were, and what you described, you guys did creatively, even when the NFL was saying you can't do an official deal at the Meadowlands, we learned a lot from it, said to us, maybe we don't have to think about this just a certain way. And then some of the other teams in the market, too, creating things like sports betting lounges, even when retail wasn't legal within the Prudential Center and so forth. We learned a ton, from Jersey, and then DC, we learned a ton from what they did when it became legal there. And it's one of the things about our industry is, I think many people may think, we compete against each other, especially in market. The reality of it is we benefit more from what each other is doing, learning, having the relationships to drive our businesses. And typically when any of the teams are doing well in a particular market, it does lift up the interest overall in the marketplace, which helps all of us. So we learned a ton from what you and others did.
No, I find that so interesting as well, and I want to come back to you because I think when people hire me and I talk to operators, they go, "Oh no, you've hired David. It's just about money now. You're going to drive the price up." But actually, it's about all these other things as well. It's about engagement. Jeff, I want you to talk about, because I think one thing that's always missing is the experiential value add. So like the Fubo Lounge that you have, I was blown away because people are interacting with that differently.
Yeah, I mean, fan engagement is such a buzzword in our industry, or a phrase in our industry, but it comes with danger. The more things that you do for your fans, all they really care about is whether you win or lose on a given Sunday or Tuesday or Thursday playoff game or whatever else. And so it comes with this risk. So, we have to protect ourselves, we have to protect our operators, but at the end of the day, if we have a promotion that we run with WinBet and our fans have a bad experience, it's the Jets' fault. If they have a bad parking experience, it's the Jets' fault. If their Wi-Fi doesn't work at home for some reason, it's our fault. So it's really kind of a tough thing to maneuver. So that whole piece, from an experience perspective, it's just well known in sports, right?
I was hoping you were going to do all the positives.
So. Yeah, no, I guess I'm turning to the positive because I think it's well known in sports, right? Getting people to come to physical games in the industry, I mean, in the age of live streaming and everything else is difficult. So creating at stadium experiences, and we've got 2 different sports betting experiences that are completely geared towards different audiences. And we had our fingers crossed a little bit, but both of them, 1 year in, have been tremendous success. So we took an existing space, indoor, outdoor, overlooking the field, one of the best views in the stadium, 7,000 square feet, and turned it into an open to the public sports betting lounge with Fubo. And so, once they go live in New Jersey, the idea is that within that lounge, unique offers, separate odds and opportunities just for the people that are physically there at that game. On the other side, we've got a sports betting, and I won't even call it a lounge. It's a high-end space for only a couple hundred people that WinBet is the title sponsor of our green room, and it's the only all-inclusive food, beverage, alcohol space in the building. So completely different audience. It's been kind of VIP and invite only. We are going to open it up to the public this year, but it's an $800 or $900 ticket, $700 or $800 ticket, and so the type of clientele that will be in there more fits to what Win wants. And they activated the room, not open to the public last year, and they were able to directly track kind of not only the number of people, but the size of their deposits. And in New Jersey, we've seen that people have the propensity to take advantage of every single offer that's out there. But now you're starting to kick into those loyalty. So WinBet tracking the people that they acquired through us and how loyal they're going to remain to them versus chasing some other offer.
So yeah, it wasn't the all-inclusive bit that I liked the most about the Win Lounge, but definitely helped. Definitely. I'd forgotten to say that we've got these 2 guys here, invaluable brains here that you can tap into. There's a way to ask questions via Slido. If you do that and you know what you're doing, it's going to pop up here, someone told me. So feel free to ask questions. Scan that. So we move on a little bit because I want to get into kind of how your organizations have changed. And I'm interested in what you're doing with data, what you're doing with media assets, what you're doing with sponsorship assets. Just how have you responded to sports betting, beyond just the kind of selling stuff? Like, what have you done?
We've done a lot, but I'll touch on 2 things. So we created an entire sports betting service vertical in our sponsorship department. So literally an entirely newly created team where we've hired mostly staff that has experience in this space just to work directly with those 3 partners I mentioned, Caesar Sportsbook, BetMGM, and DraftKings. Because while there's a lot that we've already seen successful, we're testing and learning every day of the week, and we don't think that the value is just going to come from the initial launch and gain of market share, but quite a bit about what we're able to do over the next few years. That's one way our organization has changed, really simple. On the media side, it's dramatically changed on the TV side. So again, we own 2 24-hour, 365-day-a-year regional sports networks, and we're producing hours of sports betting content, short form and long form shows on a weekly basis. And I'll just tell you one thing we did. In the week leading up to the Super Bowl, I think it was February 7th to 13th, we did, I forget how many hours of original programming just focusing on betting, all different shows. And through that programming that we marketed, but not significant marketing or ad dollars against it. I think we generated 300,000 to 400,000 new viewers on our network in the 18 to 34 age range, which again, back to our thoughts or hypothesis that this is going to do just as much to develop our fan base than anything else. That's an anecdotal point that's proving it. So, I mean, our TV programming is radically changed from this opportunity.
Yeah, for us, it's been about these partnerships that we've been able to create, and the relationships with the operators, the relationship with the regulators in both states. our ability to bring on Slane to work with you and Sarah, and then be kind of educated to other things and introduced to other partners like Better View to help bring content into the sports betting lounge, Sightline Payments, and a lot of these other companies. So that's been a huge shift for us, is just these other kind of partnerships that are non-commercial, but they're there to further the overall engagement and success for the operators. But ultimately, it's the biggest change has been on the data and analytics side. It's something that we've always used or have used for the last decade or so from a ticket sales perspective. Know what people want to buy, what's going to move them to purchase, and we've put those things into place. We've used it somewhat in the sponsorship world, but the operators are so sophisticated with how they use their information. It's direct response like, and so to be really proactive with creating plans around campaigns, knowing expected conversion rates and knowing expected what they want for a potential lifetime value, and holding yourself to it throughout the course of the partnership. So we kind of set the metrics early, and then we measure it as we're going along. You don't wait till the end of the partnership to say, oh shit, this didn't work, right? So that side for us has been so meaningful because now we've been able to then further it, working with Sport Radar and Genius Sports to help us create a programmatic ad network outside of our owned and operated entities. So it's outside of Jet's website and Jet's app and all that other stuff, but we use those folks to help target the right customers with the right message at the right time. And so it's been invaluable for us to bring in, again, these other third parties, that there's no transactional relationship other than we're all trying to grow the overall business.
I find that so interesting because I work with a lot of different teams, and I think the assumption in my little English brain was that kind of all teams are born equal, and actually, working with both your organizations, you realize how sophisticated you guys are set up. And, you could be digital media company, you could be super affiliates sat here talking, but you're sports teams, and that's kind of quite an eye-opener because you do deal with other teams who are like, we can do some stuff on our website if you want. So it's quite refreshing to hear that.
It'll take some time to figure it out. We made a lot of mistakes.
Look, our industry, I don't think I'm speaking out of school, is behind the curve as it relates to data and analytics. And again, like Jeff said, we've become relatively good at figuring out how to use information better for ticketing and driving variable pricing and everything else Jeff said. But for the rest of the business, we are still learning. And I think Jeff, if he didn't say it, he alluded to it. Having the operators as our partners right now is certainly fast forwarding our learning. I mean, they're pushing us, right? Because this is how they market. This is how they evaluate, their spends, and it's real time. And so it gets us out of our comfort zone, but in a good way, because it's making us get there much quicker as well.
And Ron, are they pushing you now to figure out ways to help cut marketing and promotional costs? Obviously that day of just throwing money after it, right?
No, well, look, again, there's phases, right, of why the operators do these deals. For us specifically, certainly the three partners that we did deals with wanted to grab market share right away in a newly legal market. And, we're proud to say Caesars was the first we launched. They went to market a week, early before the others, and they came out of the gate after the first week and first month as #1 in market share, and they publicly attributed a lot of it to what we were able to do with them. But that was a lot about brand building, gaining initial customers. Now it's about, to your point, what are we doing with those customers right now to get them to bet more, and move up into becoming more VIP customers. So it's gonna evolve.
Yeah, it's the code that we're trying to crack, right? It's this newest challenge to be able to track and make sure that the rights that they paid for, which is the rights to intellectual property, to use the association with the team, the logo and all that stuff, actually make a difference in their ROI. Yeah. It's a scary place to be out there from the property side where you just, you can sell stuff to a lot of industries and they pay you and, they sell more beer, whatever. But this is we're really in this space now. We're being held accountable for results.
So that brings me perfectly onto my next question. We've got a few questions from the audience and we're running out of time, but because of that, I really want to ask you about kind of how you're engaging with responsible gaming? Because if you've got skin in the game, so to speak, and you're earning as your partners earn, then there's kind of, how are you working with responsible gaming? How are you ensuring integrity for your players, your staff, your organizations?
Yeah, I think we both work with the American Gaming Association and a fantastic organization. I know the NFL works with the NCPG as well. Just from an NFL perspective, it's been like, you can't even do an NCAA pool with $25 on the line. It's been something that's been drilled into players and coaches and staff members for a long time. The Have a Game Plan relationship that we have, hi Kate, with the AGA, it was just timely for us. Putting three deals together, creating 2 sports betting lounges, somebody could potentially look at it and say, like, really, you're going too far with this? So it's not just about like a responsibility kind of sticker on something. It's more about have fun, but set limits.
Yeah.
And try to send the right overall message.
I'm sure you've done similar things, Ron. Have you taken that into your media as well? Is that influence there too?
Good segue. We have. So I come from a family of degenerate gamblers, so this is like kind of near and dear to my heart, this topic. And we work with Kate, as well, which you and Sarah graciously introed us into that organization. But we look at it as being responsible, but also because we're a fully integrated multimedia organization with multiple ways we can distribute content. We've had fun with it too. And so on our TV networks, I talked about some of the original sports betting programming we're doing. I mean, we're creating interstitials, short form content in there. Again, all with the objective of making sure that those that are going to bet and certainly that we're influencing understand how to do it responsibly, are educated really well. But we're having an awful lot of fun with it. And we're doing it across kind of all of our integrated media opportunities. We're doing it in venue. We're doing it digitally. We're doing it on the TV networks. Our marketing teams actually, they've taken the template from Kate and the American Gaming Association, Have a Game Plan, and we're like kind of then taking our brands, whether it's Knicks, Rangers, and putting our little spin on it too. So, but most importantly, we know we have a responsibility here. So we'll continue to do this in new creative ways to make sure that the bettors are getting what they need here.
So we've got a couple of questions that kind of overlap, just talking about the kind of boundary between your organizations and the leagues, because obviously you have apps and services and the leagues do. Are you, how have you found that balance, and are the deals being done by your level and are they at the league level, and what's the restrictions?
Yeah, so I mean the leagues in American sports, it's much different than say global soccer, where they truly are global. They have no restrictions in terms of where they can market due to league rules. With us, it's different. And, most leagues have, for each team, a designated market territory. It's your town, your city, a little bit broader, that you can basically market your brands in any way you see fit, including your partners, your sponsors, your advertisers. Our leagues, specifically the NBA, who's been at the forefront, has over the last few years loosened those and digitally given us a lot more opportunity to go outside of our market area and outside of North America too. So we've been able to do a bit more there, but certainly when partners come into any of our sports and are doing team deals, if they don't realize right away, they understand that you're primarily buying the market that the team's in and that potential consumer base with some other value that you can bring. Both sides are doing deals. The leagues are doing deals where they're providing league media, controlled media, in those deals. The value we bring that the league can't is direct to consumer in front of fans at the games where they're most likely to want to bet. And so there's a balance, but it also is it's a good balance, I think.
Yeah, this is one category where I think people really can get the value from an NFL partnership if they do it the right way. The Caesars, Manning, JB Smoove thing is just, it's off the chain. And so they did a great job. They hosted the draft, in Las Vegas, right at the back door of the Forum. But everything that we do on a local level, like Ron said, dedicated to our DMA. So the league relationships really don't impact us. And many times we actually prefer to not work with a league partner because it allows us to kind of have a separate path and create a little bit of that kind of competitive balance naturally that we want to.
Yeah. There's quite a cheeky question here that you might not want to answer, but the question is, do you wish that teams could be sports books? Do you wish you were sports betting companies?
We looked at it. We evaluated it back, certainly well before New York State became legal. And you can look around. There are many teams and team owners that are involved in gambling in one way or another, across U.S. sports. So we certainly looked at it. I think what it came down to was we do certain things well. We know how to own, operate sports. We don't know how to run gaming or sports betting companies. And so while we did take a really close look at what it would take and what that could mean from an opportunity perspective, we tend to just say, what do we do really well? Try to do that really well. And when there's opportunity to do other things, bring in partners with expertise. So that's kind of where we netted out.
Yeah, if you go back and look at the press releases or the media coverage from 2017, you would have thought that we had started our own sports book. We put a little deal together with an iCasino and 888. We're fortunate to have the FanDuel Sportsbook right next door at the racetrack, so there's a working relationship there. I'd love to have a retail presence in New Jersey. It doesn't permit it currently. Some of our other teams in the league in Arizona and in DC and other places, Ohio now, are going to have the opportunity to do that. But like I said before, we're going to be. People think that the Fubo Sportsbook and the wins, they think that we're behind there counting the money and stuffing it into our pockets, anyways.
So we've run out of time, unfortunately, but I've got to ask, what's next? What's the future for you in sports betting or gambling in general? Maybe you can answer.
Oh yeah.
The industry stuff I think is what's interesting to me, and there are like 3 or 4 things. The New York downstate casino, next move with that, and if this time next year the 3 licenses are allocated, it's a difference maker because I think there's a domino effect. And again, I've talked a lot about New Jersey, but clearly there are Jets fans and they're part of our DMA, all around New York and Long Island and everything else. So the mobile part of it was huge. The physical retail part of it would be a game changer. The domino effect is that casino outside of Atlantic City in northern New Jersey becomes a reality, and those things would be a big kind of impact, I think, on the market. Industry-wise, if you saw what the athletes did in National Women's Soccer League, the NWSL, they had a collective bargaining agreement where the athletes have now secured the rights to their GPS data for when they're on the field. So if you watch any sport, they're talking about a player runs this fast, does all these things. The Women's Soccer League is the first one to give those rights to the players.
Wow.
So I don't know what that opens up. I don't know if it's a HIPAA thing or anything else, but it's their decision. And with in-play being so much based upon performance of athletes, it's a big thing. And so if you see other leagues start putting that responsibility or that ownership into the hands of athletes, they have to get paid. You really don't know. Anybody that's a Philadelphia 76ers fan here, sorry for you, but there's been some stories this week around Joel Embiid and his injury report and how that impacts the line, and the team may or may not have been forthcoming. So all these things now kind of play into it. Technology and innovation, Fubo we talked about, just look, if they can figure out this live syncing of sports with real-time action, it'll be something significant in our industry. And then this convergence of gaming and NFTs and Web 3.0, all that stuff with DraftKings and Autograph and Fanatics and basically every business in the world. I read about this company, Stakes, raising money to basically do social gaming where people are betting with NFTs instead of cash. That stuff's that's stuff that really gets you fired up.
I think Jeff said every buzzword there is. So Ron, is there?
I don't know if we could do anything with any of that stuff.
I don't even know what I could
saying,
add there. So no, it's great. I mean, I agree with everything. Web3 is going to be huge. How it impacts what we're doing in sports betting, who knows yet? But there's so much runway still left in sports betting. The only thing I hope all of us, learn from is, the U.S. is one of the last global markets to legalize this. There's a lot to learn from the rest of the world. And so I just hope, we do learn from history and don't make the same mistakes. And then you add in, Web3, metaverse, a lot of opportunities still left.
Brilliant.
Yeah, we're out of time, but the international marketing rights that we both control, that's another piece of this. We're going to the UK this year, and obviously the NBA and NHL have other things. So that's kind of the next horizon, I think, for us individually.
Good. I think we could talk for hours on this, but unfortunately we've run out of time. So
Mike's asleep. So
thank you to Ron and Jeff. Great panel.
Man.
Thank you very much.
Our next and final panel is going to be on esports, and I'm going to actually moderate that panel. So let's get our panelists up here because we're running late. Gentlemen. Moritz, good to see you.
Good to see you.
Just have a seat. You're Martin?
Hey.
Nice to meet you. Saf, good to see you again.
All right.
Let's see. All right. Well, esports is a very interesting extension of sports. Maybe it's the future of sports. We thought just to kick this off, one of our panelists, Grant Johnson, unfortunately came down with COVID. He's feeling fine, but couldn't get on a plane. So it's just going to be the three of us making up for it. We wanted to just lay a little groundwork because this is something that people know less about. So if we could just key up a couple of these slides here to provide some background on the space. If you look at the chart to the left, it gives you a sense of the size of the market, about 500 million people. And half of that is players. Half of that is the audience, people who are watching. Big distinction from regular sports because I'm sure there's quite a few more people who watch professional football than actually play. That's a different case in esports, so engagement is far more dramatic. On this chart, if you look at the pie chart to the right, you'll see that in the value chain of esports revenues, the largest is sponsorships. But betting is the next largest and almost as large and probably growing faster than anything else. The purple charts to the left came out of a presentation from Entain's investor presentation. And what they showed there was that they had just bought a company called Unicorn. And they found, pardon? Okay.
Thanking Entain for the slide.
Oh, okay. And well, tell me if we've got this right. But what they found is esports players tend to be dramatically higher than normal in terms of engagement in betting, and betting on that and also in iGaming. Last slide we wanted to show you here is if you look at the pie chart to the right, you see that in the global gaming or the global betting world, global GGR, esports is only about 1%. But while it's growing at 3 times the rate of sports betting, it's still just a tiny fraction of the market. And then the last point, we're going to talk about that right away, but the last slide over here, if you look at valuations of public companies in the space over the last year, the red line on the bottom are sports betting companies. The 2 lines above that are esports companies and esports betting companies. And you see that they are down almost as much as the sports betting market. And the charts to the right are really just the tech and NASDAQ, the upper ones, which are about flat for the year. So going into this, suffering along with the esports section is suffering along with the sports business, and we've got some great panelists here. Seth Shore has been involved in the space as an operator, I guess. He's in the gaming business. He's been operating for many, many years. And Moritz and Martin are both represents data companies, so the picks and shovels, if you will, of the business. But as we know from the sports betting world, those are the only businesses that actually make money, or so far only are the ones that make money. So let's just start with that prior comment about it being 1% of the market. 1% is minuscule. Size matters. Why should the investment community care? Moritz, I think you just raised, or is it Martin, you just raised some money?
Yeah.
So let's talk about what your investors were thinking about in this size issue.
Yeah, they invest in the future. And maybe first a word to the 1%. It's maybe a bit misleading. There are still a lot of countries where betting on esports is forbidden. There are still a lot of operators which do not offer it. So if you look at the operators who offer it and invested in several years into the topic, esports, if you consider esports as one sport, it's at a position 4, for some big bookmakers, even position 3 among all sports. Mm-hmm. And that shows that it already has a big impact on their revenue line. But if you showed all the graphs, esports has a very young community, yeah, and it's the largest community. No other sports has this big audience. And we now see they grow older, they get money, they get a family, and basically have more money to spend. And as we know, they spend it, yeah, on their favorite team, bet a bit on that as entertainment, yeah. So for sure, esports has a high potential. And if you look at the last year in esports betting, we see a sustained growth of 50 to 100% year over year for our customers. And yeah, in which other sport you see this growth rate? And this will even accelerate because, as I said, the audience will grow older and has more money to spend.
So it's the dramatic growth and the demographic that attracts the investors. Moritz, how about you? You're in the same in many of the same businesses as Martin. Maybe you can contrast a little bit about what the data side of the business is about, maybe how it contrasts, and also how your investors are looking at this.
Sure. A theme Martin has introduced, I can subscribe to, which is offering esports. I don't know the data behind the graph you showed of the 1%, but if I would limit the sample size to the books that actually offer it and endorse it to a minimal extent, we'd probably see a way higher percentage. So that's the sentiment across all of our partners. And what's also important to take into consideration here is you're speaking to an audience that is younger, that is basically within the games introduced to the best and most functional interfaces. So within the game, so they generally have a higher demand for the user experience and the functionality of a site in general. So in my career, I've seen in the past, and this was when I was working for Genius Sports, still very much in the supplier seat, simply adding esports to the site is not doing the trick alone. If it's one in a long table of sports that are offered, that doesn't naturally attract users, and all the action you're going to see is going to be a fraction of your existing wager volume that cross-pollinates to something new that might just be live, that someone stumbles upon. tapping into esports for many here in the room, and especially looking at the US, is about access to a demographic that is eluding them in any other way. So you can invest into esports and be very successful in your investment if the investment is aligned with bringing in customers or cross-selling users to other established products. If the wager volume on your esports offering in isolation isn't super satisfying, you can still, as an operator of many different product components, succeed in your strategy. And the largest one and the ones that succeed in diving into this demographic, they employ such a strategy. And then there's a few, you mentioned Entain, like there's Unicorn, there's other operators who are really dedicated to the space. They are at the forefront of securing this new customer.
Yes, Cambi bought Abios, right?
Yeah, but they're supplier too. Generally, yeah, it's another testament to them believing, I think, in the space. I've spoken for a while now on your answer, but I'll just cap it off with like a distinction of what Grid is doing in the data space. I think about gaming as a wagering activity, not just the esports segment. And this expands to player versus peer-to-peer, player versus house, 24/7 games of virtual esports next to esports betting. So ultimately, games as a source of content for wagering is the big play. Esports spectators betting, which you captured on your graph, is just one fraction of that. And we are quite dedicated in our relationships with our rights holders, especially game developers, where we're deeply integrated. Grid is the infrastructure layer. And what we do on the data distribution side, the picks and shovels piece, is there's a lot of different picks in our portfolio at this point. It's a lot more about bringing people into the market. And that is a strategic consultancy piece in combination with the official data asset at the core of everything, and then a multifaceted portfolio of products. We have many years of betting expertise under our hood and great technology to facilitate this. So thinking about the US, since we're in New York, the market entry solution piece is really what it's about, to align a strategy for esports with the core objective of a bookmaker, expanding into this post-PASPA world.
So I'm focusing here on this. When I talk to institutional investors about the space, they're often, there's just not enough action that they can see, and there's not enough disclosure of these volumes. So the 1% that we see is very different from probably the reality of it. Seth, you are a casino operator, and you're a pioneer and a visionary. You're doing now a Latino-based casino experience that you're pursuing, and you're the first one I know that was way ahead of the game on bringing esports competitions into a casino environment. So tell us a little bit about what you found when you did that, and where it's going from there.
Clearly, I like really large niche audiences that no one else seems to care about. Whether that's the 64 million Americans that identify as Hispanic that no one seems to care about, or the hundreds of millions of gamers worldwide. That's the consistent theme. First of all, the 1%, the numbers today don't matter. They don't matter. I don't think they're relevant. I don't think they matter at all. I think it's focusing on those numbers that continues to impede people just going all in. And it's a self-fulfilling prophecy if we keep talking about this opportunity. It's a small one. It will continue to be. I can only speak somewhat intelligently about the North American market. So please, anybody who, anything I'm about to say has nothing to do with the European market. I think it's incredibly clear why esports handle isn't larger. I think here in the United States, it's ultimately going to come down to the sportsbook operators that are going to market and create the market and allow their potential punters to know that these betting opportunities exist. We're nowhere close to that. I mean, sports betting has only been outside of Nevada for 4 years next month. Every single sportsbook operator that represented here today have been solely focused on getting into new jurisdictions, customer acquisition, doing deals with Jeff Fernandez, who was on the stage here, sure things like the Jets. I mean, why wouldn't you? That's what I would do. You focus on on the immediate. And I think, esports has suffered because it's not been a priority. And it's going to take an operator who is willing to really create a holistic strategy. Not one of them have. As far as I know, everybody's dipped their toe in the water. And a lot of things have had to happen up until this point. So yeah, I've been involved with esports for 7 years. 7 years ago, we had no idea what the regulatory framework was in Nevada, let alone, we didn't even think there would be sports betting in 2018 when betting took place in New Jersey. And who knew what the legislators would allow, the regulators. The good news is we've overcome that for the most part. There are enough states, Colorado, Michigan, New Jersey, Nevada, a few others that allow it. So I don't think that's the deterrent. The second big elephant in the room were the publishers. What would the IP holders do? Would they be okay with it? It gets really complicated if the IP holders, if the game publishers aren't, somewhat involved, whether it's through a deal with these guys or in some other fashion. I can tell you all the big ones, if they're not all in at this point, they're darn close, like real close. You will all know they're real close, at least the ones that matter. The technology, that's not an issue, right? That's never been an issue, and technology, that can always be overcome. So the last piece is the one that no one's talking about, and that's marketing and talking to the audience. That's doing the deals with Twitch, Justin's former employer. I just watched the Kentucky Derby. Okay, I'm pretty sure I'm going to make a statement. Someone should fact check me. Probably the event in the U.S. that's been bet on the longest, I think, maybe. I couldn't watch 5 minutes without a TwinSpires ad, right? So Twins bet here, but it's advertised on this tentpole event. That sort of, advertising, media and esports, I think is going to be the important factor in creating a large market.
It's very astute. Let me take one step back into what you said, because you started to talk about the regulators. You say it's legal in 8 or 9 markets now, but it's not happening. And it's not happening, I think, because the regulations haven't been written. I know New Jersey is right now appears to be the most forward on the regulations. Grant Johnson, who was supposed to speak about this tonight, spent millions of dollars getting certain things through the New Jersey regulators. They got his website approved. He got 35 games pre-approved so you didn't have to go and do it by appointment, so to speak, and a new P2P betting platform, which isn't quite gambling, but it's kind of the beginnings part of it, approved. Now, you're very much, you're on the New Jersey advisory board, right, for esports?
Nevada.
No, I'm sorry, Nevada advisory board for esports. So what do you make of the New Jersey developments? Are they really significant? Are you guys going to be doing the same thing? You're going to be jumping ahead of them? What's the story there? Because the rest of the country follows New Jersey and Nevada.
Yeah, I'd like to think Nevada's still the gold standard. Yes. There is a path to betting on esports. It's a clunky one. So the Esports Technical Advisory Committee, which was passed by state legislation last year, we've only had our first meeting. It was put together to put rules and regulations around esports betting. Should we use official data? I think we should. What other things are required? Should certain tournament operators be whitelisted, so on and so forth. And that'll be done. It'll be done this year. And yes, I do think other states will follow. But I'm close enough to most of the major regulators, and they more or less say the same thing. It's got to be a priority for the sportsbook operator for this to be something we're even going to explore. And, it hasn't been. So I think, once again, it goes back to the operator. I think every one of them knows this is important. They know that esports as a sport is growing. I'm pretty sure everyone's accepted that, right? Anyone still questioning whether esports is a thing? 7 years ago, we still had to have that conversation. I think we're past that. So the operators know it's important. They know it's important for the future, but they got bigger things to deal with today.
Well, this is a very important observation. So what you're saying is it's not about the regulators enabling it. It's about the commercial interests actually taking an interest in it and driving it for it to for the regulators to pay attention.
Which is what a good private-public partnership should be like. Regulators are not the cops, right? They're there to work with commercial industry to create regulations that provide a safe environment for both the operators and the players, right? So regulators are good guys. They're definitely not the problem.
So let's shift back over to Europe then, because you guys in Europe, you don't necessarily, it's not a better regular, but you have ESIC, which was the starting point of setting rules to make it regulatable, if you will. So maybe you can comment a little on that, and we'll go in this direction.
I can, for sure. Maybe on the US point and the New Jersey model, I think it's a great blueprint, actually. What Nevada was a starting point, but the New Jersey framework offers a clearer pathway to getting events approved. And I'm completely with Seth here. The regulators are important because they also give faith to the game publishers, the ultimate rights holder, literal IP owners of the sport we're speaking about here, to be comfortable with seeing their IP used or exploited for wagering purposes. They all understand it's an engagement driver, but when esports betting started out, it was completely Wild West, and it still is for a large part. But there are now models that have integrity, and that means betting integrity, but also means like integrity in the structure that is there, in the games, and that gives them confidence that esports can exist as something that drives engagement, that deepens the relationships of fans and players, and that's what was missing. So what we see there as a starting point, these are really big moves, and I think they will inform the other states in what decisions they make when it comes to looking at esports. And the publishers are now quite engaged. As Seth indicated, we see this from our relationships with Fright Games or PUBG or others. There's a clear way to the market now, and they have confidence that a model that introduces official data as mandatory, ideally, is something that can serve as a foundation. Because they understand, and this is very much like the Big Five pre-PASPA repeal, that there's third parties making billions with their IP, and they would like to be cut in, they would like to have control and visibility over the use of their IP and data assets, and they want to be cut in. And that's at the center of what we're doing, and our conversations with regulators also always lead into a model that accounts for that.
How is it in Europe, Martin, with respect to the regulators? Do they have the same kind of rules that they've already set for esports and allow it?
It's very fragmented still. You know, in Germany there was the new Glücksspiel-Richtlinie, which was coming in, also was active from mid of last year, and there esports is not a sport. So at the moment, if you want to apply for a license, you do not know what will be the outcome. Yeah, there are discussions around, will esports be a sport or will they treat it like a sport, and you can offer it officially. Yeah, so in other countries it's not a problem. Yeah, in other countries it's forbidden. If you look a bit beyond Europe and out to Australia, can only offer pre-match, for example, which for esports, also which cuts a lot of the interesting wagers, and so it's a very fragmented situation. But still, even besides the this fragmentation, it's very successful and it's growing with a sustained rate.
Yeah, most of the European bookmakers make book on esports, maybe not really well, but they do it, right?
They are working on this for sure. Like at the start of my career, I ran a B2C a book, and I got the first UK Gambling Commission license. So this was a very long license application because it was one for a sport that they have never encountered before. So you can imagine the education it took to get an old school governing body comfortable with Counter-Strike and League of Legends at the time. But ultimately they did, and we operated, and that's the UK and Sweden and in Malta under the framework esports is considered. So there are ways that certainly work as a good template, I think.
And it's you know, if you look at affinity to betting or sports betting, it's very different. If you look at UK, it's a big sports betting country, and it's allowed, so there's a lot of revenue generated. In Europe, in Germany, it was in this gray area with a European license, which is changing now. But Germany is not the not the biggest sports betting market. And then you have Spain, for example, which is very big in esports. Yeah, even some of the second-tier leagues for League of Legends have a higher turnover than some other top League of Legends league, yeah, because it's a big thing there. But I want to come back maybe to one other aspect why bookmakers need to offer it. even if you do not make a huge turnover, but you have existing customers, and customer acquisition cost in UK is $700 US dollar per customer. And if you have a VIP or a very expensive acquired customer who want to one-time bet on esports and you cannot offer it, you will go to another bookmaker, yeah? Right. And you lose this investment. And I think everybody knows how long it takes to recoup that money, yeah? So I think in very short time, everybody will offer it. Even if they are maybe specialized in horse racing, they will add this to their portfolio.
Right, right. Well, actually, that brings us to a good point, because we're talking about profitability now. Yeah. Throughout the conference today, the idea of lack of profitability because of the high acquisition costs in sports betting was very prominent in the discussions, and how that was going to be resolved and methodologies for that. I put up a slide before that showed the esports stocks doing almost as badly as the sports betting stocks, but they didn't start with as high a number. So these companies, these public companies, and there's about a dozen of them, are trading at a fraction of where they had traded before. In part, it's because of the lack of profitability, lack of belief in the business. What are your thoughts on profitability in the space, in the B2C space as well as the B2B space?
Yeah. If you look, there was exaggerations in this direction, yeah, and I think there was some very big companies which was trading with 100 times the annual revenue, with as multiple, and of course that's not healthy, yeah. And now maybe there's an exaggeration in the other direction. I think it's a small bump because the fundamentals are growing. Yeah, we see this each month. We see each month a growth in the turnover. Yeah, and that
but turnover doesn't pay the bills, right? Because turnover is just revenues. Yeah, if you're losing money every day.
Yeah. On the others, and that's an important point. Esports is different from traditional sports and more challenging because it has higher swing potential, for example. Yeah, if you're in soccer 3-0 ahead, yeah, even if you still win, it's 3-1, 3-2, 3-3, 3-4. Yeah, so it takes time, so you can adapt the odds. In League of Legends, if you are 20 minutes in the game, 10K gold ahead, so it looks like a sure win. You make one mistake in a team fight, you lose within 1 minute the whole match. Yeah, so. Of course, that's challenging. That's for odds makers challenging. That's for us challenging. We need to provide the right tools, risk management tools, that you have a sustained margin. And if turnover is growing and the margin is stable, you should at some point reach profitability.
I would disagree that the swing potential or the potential for upsets is a reason why it's unprofitable. If you know how to price it, it's actually a great opportunity, and it makes for a line that is moving a lot. And a line that's moving a lot isn't a bad thing or doesn't correlate with bad results generally. Yeah. And I also would disagree on the Germany had a huge betting potential, actually. I don't know, we must have exposure to different liquidity pools, but I can tell you that there was a big potential. What was limited, the only change that actually happened, and what you referred to, limited the ability to market esports. And that is going back to Seth's point, because that is something you can then see in the wager volumes. The brands not having the ability anymore in German media to advertise is a huge change, because it informs the strategy of the big operators in Europe. Where will they allocate their budgets? Mm-hmm. So these legislative changes is one thing being allowed to operate, it's one thing being able to advertise. And if these two are not aligned, then it's always trickier to navigate this.
Yeah, but I do not question that Germany has a huge potential, but the time was much smaller. Look, before the unification, yeah, in West Germany it was forbidden, yeah, and there was only this official Toto from the national lotteries, and then it opened up, and there was this strange things with East Germany licenses was then you could use them for whole Germany, and some made use of that, and then the sports betting industry developed, but this was from 1990s, yeah. So if you compare this to UK, where it's very common, and you had a lot of stores, yeah. Of course, they had a longer time to develop that and make use of that potential.
Seth, can you comment on the profitability issue? Because that's one of the challenges of this business as we observe it, that none of the companies in the space are really making. They're all pivoting more to the B2C side than the B2B side. And not all of them are betting companies, but they all seem to have the same challenges. What are your thoughts on that? Because you're talking to investors all the time, so I would imagine they chat with you about this space, even if you're not raising money for esports.
Sure. So the profitability of esport books specific.
Or anything in the space, anything, because this is, esports books is just one piece of it, but the esports space in general, and if you look at these 12 companies that we track on our website that were in that chart, I mean, not all of them are books, but they all seem to have the same kind of issues.
Are sports books profitable these days?
No, but we know that they will be profitable from the iGaming, right? But
I mean, I know, I say that, obviously in jest. I mean, look, as a land-based casino operator, 5 years ago, we didn't really focus on profitability in sports books, right? They were a very low margin, driver of traffic. It was an amenity, and we were wrong, right? We looked at it wrong in Nevada, and all of a sudden, companies out of Boston and other places are creating amazing gambling brands around an unprofitable segment of the gambling business. So we were wrong. But I think every other panel I've been in today that's focused on iGaming, they're talking about companies that aren't profitable today. They're talking about innovative startups that are creating value for the future. So I think it's unfair to start to look at profitability when it comes to esport, which is even more nascent than anything else we're discussing.
So it really shouldn't be in the public markets then?
And I don't want to. I don't want to speak to anything specifically, but yeah, maybe there was another panel that talked about companies going public too early, right? I mean, in general.
I mean, you are still investing. We are investing, Crit is investing, the bookmakers are investing to find out what we need. And this, esports is different. For example, one big different point is it has patches, and very often, unfortunately. In soccer, one was the last rule change, 20 years before. In League of Legends, you have 2-3 patches per year, which might change the whole dynamics. And you do not even have then matches you can train your models from. You need to wait until certain matches are played. Yeah, you can try to make your model a bit robust to some changes. But we saw there, especially for side markets like who takes first Baron, we saw there was a patch which was not causing changes to the Baron, but it caused change to other objectives, and this led that the Baron objective was not so interesting anymore, so it was not correlated to the match winner, or not so strong correlated anymore. So there are a lot of things which can change, and then it might be that you lose 1 month of revenue where your margin goes down maybe from 7-8%.
So you need to be, the bottom line is you need to be patient.
Yeah.
But let me ask you, there was big news in the space. And I just want to get your reaction because we are out of time, as we can see. The big, huge news in the space is that the Saudi sovereign fund spent $1.5 billion to buy ESL and Face It, and they've got a plan to roll out esports competition centers throughout Saudi Arabia and the Middle East. To me, this is big because it's a huge amount of money with a very long patient money and the long vision. How do you feel about that?
$1.5 billion is what you spend on a team in most leagues. I mean, they bought a league. They're creating.
No, they bought an independent competition organization.
But they can create a league around that. But my point is, I think it's a good investment. I think they can create something very valuable with that asset.
But do you guys think it's going to accelerate the business?
Yeah, it's a good milestone for the industry to have an exit story visible and at this level. Because you mentioned earlier the dwindling stocks that you pointed at and linking them to the wagering activity. If you look at the revenues, like, I don't know, Luckbox numbers that like a 5-figure revenue volume or wager volume, and then you had, Grant isn't here, unfortunately, comment on his stock.
Right.
But you have like Rivalry is a business that is doing well on the side, and where the revenues that they report for the listed entity are actually coming from the sports book. And many of the stocks that you have that would fall under your esports betting stock, predominant shares coming from completely different sources. So I don't think they're very indicative of the growth tied to the main wagering activity.
Maybe what is important, there's a feedback cycle. Yeah, the more is invested in the events, so great broadcasts, great casters, great teams. Yeah, great advertising, professionalization. There's still a lot to do. Yeah, not shifting the date, the time of matches on short term. So this money helps to professionalize that. Yes. Professionalization means more audience. More audience means more people who bet. Finally.
That's right.
Yeah, more people who bet means more money funding back, and so this whole circle is spinning up.
So I guess the bottom line of all of this is don't pay attention to the stock market, especially for really nascent companies like this. There's so much happening in this space, and maybe the big money and the smart money is on a huge future for esports.
Indeed.
Thank you very much for joining us.
Thank you.
Great
Thanks.
panel. Moritz? I think very nice.
Picture of all those?
Yes, yes. I think he's doing that over there. A real professional. Thank you again.
That's fine.
Very good. We have some closing comments here. Rather than doing any kind of a wrap, considering it's too late, I think we'll go right into when do we start drinking?
Yes, before we all head to the bar, we've got a few quick reminders for you all. We've got a full day of programming for you all tomorrow. Registration opens at 9. I believe sessions kick off at 10. We'll also have an entire track tomorrow that's devoted to the metaverse and Web3, so we can learn a little bit more about that vision of the oasis that was alluded to in the Ready Player One clip earlier today. And then if you're enjoying this conference, which hopefully you've gotten a lot out of today's session, please mark your calendars for the next iGaming Next event, which will be in Malta in September 27th through the 29th. So please be sure to check that out. And of course, today is not over. We will be heading to Elsie's rooftop from 6 to 9 p.m. for networking drinks. So
Fabulous
we hope
venue.
to see you all there.
Bye-bye.